Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no. Just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Wednesday to you both.
Hello.
Hola, how are you?
Good, how are you?
Good. No complaints. Well, I could complain a lot. I got one son, not this one, but I have one son with flu A.
Okay.
Is that like a worse one?
I think A is worse than B, but it's the flu.
Okay.
It sucks, you know what I mean? But he's a couple of days into it, so but he's got finals today.
Did you get a flu vaccine?
I did get a flu vaccine.
Okay, good, because you're over 65, so you should.
I am not over 65.
You should get a flu vaccine.
You arse.
You should get a flu because you're over 65.
I am not over 65, you arse. But whatever.
Soon.
Baby Sloan came home last night, which is
Yay!
a big news. Yeah.
And then Tristan ran away.
So Tristan is my 2-year-old grandson. This is his new baby.
Little baby sister.
Sister of my granddaughter. He wanted to feed the baby, so you're acclimating them to the baby, all this other stuff. So he's feeding the baby, and the baby's drinking her bottle real good. Then all of a sudden she made like a face, and then she, farted on him.
Yeah.
And he started busting out laughing. That was the highlight of the night. After that, he wanted nothing to do with the baby. Every time the mom had the baby, he wanted to be picked up by mom. Every time dad had the baby, he wanted to be picked up. I haven't heard from them how the night went, but she was sleeping all day long, so I'm sure the night she was up doing all her tricks. But we'll see how it goes.
Yeah.
Very happy. Everybody's happy. So
I'm good. I'm glad everyone's home and healthy.
Yeah.
That's good.
Yeah. So it was a busy, fun night kind of thing with the baby coming home. So it was good.
Aww.
Yeah. Beautiful pictures of her and stuff. So
I know. I want to see pictures later.
I will.
You have to ask for permission before you do that.
Oh.
No, not you don't have to put them on the air. No, I just.
Oh, no. I mean, just in general.
Oh.
Like the newborn baby picture.
I told you.
Reveal. You cannot even.
No, it's different now. They put them in baskets and with
No, I know,
blankets
but you can't post.
I know, I can't. No, I'll post
They
it.
have to post the picture.
Yes, first, and then you can steal it from their feed, and then you can post it. Oh,
You can repost.
If you drop the picture, a fresh picture before they post it.
Are you crazy? You crazy? I know better than that. I've been around a long time.
Yeah.
I ain't gonna make that mistake again.
Yeah.
Not like I did with Tracy when I said, "Isn't Tracy pregnant?"
Oh, you've spoiled a lot of pregnancies. When Michelle, way back in the day, you ruined Michelle's pregnancy. Yeah. Like her family didn't even know. And then they were like calling in and they were like, I'm sorry, what? Tell Tony, tell the world.
Yeah, I've made those mistakes once or twice. I've made those mistakes. Not anymore, though. I promise. Scout's honor.
Learned your lesson.
I won't do it. Yep. So that was my night. No.
How is your wife doing? She's okay?
She's good. Well, 2 nights, 48 hours ago, she was basically having the same pregnancy pains that her daughter was having.
Sure.
She was living vicariously through that, which meant I had to be up all night too, living that. But she's better now. She's better.
Oh,
but she's been on. I got to be honest. 15. I think she was with the baby 15 hours for the last 2 days. Each day filling in for mom a little bit. It's a lot of work.
Yes.
Yeah.
And what did you contribute?
Right. I watched from afar. I went over there too, and then I said, "Don't we need lunch? I'll go get lunch. Doesn't one of the cars need gas? I'll go get gas in the car." I mean, I was finding things to do.
That's good. At least you were finding things to do. You didn't just sit down and you weren't like, bring me food.
I didn't just sit down and say, "Aren't you making lunch?"
Yeah.
I didn't do that.
See, that's called growth. I love that for you.
Thank you. I am maturing and growing in a good way. Thank you for that. I appreciate you for pointing that out and giving me the accolades.
Because you're 65.
I'm not 65 yet.
This is fun for me.
That struck a nerve.
No, I mean, I'm okay with, but I'm not. I'm 63. I just turned 63. I mean,
Same difference.
Yeah.
65, 67.
You're still gonna get the senior coffee. 6'7". You're still gonna get the senior coffee no matter where you go.
I do.
Although someone I will point out, your video that I posted on social about like, hey, I've been a trader for 40 years.
Yeah.
This is my favorite options trading strategy. Someone in the comments did say, hey, you look good for someone who's been trading for 40 years.
See that? Yeah. If you trade small and trade often, don't step outside the zone too much. You don't get too many gray hairs and wrinkles. You just get a couple of dings. Believe me, when I wake up or when I walk, I feel them. But you can't see them right now. But they're there. Thank you, though. Appreciate you saying that.
How about you, Nikki? Was it league night last night?
It was.
And so you're back because last week was like a weird bye week sort of
Yeah, but
kind of.
we got together and played.
Yeah.
But
How'd you do?
it was not my best night.
Not dialed in?
No, I wasn't dialed in. But we did okay. We'll see. It was a team 2-man scramble. So our team of 4 split up into 2s and played against another team's twosome.
Okay.
Virtually. So you didn't actually play against them in the same bay, but you'll get scored randomly against another team. So we've yet to know.
Are they all in Illinois,
or
or is it like worldwide, that you're playing against these people?
Well, we are in second place worldwide.
Wow.
Just to put that out there.
Wow.
And you still had to come to work today?
Amazing, right?
The winning team gets a trip to the Dominican Republic.
Wow.
Very randomly.
Wow.
That's a weird
So they
spot
can
to go.
traffic you? Like what?
Maybe. But it's a golf trip of sorts. So.
That's nice. Do you get to bring a +1?
You get to bring a father?
Ooh. This is a golf trip. This is the boys. But that's a stretch.
That's nice though.
It would be amazing, but
What course did you play virtually?
oh god, I forget.
Because I know it was Oakmont last week.
Yeah, we played another one. It was a ocean course.
Ooh.
I think it was one of the Hawaiian courses. I don't know.
Oh, okay.
Or
Excuse me.
something, Yeah.
Oh, that's nice.
Yeah. So, but it wasn't my best showing. My buddy Al, my partner, not his best showing. Was it's tough. It's tough. We were even par, which is not on a scramble. You can't do that.
How'd the other 2-man team do?
We don't know. We'll find out today.
No, your other 2, because there's.
Oh, they were good. They were like the 3 under
Oh, okay.
scramble, which is good. So
Okay.
they'll probably hopefully win theirs, but
So you all the weakest link?
certainly. We did not perform. It was not our best showing. But
That's
it's
okay.
All right.
How much is left of the season?
I think it goes 8 weeks total, and we've done 4.
Okay.
There's 4 more weeks. But they have like a bunch of other. They'll start doing they have like par 3 contests, like close to the pin, and your team gets like a certain amount of points for how close you get to the pin. So after you play your 9 holes, you start doing these like little
Gimmicky challenges
that give you like points and
like
stuff.
Angry Birds at
Basically,
at what's that golf place? The golf simulator.
Oh, Topgolf.
Topgolf.
Yeah.
Topgolf, yeah.
Yeah. So
Good.
should be interesting.
Does
Gives you
the-
something to do. and
Yeah, in the winter,
exercise,
get out and socialize.
club.
Like, it's
Yeah.
good.
Yeah.
Does this make you want to join, like, a real
Country
league
club?
in the spring?
I would love to. I'm just, I'm not there yet. I'm
Yeah.
still in the mid-level. I'm still in the it's okay to play with me.
Are we gonna
I'm
tell him he's
enough.
never gonna get there?
No one is
gonna
good
break
at golf.
his hopes?
Spoiler
No,
alert,
I'm getting
no one
there.
is
I'm
good
gonna
at
get
golf.
there. I'm gonna get there. I'm gonna get there. I've made great strides. We're gonna get there, but I'm still
That's
in.
how it goes. You
I'm
go
in
like
the
this when you
mid-range.
first start playing golf, and then you just
Yeah,
crash and burn.
Yeah.
I don't want to ruin your hopes and dreams. You'll make it. There'll be no doubt about
I'm
it.
gonna make it.
Yeah.
Yeah. In 30 years, I'll be on the senior tour, coming with him.
Trying to shoot your age or something like that.
Yes.
yes. For the front 9, that's what I try to do.
There you go. It's just frustrating, but it's good
It's
to.
a frustrating game. It's a fun game though. If it's nice, if the weather's nice, you with a good group of people. It's a lot of fun. But it just so darn long.
I know.
I mean, it should be like 12 holes or something like that. It really should be. It's just so darn long. It just takes the whole day.
Nah,
What about you? You're another pretty package this morning. You got your Christmas.
I know. Can I tell
gear
you,
on?
first of all, shout out to whoever it was in production that was actually playing Christmas music this morning, Mr. Donnie Hathaway, this Christmas, because I could hear it when I went into the kitchen to fill up my
John
mug.
and the crew in there.
I know, but I was like, so Our office is not decorated for Christmas at all. My desk is decorated. It's Pinkmas. It's great. Go see it. But our office is not decorated at all, and it's just so dystopian and sad. And Tracy, who works here, my office bestie, she said she was on the elevator. She was going home, and Dyson, they're on the floor below us. And so she was leaving to go home, and a bunch of Dyson people came in, and the doors open, and their lobby is like all decorated, and they all came in, and they'd been given all of these Dyson products by the company. So they had like air wraps and air purifiers, and they're all in the elevator, and they're all smiling. And she was just standing there in the corner because we're like, you want some lukewarm hummus? Like, that's what we get. Like,
you know,
it doesn't feel Christmassy.
Pretty good.
It doesn't feel Christmassy here in the office, and it makes me sad. So I try to dress up every day.
Christmas is over. There is no more Christmas. Okay?
I want to work at Dyson. I want to air
James
wrap.
wants to thank you for the shout out.
Yeah, I knew it was James. I know it was
Christmas,
James.
playlist.
Yes.
Yeah. It's a good out.
I love it. When do you start listening to Christmas music?
Hopefully never.
Yeah, never.
Never.
I try not to.
Right. I mean, like maybe the when I'm waiting for Santa the night before Christmas, maybe you'll put on a little Mariah Carey or something like that.
Oh, wow.
Yeah.
I thought you were going to say like Michael Bublé, but no, you just went to Yes, Queen Slay, Mariah.
Yeah. And that's about it for about a half an hour, 45 minutes. That's all I could take.
That's it?
Enough joy in life, yeah.
Wow.
About 45 minutes, that's it.
How about
Why, you playing them now?
Yeah.
You listen to Christmas music in your car? No way.
On the drive here, I don't have my phone on me, but it literally was.
No way. Sold.
I
mean, I believe you, but I don't want to believe you, is where I am going with this.
No, I have a Christmas list that I made on Spotify. It's got like 15 hours of Christmas music on it.
Yeah, nah. I mean, aren't the stores in a different holiday already? Isn't Christmas over in the stores? Are they?
It's Valentine's Day.
Something like that.
No, it's still Christmas in the stores.
Still Christmas.
All right. Well, even if you're going to be a Grinch about it, we have a great show for you today.
Oh,
the little Grinch.
The Grinch movie. When do you think the Grinch movie came out? The one with Jim Carrey. How many years ago?
25. 2000.
2010, maybe? I don't know.
I kind of forget, but I think you're right. I think it was 24 years ago. We were just watching it last night.
It's really good.
2000, yeah.
Yeah, 2000, yeah.
Boom.
Wow.
Good job. I could not believe that movie was 25 years old.
Yeah, Elf is old, too.
Yeah, all those movies are
25 years. I mean, where does the time go? You
ago.
best prepare out there, ladies and gentlemen. Prepare and financially prepare. 25 years goes quick.
That's bonkers.
Mm-hmm.
It's older than some of our coworkers now.
Yeah.
Yes.
Cool, cool. I love it here.
Q, who comes in here, was one after the Grinch movie.
Yeah.
We've got
probably Gus and E,
Money,
too.
I think, is G.
Yeah.
Yeah, Gus and E.
Yeah.
They're all...
Wow. That's bad news.
Thanks. Thanks for bringing that up.
Thanks.
Are you boomers done?
Yes. We got a great show for you today. At the top of the 8 o'clock hour, we have an options jive. The longs and short of it. Nikki, what's that going to be about?
Oh, the longs and shorts of it. It's gonna be a wild one.
Sounds like
it. So we're just talking about like what long and short really means, and we're going to talk about it in the context of options. So like being short a put is actually long delta, and we're going to talk about why that is and what the Greeks really are telling you.
Okay.
Don't worry, we're just doing the option jive so we can get to what's your assumption.
Yes.
Yes, it is Assume the Position Wednesday. So we have What's Your Assumption at 8:40. The bats are going to do viewer-submitted trades. Viewers write in with an underlying and a directional bias. And, we're going to see if we can put on some trades. And then special guests today. The schedule's been updated a couple times, but roughly between the hours of 9 and 10, TP will be here.
Yes, the Grinch himself.
Yes, live from Austin, Texas, TP in the house with some strategies for your IRA. So part of our 12 days of trading series. We are pleased to have Mr. Thomas Preston come in the house. And then, of course, we got live from the trade desk, Quentin and Ryan in the house. Quentin counting down all the top trending tickers over at tastytrade. And Ryan giving us some insights on the crypto side of things. And then at 10 a.m., Liz and Jenny are going to be live from the floor of the SIBO. It's always electric when the ladies are live. And it says here, plus special guest. Ooh. I hope it's Mariah Carey. Do you know who the special guest is with the ladies?
It wouldn't be special if we told you the special guest.
Okay,
Sure.
well.
Can't ruin the surprise.
You can't ruin it. So you will have to tune in at 10 a.m. For Liz and Jenny. But that is our run of show for today. A lot of really good content headed your way. You want your daily dose?
Sure.
Hit me with my theme music. Let's go.
Our leading story. Breaking news.
Across
the wire. Leading story. Top story. Just in.
Today's headlines.
This just in.
Breaking news.
All right, everybody. Today is a wonderful Wednesday. It is December the 17th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Earnings, Mr. Bat.
MU is probably one of the last ones coming in there. Yeah,
Yes.
Lennar had earnings.
Yeah,
last
Micron.
night.
What's that?
Lennar. had
Lennar, I
earnings
think.
last night is not one that we would trade. But
No, it's maybe JBL or something. But
I
they're
think you
all.
got Nike and Micron.
Nike's the last of the last, but yes.
Yeah.
Yeah.
No more earnings.
Yay.
No more earnings.
Yep.
Yay.
Until the following month when
Yeah.
they all come.
Yes.
In January.
Yes.
Right.
Nike, I
nice.
guess FedEx is in there too, Thursday after the close. So gotta come.
Fed's Bostic expects no rate cuts in 2026. He's like, y'all acted so terribly in 2025. No rate cuts, and I'm turning this car around. No, due to worries about the GOP tax bill might actually fuel inflation. The president of the Atlanta Fed Reserve Bank warns not to be too hasty to call the inflation beast slain. We got some interesting insights into the jobs market yesterday with that data. What are treasuries doing this morning as we
Down about 9 ticks, 115.03. They traded under 115 again to 114 and change. They've really been sideways for the last week or so. Throw out the high, throw out the low. You're right here at like 115, 115.05, then 115.03. Haven't really moved.
Hard trade.
Hard trade.
You're not
Ivy
getting
rank
any-
was negative yesterday.
Yeah.
Today it's 1, so it's just about as low as it's been. You really have to be directional. They're not moving that much. I mean, last night they had a 17 tick range, pretty much 17 to 18 tick.
I think we are getting some more economic data coming out tomorrow.
We are like jobless claims or something like
Yeah, no, I think maybe
CPI.
I don't want to misspeak, but someone will correct me. But no,
CPI.
CPI, that's the big
And you have a
one.
jobless claim.
Yes.
Nothing really today.
Today you got like some Fed speakers.
Yeah,
Yeah.
they got to supplement their income.
Yeah.
So they're gonna talk. But, yes.
Hey, the dollar nears a 2.5-month low as labor data leaves rate path uncertain. The dollar was a little bit steady now this morning, but it neared its lowest mark since the start of October after data showed the labor market remained soft. But you did have some nice news out of Japan. Japan's exports recorded the fastest growth in 9 months. Little compare and contrast, dollar, yen, euro.
All Nikki cares about is the euro, the yen, the euro and the pound going lower, the yen going a little bit higher. You got 2 of the 3. Pound's down this morning a little bit.
It's funny. I don't even need. It's not specifically the pound and the euro. It's just long dollar.
Right.
Most people trade the pound and the euro because of the futures, but I have the Swiss
But if they're down, the dollar's going to be
Aussie
up.
dollar. I got everything. I got a bunch of long dollar.
Well, they're all a little bit weaker this morning. I mean, they're all off of their lows,
Yes.
which would mean the dollar would be a little bit higher
Yes.
off of its highs. But you're getting a little bit of help this morning for you.
Yeah.
Okay.
Hasn't been going my direction.
No,
It's
it's
the
a
Cliff
drowning man
Notes.
reaching for a straw
Yeah.
right now.
Yeah.
Lumping it in with currencies because I don't have a specific story. What are gold and silver doing? Am I allowed to mention silver?
Gold catching itself a little bit of a bid, up $28, and
Silver up 4% since.
Yeah, huge move in silver. I mean, if you were looking for your silver gold pair trade,
Let's see what that is at.
now might be the fortuitous time if one were looking at that. I mean, silver was about
65 is the.
silver was about 60 cents higher than this too, but gold was also 10 cents higher than this. So.
Yeah. It's hard because they're both at highs right now.
They are.
Like you're really like if you're doing the pairs trade, you're probably more on the short side of silver than you are
the long side of gold. Yeah. I mean, but gold's had a much more muted. It seems like a much more muted move than silver. But I agree with you. That pairs trade will benefit from silver contracting probably more than gold going higher.
Yeah.
That's what you're trying to say.
What about if we just do the silver side?
You certainly could, as long as you don't get too rambunctious with your sizing there. You'll be fine. Silver traded down to under 60.
We're at 66. I mean, come on.
It traded under 64, 63.7 last night.
Gotta buy those dips.
Over 66 to 66.6, and now you just traded 66, almost on the nose, 0.02.
Yeah.
Very good. Short silver. We got him into it. But did you know he's a little scared there, which I like. I respect that. Silver
Not scared.
was a worthy adversary.
Not scared. This is a starter position.
You got one tick. You should take it so you can.
This is a starter position, okay? I got more bullets to throw.
Silver bullets?
Yes,
Okay.
exactly.
Yes.
Oh, I get it. You're like the Long Ranger.
Yeah.
Do you guys know what
The Long Ranger?
Lone Ranger?
I was like, what channels have you been watching?
Same one with Boo Boo.
Lone Ranger, yes.
Lone Ranger.
Hey, it's Wednesday, so let's check on the softs. Wheat fell yesterday, so did corn and soybeans. I only have a headline for wheat, but all the softs were down. I like to do like a little midweek check-in on the ags, I guess.
We should check in on wheat because wheat does not have a bid to it. I mean, it's on the low end or the lowest end of its range, all-time lows, at least for the year. Corn and soybeans are in the middle of their range. So wheat has been decimated. Nobody's eating starches anymore. All over.
That's not true.
Yeah, we haven't really been trading any of these. I don't think we've traded any of them.
No, it's not my forte. I mean, when you look even at like a soybean volatility, 15, and that's relatively low. I mean, you look at corn. I'm looking at the monthlies.
Sure.
It's about 18 or so. It's just a slow-moving product. You really have to be directional in there.
It is a big move, so maybe someone in our what's your assumption trades spot.
Come up with something.
I wouldn't be shocked. I mean, they.
Oh, you mean someone with a penis? So me bringing it up now doesn't count.
Somebody that's watching the markets that's giving trade ideas will have a.
I know.
I'm not watching wheat, so.
Well, do you have a P&L in the softs for the year? Like how?
I think we've traded them all year.
I don't think we've traded them since.
Oh, okay. I was just curious if you like what that looked like for your 2025. Hey, something that was kind of crazy is that U.S. crude oil closed at its lowest level since early 2021 as a looming surplus weighs on the market. Investors are also pricing in lower geopolitical risk on a possible peace agreement, maybe in Ukraine. But oil is super, super cheap. Someone put on Twitter the Lulu oil paradox. It now takes 2 barrels of oil to buy 1 pair of Lululemon leggings. Because they're $55, and so Lulu leggings are like $120. I just thought it was funny.
I thought you were going to go into the cost to make the Lululemon.
No, but you need.
Yeah,
Because aren't the leggings like made from like petroleum?
Everything's made
from petroleum, but
that's one of the reasons why, and I know you guys are going to yell at me now, inflation hasn't been as ugly as it could be. I know food costs are up and stuff like that, but oil's been relatively low.
Yeah, but you can't eat gas.
Which has been helping inflation, and that's why. But it is up 2% this morning, up almost $1.
Yeah.
To 56 and change. But that's what's been helping inflation for sure.
What are you gonna wrap up some 87 unleaded and put it under the tree? Like, what are you gonna like? Like, be so for real.
Save you like $50. I mean, that's kind of a nice gift.
It does go right to your pocketbook. I mean,
what does the Porsche take? Premium?
Yes.
Yes, of course it does.
Yes, it does. Oh my God.
Hey, a huge cache of critical minerals has been found in Utah, and it may be the largest in the U.S. A Utah company says it has unearthed a massive deposit of minerals that are crucial for building electric vehicles, semiconductors.
Thank you, John Smith.
Satellites, magnets, and more. Ionic Minerals Technology says that its Silicon Ridge mine is chock full of critical minerals. We haven't talked about the rare earth family of stocks in a while, but I was
Take that, China.
This is.
I always feel like these headlines, like they're on like some sort of like deja vu sort of wheel, because you get those like every like 3 to 6 months. You get China finds world's largest gold deposit.
Yes.
Brazil finds cobalt mine deep under volcano.
Sure.
Like you're just like finding all these things. It's like this is kind of weird timing. Like we've been talking.
It's like all the Infinity
Tony finds
Stones.
cobalt underneath his pool.
Yeah. They're just
sure.
like, and like nothing ever comes from it. It's like that massive gold mine that they found in China, 2 years ago. Like
It's hard to get out of the ground.
Yeah, it like disappeared. So
I'm hoping there'll be like a Landman spinoff here with this finding this.
I will say this: it says that the rare earth minerals in this deposit that were found, they are suspended in clay, not in hard rock, making them easier to extract. So
there you go. Take that, China.
there you go.
All right.
Yeah.
And then, just as an aside, Utah, one of my favorite states. It's beautiful. I love Utah. I love.
It is beautiful.
Yeah, love it.
Beautiful. It's hard to get a drink, but it is beautiful.
You can get a drink in. You can get a drink in Utah.
You
They
can.
made
Back
it
in the
easier.
day, you
Back in the day, you
join
had to buy a
club.
$5 membership to a club.
I'm so old. It was 25 cents.
Oh no, it was like $5 when
It was 25 cents
Yeah.
to join a club. But then they give you a measured shot. There's something gross.
Yeah, but the altitude is higher, so you get drunk faster.
Oh, please stop yourself. It's so, you can't go into a bar and they pop open like a 1 ounce thing and pour it in your glass.
That's what it is. Oh, they were like.
Yeah, they'll do that. Or they'll measure it, but some of them will just pop it open and give you a little, they were like a measured, they have strict rules on. Yeah, it's really hard.
I mean, there's more to Utah
hard to
than
enjoy
just
yourself.
drinking. It's a beautiful state.
It's a beautiful state, very pretty. No
All
doubt
right.
about it.
Hey, in other news, whoops.
Good skiing, too.
Bitcoin fatigue sets in as the token heads for its 4th annual loss. Bitcoin's headed for its 4th annual decline in history, and the first one that didn't coincide with a major scandal or industry meltdown. The latest leg down came Monday with a sharp sell-off. I saw this tweet. Look at all these projections. So the expert projections, this is from Borg Cryptos. Thanks, Borg. So JP Morgan said Bitcoin was going to be at 170 by the end of this year.
They all got this.
You can just read the rest of the list here. But where did we go wrong?
I don't think we went wrong. I mean, these are all bullshit made up things anyway. I mean, this is just everybody talking their book. I would like to see it go to 500 too. I mean, just because I'm long it, but it seems like it has a little bit of fatigue, as you called it, which I think is a good way of saying it. 87,000 is still relatively high when you look back at it. I think yesterday or the day before, MicroStrategies, it was the first time MicroStrategies trade at or under its coin hoarding that it has relative to the price of Bitcoin.
NAV.
What's that?
Net asset
value. Yes. For the first time, which I think is interesting because it used to trade at a multiple, of it 2 to 1, 1.5, 2.5 to 1. Interesting. I don't know if you'd rather be long Bitcoin, maybe.
It's just, it's not.
The problem is the dividend that they're going to pay. They have a 1 or 2% dividend they have to get back on the money. I don't know where they get that from. On some of the money that they borrow.
On the other products.
Yeah, they got to pay it out in stock and stuff, so that could be a.
Right here, gun to your head, end of 2026, where would you say Bitcoin would be?
Not 500.
No, but give me a number. I mean, it's a fun game. Like, nobody knows.
Sure.
150.
Yeah, I was going to say
get back
130.
to-
130
I
is
say
what
you
came
get
into
back
my guesstimate. When I go
I think
into
you get back to highest.
I was just curious. I don't know.
Optimistically, 130. Pessimistically, 65.
Pessimistically? Oh, not pessimistically.
It's a big range.
Yeah. I mean, it's a vol product.
Yeah, it is.
I mean, like,
It
it's
is.
become that. So.
Yep.
Hey, should you buy Micron stock before December 17th? This analyst thinks so. Semiconductor stocks tend to move in powerful cycles, and the setup is forming right now for Micron to be back in focus ahead of its earnings. What is the expected move in Micron, and what are some potential?
It is up 3.5 or $4.
Move's already out. Numbers already out.
No, it comes out. The earnings come out.
I know.
After the market closes, but a $21 expected move.
Oh, okay.
That's almost a 10% expected move. That's big. IV rank of 56.
Okay.
So Micron might be on the board. Markets aren't horrible either. 25 to 30 cents wide.
None of the chip earnings have been like
Upside
case
has
ripper
been muted. Yes.
Upsides.
Yes.
It seems like the upside is very, very much an inside range.
Yes.
And the downside is kind of like an outside the expected move.
Yes.
It's
Yes.
kind of skewed.
If I had to,
Downside.
right, I think what
Mine.
you're saying is, and I would echo it, if you were thinking it was going to go outside the expected move by over $20, you expect it to be the downside by $20 and not the upside by $20. Maybe something there. It's going to have call skew, which means calls are going to trade expensive, call spreads are going to trade cheap, maybe some sort of ratio spread, maybe something with defined risk. We'll take a look. MU might be on the board today for earnings.
Yeah.
Big news breaking overnight is that OpenAI is in talks with Amazon about an investment that could exceed $10 billion. The number isn't quite set, but the agreement would also include the use of Amazon's chips. Amazon is also an investor in other AI platforms like Anthropic, but Amazon up pre-market on the news.
Amazon is up about $2 if I'm rounding up, $1.50 if I'm rounding down, but Amazon's been a little bit of a lagger here, right? I mean, it got up to around 260. Let's throw that out and just say it was 250 to around 215, and it's hanging out at 225 this morning, up a couple bucks. So
We have some long delta, so it should help.
yeah,
But
Amazon IV
volatility's
rank
been-
8 or 9.
Yeah, volatility's been crap, so you know.
Microsoft has invested more than $13 billion with OpenAI and has backed the company since 2019, but it no longer has a right of first refusal to be OpenAI's compute provider. So they're in an open relationship.
You just named 2 of the popular 10 stocks that have led this market weighting to the upside that are really have underperformed since late October, early November. Here's Microsoft sitting at it's up $1 this morning at 477, but remember its highs was 540, 550, something like that.
Yeah.
So definitely not participating. IV rank in there is 10. So if these stocks catch a bid, you're going to have quite a rally going into the end of the year, I would imagine.
In a bonkers story, Databricks said they are raising $4 billion in their Series L. Have you ever heard of a Series L round of finance? So they're raising $4 billion in their Series L. That makes them valued at $134 billion to support.
If I was
AI
them, I would
app
never go
building.
public.
The valuation.
Come on, let's get to X. Let's get to Y.
Valuation is a 34% jump from their funding round that they just had in August. Pretty normal numbers.
Big numbers.
But if you're getting that much money via private funding,
That's the whole thing.
In a Series L.
Well, because you need your private funding to get paid, so you could go public at some multiple of that. That's why you do. I mean, great for the company to sit
they're
there
at
and hold on.
134 billion. I mean, what?
Sky's the limit,
Are you
son.
trying to IPO at 250?
Giddy up. Keep going.
500?
So,
what's the number?
SpaceX,
I don't know.
OpenAI, Databricks, Anthropic, they're all reaching these hundreds of billion-dollar valuation because they're staying private for longer. But it'll be interesting to see how this converts to the public markets. I don't know. These numbers scare me.
Yeah, it's interesting.
Mm-hmm.
Big numbers.
Yeah. We'll see what happens there. Hey, a little bit drama. Warner Brothers is likely to reject a $108 billion Paramount bid, and they will back Netflix in a bidding war. Warner Brothers board could announce a decision as early as today on the Paramount Skydance takeover bid. Affinity Partners has pulled out of the deal on the Paramount side. Affinity is run by the president's son-in-law. I don't know.
Mm-hmm.
What's Netflix doing? What's Warner Brothers doing?
Up $1.50, and we've got we've got a bunch of positions on there, so it should be a good little day for us. Got a couple puts.
Netflix, another one that has what is it, basically not cut in half, but cut by a third or so over the last couple of months. So there's another one that was once leading the market, has not leading the market anymore. And then Paramount, it looks like it's down 50 cents.
Okay.
But it's near its highs.
Mm-hmm.
Paramount would be the one I would not be looking.
No, you got to trade it on Netflix.
You got to trade it on Netflix.
I mean, you got to figure that some of the vol that's in Netflix right now is baked into this whole situation.
Yeah, and the markets are better in Netflix.
I mean, Ivy rank at 28 is like kind of a higher end or highest we have on the board.
Sure. Yep.
So definitely warrants something.
Yep, agree.
It'll be interesting because someone said like Netflix is going to lose like billions of dollars because their Christmas games, like they had to book them, like last year. So you're going to get the Cowboys and the Commanders and the Lions and the Vikings, and people are like, meh.
Lions Vikings could be.
It could be good.
Yeah.
It could be good. But it was just interesting. Like it's not the same as like that Kansas City game last Christmas.
Yeah.
It just hit different, but. You do you, Netflix.
How is Mahomes, by the way?
He had surgery. He had surgery.
He does have a torn ACL.
But he had surgery, which was remarkable because normally they make you wait so the swelling goes down. But he had surgery like yesterday in Dallas.
Too,
so
yeah, I think
the Bears line has gone from Bears plus 2.5 to basically pick them.
In Green Bay, right? It's
no, in Chicago.
Oh, it's home.
It's on Saturday, and it's a Saturday night game.
Yeah.
So it's like at 7:00 on Saturday night.
That's awesome.
Be careful if you're coming
they
downtown.
Lost 3 or 4 players last week in that.
Yeah, Christian Watts.
Yeah.
Micah.
I think I read a headline. I didn't even know this. I think the Bears have actually lost more players than any other team to injury. I don't know if that's.
I haven't read that.
The defense has, for the most part of the year, was completely decimated. Yeah.
Google's Waymo, a boom, boom, boom. Let me hear you say Waymo.
Waymo.
They're in talks to raise billions at an over $100 billion valuation. The Alphabet unit Waymo is in talks with potential investors to raise money at a valuation of at least $100 billion. The size of the financing round could possibly even exceed $10 billion and is expected to be arranged early next year. What is the Goog doing in the market?
Warren Buffett got it again, 307, up another $1. Money goes to money.
He got in at like 290.
Right here. Right here, a little bit
300.
lower.
He's right there.
Yeah, so you two can get in. Ivy rank of 9 in Google. You see something here about volatility? Ivy rank of 9. It's relatively low.
Yeah.
Good news for Tesla as the stock continues to keep trying to hit new highs. A California regulator has put on hold in order to suspend Tesla sales in the state. California is Tesla's largest market. It's the latest development in a case which the state of California accused Tesla of falsely marketing and overstating the car's self-driving capabilities. And they were like, hey, you guys are a bunch of liars whose pants are on fire. But they were going to halt all of the sales, which would have been, very detrimental because, again, California is the largest market here in the U.S. for Tesla sales. But a regulator put that on
Gas
hold.
is so darn expensive.
What is Tesla doing?
After making new highs the last couple of days, it's down about, let's just call it $2, $2.50.
Needs to sit right here for another 48 hours.
Oh, for you?
48 hours. So you're in the December options that expire. What do you have on?
It's Friday. I have the 465, 475 long call spread, and then I'm short.
Oh yeah,
495, 510.
Yeah.
We got that butterfly. And
We talked about whether we should sit on it or close it. It was trading around $3.
Yeah, around that.
$3.
We'll look at it today.
Yeah.
Probably be more like towards like 4.
Nice. My buddy, I can't remember his name right now, and I'm so sorry about that. I should have it in my notes here. Reminds me that expiration Thursday going into Friday. I know I'm a day early. Thursday going into Friday is typically a bullish opening for Thursday into Friday. So those who have 2-day options, take it for what you want. The majority of the time it's higher. Although when it does go down, it goes down almost twice as much on a percentage basis as it goes up. So usually it's higher by a smaller amount.
What am I supposed to do with this
Yeah,
information?
that's what I was gonna say. Now you're giving me like the both sides thing.
Well, if you had
inconclusive.
added the money, put spreads that you might be long, you could probably get a move lower that would benefit that because you get a bigger move lower. So you might want to sit with those that are almost at full loss kind of thing. And if you have a position that's on the cusp of being profitable to the upside, you might decide to stay in that because you usually get the upside. The odds are there's an upside move. So that's what you do with it. Gotta take a little bit out of it.
You do you. Hey, Meta said yesterday the company will begin testing its Instagram for TV app in the U.S. via Amazon's Fire TV streaming service. The app features the company's TikTok-like Reels videos, and that way you could watch them in the comfort of your home on the big screen.
That?
I mean, do we need more access? Like you already have it in the tiny little computer in your pocket. You need to put it on the screen too.
Lucas, your brother-in-law found out that you can stream from your you can play one of those stupid games, like what games do you play? Give me one.
Like Candy Crush on your phone?
No, like one of the fighting games, whatever you would call them.
Call of Duty?
Play Call of Duty. Okay. You can play Thank you for the boomer Eve.
Yeah,
You can play Call of Duty on a wireless controller that you usually would play on a computer, right on your phone. So now he just sits there in the kitchen like this and plays all day.
Cool, sure, his wife loves that.
Amazing. Yeah.
Way
Technology,
to contribute to the household.
Don't do it.
Awesome.
Don't do it.
Hey, what's Meta's stock doing?
It was up like $10 or $12 yesterday. It was actually kind of like strongest of the group of the Mag 7s yesterday.
Yeah, for sure.
But it's on its lows. I mean, it's been sitting at like 650 to 675 has kind of been the higher end of where it's
it got down to the under 600. I mean, just 2-3 weeks ago. So it's had a nice rally.
For the last couple of weeks, though. This is after we had that little like, what was that announcement that gave it 50 points? Do you remember?
They were reallocating funds from the metaverse into AI.
They shut down the metaverse. That's what bounced it from 600 or 625 to 675, and now it's been kind of like right in that range.
You'll be happy with the phone situation in the Batista household. You mentioned it the other day how I was a lot stricter when I was younger than I am now about the phones and things like that. We now have the.
Did you take the games away from Lucas at the dinner table? Lucas is a mid.
No phones at dinner anymore. Made the announcement last night. No phones at dinner anymore. And when I go to bed, Vinny's phone goes to bed too.
Wow.
Ooh.
That
I give it 4 days.
I sell that one.
Yeah,
you could take the phone from the dinner table. I mean, he'll go to iPad, he'll go to computer, he'll have it all.
No.
And you go to bed, you're old. You go to bed at like 7:30.
No.
Northfield-based Medline has raised more than $6.2 billion in its IPO.
Yeah.
Northfield, yes, making it one of the largest IPOs of the year. Medline sold around 216 million shares, priced at $29 a piece. It was a larger offering than the company had initially outlined. The ticker is going to be on the NASDAQ. It's going to start trading today. MDLN is the ticker there. But nearly 6,100 of the company's 43,000 employees worldwide work in Cook and Lake counties here in Illinois.
Oh, yeah. Wonder when they're leaving. Medline hasn't started trading yet.
Yeah, well, it's today. So there you go.
Mm-hmm.
Yeah. Do we know the ticker?
MDLN.
Yeah, she just said it. Were you not listening?
No, I was reading. I had something to read.
Yes.
MDLN. Okay.
MDLN, yes. But fun fact for you, you're going to like this. They are the ones who manufacture the pink and blue baby blankets that the babies get wrapped in the...
A hell of a business. That's a big building for some pink and blue blankets.
Yeah.
Oh, you mean the ones that have been around forever?
Yes, that's Medline.
They're coming for you, Medline. I got to tell you, these photographers now, they ain't using your blankets anymore. I miss them because I think those pictures are kind of like our Sears catalog pictures that we did. Those ugly pictures are good. Like, you need those. You need those in life.
A U.S. House of Representatives committee on Thursday plans to vote on legislation that would aim to prevent aviation disruptions during government shutdowns by ensuring that air traffic controllers and other key aviation workers are paid. I support this.
Yeah, agreed.
They are critical to our infrastructure.
Air travel.
Right, yeah,
Sure,
pay them.
Sure, they're critical.
Especially around the holidays.
Yeah,
You don't
pay
wanna
them.
fight with them around the holidays.
Pay them.
No,
We got places to
no.
go.
But it's always
You don't want them
something.
hitting schnapps either.
Yeah.
Like, you don't want them doing that.
always
Not at all. Worrying about their bills and stuff.
Kraft Heinz. Kraft Heinz has named former Kellogg chief Steve Callahan as its new CEO, tasking the industry veteran with leading the packaged food giant through a planned split into two standalone companies after years of sluggish growth. The company decided to break up in September into two units, one focused on condiments like Heinz ketchup and the other on grocery food brands like Oscar Mayer.
I mean, what a boring company. Like,
Kraft Heinz.
Kraft Heinz. Where do we find, it's like, where do you go for a queen? You go to Queens, New York. I mean, where do you find the new CEO? You go to another boring company like Kellogg?
Yeah.
I mean, I guess you really.
The splits have worked though for the companies that have done them. Like if you look at GE and all the spin-offs that they've had.
Or Kenvue.
Some of the parts are always more valuable.
J&J
than
Kenvue one.
Of its whole.
Yeah, I mean, this could work.
But Kellanova is the Kellogg split, so he
Yeah.
was over that. So he knows. I don't know if you could trade KHC.
This is why, what's his name? The Gravedigger and Carl Icahn would make so much money back
Sure.
in the day, breaking up companies like this. I mean, the sum of the parts is always worth more than the whole. There's always some hidden value in
Yeah,
that.
I mean, we just talked about Waymo getting $100 billion. That
Yeah.
puts Waymo as what, $500 billion?
Waymo.
Waymo.
You have to do it.
Hey, if you're looking for a new career opportunity, maybe in 2026.
Perhaps, Rabbit.
I have the job for you. Planters is looking to fill 3 positions for a year to drive the Nutmobile. Shut up, Bat.
I'm looking for 3 positions to ride the Nutmobile too. If you're looking
to June
for that.
2027, the Nutmobile will be driving across the U.S. and hopeful candidates can apply for the position from December 16th, that was yesterday, to February 14th. The job provides a salary, full benefits, and generous meal and travel stipends. You will not be paid peanuts. I'm so sorry.
Nikki, I don't think you can qualify for this because I don't think you can do the splits like that.
Definitely not.
But Dr. Jim can definitely go like that. He looks like he's good for doing that.
The 26 foot
Chandler
long.
do like the Oscar Mayer wiener?
She's done a few
Truck?
Oscar Mayer Wiener commercials. Yes.
The peanutters who will pilot the vehicle. It's a 26 foot long Nutmobile, and it
a
will
big nut to
be
crack.
at events across the country. So.
I've seen one of these on the road.
Yeah, I have too.
Yeah.
It's
traveling around this great country of ours.
Anyone who's interested in filling the position, you do need a bachelor's.
tastylive.com.
This is a good one for you when you do your
You
little
do
road
need-
trip. We'll put you in the Nutmobile.
So you need. Look, I'm perfect for this because you need a bachelor's.
Nut John traveling around the
A
country.
couple hotties in the back with you. It'll be perfect.
You need a
Don't bust that nut, John. You want to keep it intact.
You need a bachelor's degree, preferably in communications, marketing, or advertising. Hello. A desire to travel, a valid driver's license, organizational and time management skills, and a proficiency in nut-related puns.
And don't fall asleep at the wheel.
There you go. Hey, this is wild. An Ohio
More wild than the Nutmobile?
Yes, an Ohio State University study finds that 27%, almost 30% of parents think that their child will become a college scholarship athlete. So almost 30% of y'all are out here thinking your kids are going to go D1 full scholarship. I'm going to hold your hand when I tell you this.
Dream big.
When I tell you this. Yeah. I mean, I love the optimism.
Yeah.
But please don't pressure your kids with the weight of crushing them with your dreams. I don't know. I just thought it was an interesting study. What are your thoughts?
I think they're delusional.
Yeah.
I mean, I don't think it'll be 1/10 of that. I don't think it'll be 2.7%.
Right, yeah.
Whatever. I mean, scholarship, maybe it's going to be higher than that. I shouldn't say that. I mean, there are...
Scholarship athlete, not like,
Yeah, right.
Yeah.
Athletes.
Athlete.
Makes it a lot smaller than a English or math.
Like, right. I was an academic scholarship, not like, I'm not going D1 in ball.
Yeah.
Listen, you talking their book. They're talking their book.
Yeah.
I guess, but please have college savings.
Please have a backup
child.
plan.
Yeah, have a plan.
There's always community college.
Have a goal. Anyway. Anyway, finally today.
I never had those lofty aspirations for either of all of my children. Sorry, I'm not going to look at you anymore. For all of my children.
I mean, that's okay. You don't have to be an athlete. You don't have to be
You're
a
right.
professional athlete. You could just be a college grad, you know.
That's right. That's right. You could be a college grad, and you are.
That's
and you all did in normal time too. Nobody
normal
did
time. You know, great grades.
Good job on all you guys.
Perfect.
Can I show a video so I can leave?
Sure.
Thank you.
Sure.
Hey, when's the last time you got like dared or bet to do something by a buddy of yours?
I mean, we bet on things pretty much every time we're together.
Yeah. Okay. So
last
recently.
night.
So recently. Well, this is a pretty epic bet. I don't know if the cost was worth the risk, but it went viral, so it was pretty funny. Good job, Tanner. Watch this.
Hey, Tanner.
What's up?
If you climb up that tree and jump, I'll give you...
It looks fun.
He looks dead.
Oh no, he's in there.
He got the wind knocked out of him. He's okay.
Oh.
He got $5.
$5.
Yeah.
You okay?
How high he climbed up into that
Hey, Tanner.
tree.
Yeah, I'd like to see it again. Does he go face first?
Yeah.
It kind of looked like it was like a belly
Climb up
flop
that
of
tree
sorts.
and jump,
Yeah.
I'll give you...
Yeah.
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 Oh, Tanner. Good job.
That kid did not get a full ride.
Definitely not. And I don't think his parents thought he was going to be an athlete, a college athlete either. So
No, I don't think so. He's one of the other 73%.
Something like that. What's coming up next?
We're going to take a quick 90-second break. We're going to come back. We got Confirm and Send on this Wednesday, December 17th. We also got Look at the Market. So we're going to do that. We're back in 90 seconds. Tasty Live. Thank you.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
tastytrade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day. Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live with Confirm and Send. But before we do get to those viewer emails, let's take a look at the market. E-mini S&Ps are up 15 handles. You can see here that the E-mini S&Ps traded down at 835 up to 882. Relatively tight-ish night last night, pretty average on the range. They were up 15 right now, just about on the higher end of its range. NASDAQ up 70. On a percentage basis, they're all up around the same. Russell, the strongest of the group, up 9, and the Dow up 104. Volatility in by 12 cents, tightish range on volatility also, around 30 cents or so, middle of its range of corresponding with everything else in the market. Bonds are down 8 after trading up to 115.16 and under 115, the 115.04 near the lower end of the range. But you can see here, Ivy rank really low in bonds. You're going to have to be directional. Bitcoin, I guess, catching a little bit of a bid, but really in the mid of its range overnight at 87.6, basically unchanged. But you can see here, it looks like it's at the top end of last night's range. Ethereum doing the same, basically unchanged, down $9. Gold catching a good bit, up almost 2% after making new lows under 55, right at 55 or so. We're at 56.20 now, about 30 cents off of its highs. Gold up $36. If Nicky would have done that pairs trade, he would actually be up on it. But he only elected to sell silver at 66.02.
Wow. You know, you got hands too.
In change.
You got a pair of hands. And
you got a pair of hands on you.
You're looking at the same thing I am. You put the trade in.
Yeah.
Dog, okay? I got to do everything for you.
I understand. I definitely understand. Just don't want to hurt you and show off on you. Nat gas up 13 cents.
Even with the laugh factory around here is
after making new lows, catching a bid with oil. That's all I got. That's all I got from. What do you think here? Got some numbers coming out tomorrow.
Yeah.
CPI. We're not.
I don't think you go anywhere.
President talking tonight at 9 o'clock or something like that. I think 9 o'clock Central. Is it Central? I believe so. I don't know.
Maybe
it's
something
Eastern.
like that.
Maybe a complacent market.
I think so.
Little upside action. Like
volatility's going nowhere. I think.
Didn't go anywhere yesterday, really. On the down move, we were down to 50 handles at one point on the E-mini.
I think you have VIX option settlement.
You do?
And expiration.
You do?
Right in the open. What is it? An hour after? Does it? Or is it already done?
I believe it's already done shortly after the opening. So usually you get a little bit of a reversal in volatility. Like volatility's been pretty depressed.
Yeah.
And once you get that expiration, usually it'll go to
because you got the roll. You got
the roll in there. A little bit of the opposite. So maybe we get a pop in volatility today. Maybe one of those days where volatility is up and the market's up small. Yeah. Maybe one of those days. We'll see. Yeah. Anyway, that's just a guess. Wednesday, December 17th, confirm and send. Let's get to it. And then we've got an option jive. And what's your assumption? And TP coming later in the day. Got a packed house.
Cool.
Confirm and send. Wednesday, December 17th. First slide, please. When traders talk about a skewed strangle, what do they mean by that? Skewed strangle.
So most stocks will have skew on either the upside or the downside. So something like a Tesla.
Calls or puts, you mean, right?
Yeah, calls or puts. Upside or downside. Calls being the upside, puts being the downside. Something like a Tesla will have an upside skew. So if you're looking at a 20 delta option, the skewed side is going to be further out of the money. So that option is going to have the same delta and likely a very similar price, but it's going to be a way different distance away from the stock, and that's going to be the skewed side. So you can skew you could call that a skewed strangle if you're going to like the 20 delta on either side. It's delta neutral, but it skews based on the skew in the option prices. You could also talk about a skewed strangle as something that leans directional. So if you're, skewed to the downside, you might have a 10 delta net short strangle. So selling a 30 delta call and a 20 delta put would skew you to the downside a little bit. So you can use that kind of phrasing multiple ways, but skew generally refers to the side that has perceived more risk to it via
velocity of the risk. Sure. Yeah, no, I don't have anything to add to it. I mean, really, it could be delta skewed, as you mentioned. You can go equal distance away on a strangle, $10 on each side, for example. And if this call skew, as Nick was describing, that call that you sell that's $10 away, equal distance from the put, is going to have a higher delta. So you'll be selling something with a 30 delta, for argument's sakes, and selling a put with 20 delta. You'd be left with 10 short delta. If you're directionally biased to the downside, that might be something you want to do. You have a skewed strangle with short delta meeting your directional bias. So yeah, no, you can be skewed either by delta, you can be skewed by strike. Typically, we put on strangles by the delta. So this put skew will be further away on the put. This call skew will be further away on the call. We go by delta, but you can go by anything you want. As long as you have a high IV rank, that's the whole key to a strangle, at least on entry. Next question, please.
On Tuesday, you did a piece on correlations of gold with stocks. If I'm bullish on both gold and stocks, but use a different strategy in each, would you consider that to be diversified still? So basically the question being, can you diversify by strategy as well as product?
100%. Of course you can diversify by strategy, and you should diversify by strategy. You shouldn't have all iron condors on in your portfolio unless you're limited on capital and you have to have more defined risk trades than you can on naked. You should have a probability of profit of over 65% on entry, and you should have a plethora of strategies. So your volatility curve on your overall portfolio goes a lot flatter, hopefully flatter and up to the right, but at least flatter. If you have one position on, I'm just short puts in every stock, well, when the market goes lower, all your positions suffer.
Yeah.
Conversely, when the market goes higher, all of them work for you. So it all depends on how much volatility you want in your portfolio.
Yeah, well said. I think you should be both strategy diversified as well as risk diversified. You should have stuff that, that is, spreads and naked positions, calendars, diagonals. I mean, they all come into play here. So, yes, totally.
Mm-hmm. Beautiful. Next question, please. If I sell a butterfly, what do I want to happen?
You sell it. So are we talking
selling
short,
a butterfly,
long, short, or are we talking about like broken wing butterfly? That's the big question.
Give the example.
Ultimately, with any sort of butterfly, assuming you're selling the guts, so buy, sell, buy in any fashion, whether it's an equal width or a broken wing butterfly, you're omnidirectional, right? Your risk is to the side where your max profit is going to be. So, and that's for a broken wing butterfly. Normal butterfly, I guess you don't really have that same sort of risk. But regardless, your biggest profit, which is what most people focus on, is right at your short strike. So you kind of want the position to go against you if you're looking to get that highest profit potential. But intuitively, you want the stock to be kind of close to where your butterfly is, but not right at the butterfly. You want to be right at the long option. If
we don't sell butterflies as a general whole.
Sell, buy, sell. We don't do that.
We do not do that.
Yeah, because that's looking for outside.
That's looking. Yeah. I don't know what you're looking for when you sell a butterfly for pennies on the dollar. I mean, that's a high probability trade with high risk on it too, right? I mean, I would rather buy a butterfly than sell a butterfly. That would be the way to do it. Now, we do, as you said, broken wing butterfly. And if you're doing a broken wing butterfly, as you mentioned, buy one, sell two, buy one further away from the money. I mean, when I trade them, optimally, I'm selling them for a decent sized credit, and I don't want the stock to go in the direction that I have the butterfly on. So if I do a call one, I want it to go lower. If I have a put one on, I want it to go higher. But It's omnidirectional, as you also mentioned, and right at your short strike is nirvana. That's where you make the most money. You collect the credit that you received on the broken wing butterfly, and you get the benefit of that long spread in there. So, I mean, you want it right at that strike, but you're not playing for that. That's what makes it omnidirectional. That's what makes it an 80-85% probability of success on the trade too. So, it's a type of strategy that, with a limited amount of capital in your account, is I think a favorable one. I mean, 80-85% pop. I mean, not too many trades like that out in the world. So, good thing to do, I believe. Next one, please.
How do I use the order chains feature on the platform? Well, we use it.
All you.
Yeah, no, I can definitely show it more once the market opens and we start doing some things in this portfolio. But the order chains, I mean, I think it gives you a good context to track your positions and see where you're at on those positions. It basically strings together all the credits and debits of a position that you've been managing so that you get an idea of like where you are net, because all your P&Ls when you're trading options are realized and unrealized. Those are the two buckets. And most times, people don't understand the idea that if you close something, it's a realized profit or loss, but you're rolling and you're opening a new position that has an unrealized profit or loss. And so the order chains kind of buckets that together. I'll drop a link for it. The order chains feature, there's a walkthrough that the Tasty Trade team has on.
Only platform I know that has it.
Yeah.
And it's not without its issues, right? I mean, there's a whole lot of Oprah codes in the back end of that. So you should check over it yourself. But for me, the order chain is a really easy, quick way of looking what I have on with all of my roles and everything that I have on in that position. It does all the math for you. If you see an issue with the order chain, just give just
send them an email.
Send them an email, give them a buzz, and they'll reset it, and it'll be right for you. So it's only as strong as the data that it gets from the exchanges, and sometimes there's some mix-ups in that. So only platform I know that has it, and it's just a quick way of looking on what your existing position has, meaning how much credit you receive for the trade, what you're up on the trade, what you're down on the trade. Beautiful feature that the development team came up with.
I posted the link to that in the YouTube chat. So if you're watching on YouTube there, you see that pop up there.
And I'll post it to X too, so that'll be good. Even the S&Ps are up 18.5 handles, holding steady. Pretty much all of last night we were green for most of the night. NASDAQ up 84, Russell up 9, and the Dow up 120. Volatility in by 20 cents. Bonds are down 5 ticks, middle of its range. Bitcoin down $150, Ethereum down $10. Oil not up as much as it was, about 60, 70 cents higher just a moment ago, but it still is up 1.5% or 83 cents. Gold up 43. That's about a 1% move. Silver, the big mover of the day, new high, 66.19 right now. It's trading up to 66.65. Net gas up $11.5 cents or so. We'll take a quick 90-second break. We're going to come back. We've got an option jive for you, and then we got the moment we've been waiting for. We got the opening bell next. Back in 90 seconds. Tasty Live.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
My name is Tom Preston, and I am the Chief Market Strategist here at Tasty Live. So every day I write the cherry bomb that goes out to our tastylive customers. And usually it talks about some potential trade idea that people might want to consider with a little bit of context about why a person might be interested in doing it. But the main reason that I push these things out is to get people to think in terms of volatility, liquidity, and probability in their financial decisions. What I want people to learn is an effective way to approach the financial markets and to use options to their fullest advantage.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
It's option jive. It is time for an option jive, my son, and you know what that means? It's time for you to go to an option jive, the long and shorts of it.
Yes, yes.
Ba-ba-ba-ba.
Talking about options, directionality, as well as just buying and selling and the, kind of funkiness of being long delta but short an option. And how do you be short something that you don't have?
Sure.
Kind of a common question that we get all the time. So we're going to talk through that. So the first slide here,
newer traders going to benefit from this, I would imagine.
Yes, you're going to know all this. You can answer some emails if you'd like. You don't have to tune in. No quiz at the end.
I can always learn something. I'm gonna listen attentively.
Okay. So traders tend to talk about themselves as long SPY or short the Qs. Like, we're trying to quantify this and give you an idea of what this really means, because it really is dynamic. The great thing about options is that they're not purely directional. It's not like binary where if you say I'm long Apple and Apple is down that day, it doesn't necessarily mean you are losing money on that position, or you might be making money on that position. It's going to change with volatility and time and all those things that we talk about constantly on the network. And so, we're trying to put this into context of what of directionality means to options. And so,
it is a language of its own, right? If you haven't heard it for the first time, I'm short puts, meaning I'm long delta. It could be confusing.
Of course.
To a newer trader.
Yeah, for sure. But if you say I'm short delta and the market's up and you think that you're getting killed because you're like just outright shorting the market, that's not really the case either. So we're going to try and put this into context here. So long, very generally, from a directional perspective, means up, right? Bullish. So your positions profit when the price goes up. When you are short something, it is directionally bearish. So your position profits when the price goes down. With stocks and futures, this is straightforward, but when you get into options, it gets a little bit different, right? So, if you're just looking at futures statically or stock statically, bullish is up, bearish is down. It's binary, it's one or the other, and it changes day to day. So when you get into options, we get onto the next slide here. Long or short for an option means to have bought or sold that option. And so whether you buy or sell it is going to change whether you are bullish or bearish directionally on the trade. So there's two different aspects here. There's buying and selling, as in long or short, and then there's directionality as up or down, bullish or bearish. So the long or short is not necessarily the directionality of the option. It's the whether you're buying or selling it. Long calls are naturally long the underlying, but long puts are short the underlying. So you're buying, as in long the puts, but short the underlying. And so there's a direction.
You have to understand this cause and effect, right?
Yes, exactly. And so these simple tables give you an idea of like, if you are selling an option, are you bullish or bearish on that underlying? So if you're selling puts, you're bullish the underlying. If you're selling calls, you're bearish the underlying. It's kind of a double there. So gives you just a quick outline of like the very basics of directionality as well as long or short the option.
Good.
So the next slide here, when you get into multi-leg strategies, and you're basically just looking at delta, right? So the question is spreads, condors, butterflies are made from several options, and how do you know if they're bullish or bearish? And this kind of goes to the butterfly question that we had of like, what are you looking to happen on that sort of trade? There's a lot of things that can happen that would have different benefits to you, right? If the stock goes down, you keep the credit. If the stock drifts towards your the meat of your butterfly, you make more than the potential credit that you had on the downside. So there's so many things that go into it. And here's just a simple calculation of just some of those strategies here. But when you add up the deltas for all the options in the given underlying, it'll give you your net delta. This is why when you're selling a strangle, you start, and if you're doing the same delta on each side, you're neutral the underlying, right? You're going to get more short delta as the stock goes up, and you're going to get more long delta as the stock goes down because the dynamics of that option are going to change. And that's why when you say, I'm long delta via short puts and the stock is down, it's not necessarily a bad thing for your positions because there are things that are working in your favor. You have volatility and time and all those other aspects of options. So just very basically, if you want to understand where your position is, and this is why we talk about just looking at the delta of our overall position, it's very easy to do it when you have one contract strangle on. You can see it very cleanly, but people ask, how do you manage all the positions that you have in an underlying? You've sold 3 or 4 or 5 puts, or you've sold puts and calls and you're in different expirations. You have a calendar, a diagonal. How do you look at that whole position? It's really simple. You just take the net delta of that whole position and it tells you exactly what you want to happen.
You don't have to be a risk manager. You don't have to be have years and years of knowledge and trading under your belt. You tell me what your delta is, I'll tell you what your directional risk is. Period. Down. End of story.
That's it. And
it's dynamic. It's going to change.
For sure.
At that moment, they'll tell you what your risk is.
But you're not looking at the specific strangle or the specific iron condor or the specific calendar or the trade by trade. When you're looking at a portfolio and a position that has multiple positions within it, it's that whole position as a whole. The strangle might be losing 50 cents, but your diagonal might be making $2.
Right.
And that's because of the net position that you have on. And so, this is a very basic way for you to understand how each option works. And you can kind of extrapolate this out to everything, if you have multiple positions on in your portfolio.
Good.
Next slide here. So beyond just the directional and whether you are long or short the option, there are other aspects of options that come into play. And this is why, this kind of answers the question of how could you make money if you're short delta and the market goes up? Well, there's time value that decays, there's volatility changes. Those are the two other aspects of options. So the theta is the value of an option at expiration might be determined by the underlying price, but until then, there's more to that option's value. You have time decay. So how option prices change with time is expressed by their theta. A positive theta means you are short premium. So if you are short premium, you have positive decay. It's opposite. I know that
sounds counterintuitive, right?
It sounds counterintuitive, but you're basically you're long the value of time by selling it, right? So like time passes and you're long that passage and you are getting that decay, you're short that short premium. When you have negative theta, your positions are long premium. And so you are long, you're short time because you need something to happen.
That's right.
If you are long premium. If you're short premium, you don't really need anything to happen. You need things to just stay where they are.
Correct.
The easy way to think about it.
Correct.
So getting into the next slide here, Vega. So sometimes option prices can change even beyond the movements of the underlying and the.
All right, so now you're getting it confusing for people before you get onto the slide. I mean, not confusing. You're getting more into the weeds of it. Your delta is your delta. It's going to change with volatility. It's going to change with time. It's going to have all these variables to it. But let's be frank here. Usually, if you have a delta, let's just say positive 100, and volatility moves, Vega moves, the stock market moves, your whole portfolio moves to 90 deltas, 110, 120, 80. It's not, if you told me you had 80 deltas, I would say you have 100 deltas worth of risk. You don't have to get into the weeds here. Now, those who love the math behind it are going to love this slide, but you don't have to go to your delta, you know your directional risk.
Yes, and I think the point that you made of it reflecting all of these other things is a good basic understanding. You will see that, and especially if you're doing this, consistently and for a period of time, you'll understand where your portfolio delta is. Like you won't be surprised by your positions via the movement in the market. Like you'll know, the market's, up 2% today. I'm going to be pretty short delta today. Like it's going to be intuitive to what happens to your positions there. So I think that's a good way to phrase it. But for Vega, if tomorrow the price of an option has increased, even though the underlying didn't move, there's less time remaining, the market must expect the underlying to move more, and that is changes in implied volatility. I get this question all the time. It's probably the most common beginner question. I sold this put spread 2 days ago, and it had a theta of $5, and 2 days have passed, but I'm losing money on this trade, and the stock is basically right where it is. What gives? Right. And it's you might think just because the stock is only down 10 cents that is basically a nothing move, but all these things are dynamic. Volatility is going to be dynamic. Your delta exposure is going to be dynamic. It's going to change via the volatility. So there's so many things that go into the value of an option that it's very, it's good to understand this. I think going back to your point of just understanding your delta exposure will do you a little bit better.
Good.
So Vega is the Greek which measures the option price sensitivity to implied volatility. So it tells you how much the option value is going to change via changes in implied volatility. Long options will be long volatility. And the easy way to think about this is like if you are buying premium, you want something to happen, right? So you want big something to happen.
And sooner rather than later. And that goes to
factor
in all those other Greek.
That goes to the fact that you are short time, right? So, you want it to happen right now. You buy a strangle or you buy a call, you need the stock to go up now, today, tomorrow, the next day. If you're selling that strangle or selling that call or selling that put, you want kind of nothing to happen, or at least the expectation of what is going to happen to come in less than what actually happens. So it's being, long vol, short vol is kind of inside. So just like delta and theta, you can add up the Vega for all your positions in a given underlying to figure out if you are net long or short volatility. This is also, at this point, is why we don't really look at the overall, like there's no real beta weighted Vega, because you'd have to do all sorts of calculations with the beta and figure out an underlying to beta weight it to, and then, kind of extrapolate out the volatilities and all that stuff. Vega really only applies to that underlying. They're all going to move in like a high correlation. If you have big moves, big face ripper to the upside or big crash to the downside.
Silver 65.33.
Ow.
That's not an ow.
Oh, did I sell that?
That's a good. You sold 66.02.
I sold that at 66. Oh.
Yeah.
How does Daddy do it?
70-ish cents.
Should I put it at 65?
Which is just $700. No, I just buy it back and be done.
Just buy it back.
Yeah, per contract.
You're a Johnny, so I'll take them. Next slide here. So just a couple takeaways. So when someone says,
I love when a plan comes together, don't you?
Yeah.
What were you hoping to make on that? About 15, 20 cents? You made 70 cents by not looking?
Good thing
closing your eyes?
Good thing I only did the silver side.
No, you'd be up on the gold side too.
I don't know about that.
Yes,
Gold
you would be.
Flat.
No, it's up half a percentage point. It's up like a quarter percentage point or so. You'd be up on both sides. You'd be a 2-time winner. But instead, only a 1-time winner.
This is why we make such a great team.
Is that the spin?
Yeah.
All right, fair enough.
Because you let me know when I can take my profits.
Yeah.
Sometimes.
Hey, when was the last time you got paid $700 an hour? Not since that night when you were taking the pictures with Mike that I just saw from our sweater campaign.
A couple takeaways here.
Yes, let's get to those.
When someone says I'm short, we are trying to quantify and put it into context what that means. Most traders short the underlying, so profits from the price falling. When you understand all the things that go into option traders, you understand that it means that you basically are short premium, that you sold something. I am short premium. I might be short delta, but really you are short premium. When you are long or short the underlying, the easiest way to understand it is just to look at your total delta. That is your directional move sensitivity on a short-term basis. If you are net long delta and the market goes down, it's probably not good for your positions. There might be things that are working in your favor, volatility, time decay, but net, it's probably not good. Long delta, up, short delta, down. When you have positive delta, you're bullish. Negative delta is bearish, obviously. When you are long or short premium, a lot of the concepts of volatility and time come into play. Positive theta means you are short vol, so you have short premium. If you're negative theta, you have positive vega, so you're positive volatility. You are looking for big moves in either direction. You're going to be long. So these couple images, they're great images to help you understand, the very basics, get those to the newbies to help them understand where we're at.
Good job out of you. Good job out of me, because I sat here and just picked the bottom on silver. We're going to take a quick 90-second...
That was vintage. That was good.
We're going to take a quick 90-second break. It was just luck, son. We're going to take a quick 90-second... You know what? It's just risk. I mean, you embraced risk. And then we're going to take a quick 90-second break and come back. We got more... Some would say I was gifted. More Tasty Live after this with the opening bell next.
Very gifted. You gave me some of that, too. Thank you.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Global markets never sleep. Explore them with Forex on tastytrade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on tastytrade.
Got the need for speed? No problem! At tastytrade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. tastytrade, make your move.
Nigga, we are back, son, and you know what that means. Time for a little bit more Tasty Live, about a minute before the opening bell. Let's see what's going on in the market. Really not too much movement in the equity market. Even the S&Ps are up 11. They've been hanging out right here. I guess this is the low end of the $5 range that they've had. NASDAQ up 44, Russell up 4, and the Dow up 63. Volatility in by 20 cents. Really, silver. You picked the one that was moving. It was over 66. It was flirting with going under 65. Didn't quite get there. Got to around 65.20-ish or so. You scalped it nicely in the last hour also, which was good. Bonds have been down 9 ticks for most of the session. /6B has been a little bit weaker, back near the lower end of its range, which is good for your dollar position. MU has earnings after the market closes. Good IV rank of 57 in there. Expected move is about $20-ish. So maybe we'll do something in MU. Looking at ES before the opening here. Expected move, and there's your opening bell.
Very low ding. I don't know. We're going to have to... There we go.
Expected move is about $30-ish for the session today. Even the S&P's up 7.
Silver gets big.
Say again?
Silver gets big.
Silver.
That's a great move.
One, and you're trading / SIL. And on that was a $700 scalp on a contract. I mean, it's big.
Yeah.
It's not for the faint of heart, and it's something that you don't want to get big in because it really does grow teeth.
Yeah.
Especially when it goes against you, is where it grows teeth. Because if you're scalping it, you're taking your profit in your normal, scalping kind of zone. Even the S&P's up 475, NASDAQ up 30. Let's see what's moving the market here. Just by clicking on this net change with whatever list you want to have, whether it be one of the curated lists that we have, or you want to create your own custom list, go right ahead. All the stocks that you look at, you can look at all your positions too from this list. But I just have the high option volume list. I go to the downside. Oracle, after catching a bid the last couple of days, is selling off, down by 5. NVIDIA down by about 3. Lulu, which Vanetta mentioned, down 2 and change. Lennar, which had earnings down about 4. Sorry, down around $5, about 4%. Oracle now down $5, the leader in the clubhouse. Meta down $1. PDD down $1 and change. Palantir down small. Target down small. Let's see what the upside here is. Goldman Sachs up $11. APP, App 11 up $9. Shop up about $6. Carvana up around $4. As you can see, the bulls seem to have a little bit of double weighting here on the amount of stocks that are higher, and their move seems to be higher than the stocks that are down, at least in this high option volume list. Coin up $6. So far, it's pretty copacetic in the market.
Yeah, I closed out so Netflix is up like to $1.50-ish. I closed out of one of the puts. I've been scalping those 90 strike puts for like 50 cents. I closed this one.
Yeah, I mean, you're buying them back at $1, just under $1.30, right? And
I sold them 2 days ago at $2.
Yeah, I mean, not 50%. I'm closer to 35, 40%. But on a $2 option in 48 hours, I mean, what are you expecting? We just went over time, value, Vega, and everything else. That option is going to hold some premium to it. The velocity of the change on the stocks movement isn't going to affect that far out of the money option the way it would closer to the option. You had a high probability trade. You got the move you want. You take it and run like a thief in the night. There's nothing wrong with that.
A Tesla spread. So now I'm getting tested on the upside, although I'm right there. That spread is still at like $3.50. So it hasn't moved all that much. I'm long the 465, 475 call spread, short the 495, 510 call spread.
Tesla up around $3. It was lower this morning.
I actually kind of need it a little bit
lower. Right. You need a little bit lower or sit. You only have 2 days left. So that out of the money option that you're short should start to decay, should have started to decay. IV rank of 12, although volatility has been upticking a little bit in there. But your break even on that is significantly higher, even though you're being tested on your short right now, isn't it?
Yeah, I mean, my break even will be at 505.
Right.
And you say that significantly higher. This thing's moving $15 a day. So
because it has a $17 expected move over the next 2 days.
That's why that butterfly is only trading at $3.50 and not
closer to what?
$6,
right? $10,
or $7 is because you have a stock that has a $17 expected move. It's a 50-50 shot whether this could be fully out of the money on the downside or fully in the money on the upside. So,
so you're not being penalized for waiting. The stock's up $4. What do you do now?
You sit.
What's that? You
sit. You got to.
You're staying the course.
Yeah.
Yeah, I know.
I took my little Johnny 50 cents on Netflix. Okay, I can take a little risk on this one. Okay.
I 100%.
You know, I scalp my puts. Amazing. Gifted.
I 100% agree with you.
This one we're gonna hold some risk. Okay?
I just was wondering what you were gonna do. That's all. Taking a look around here at the market, even the S&Ps are up 8. Everything seems to be copacetic. Yeah. I mean, Bitcoin catching a little bit of a bid here, flirting with its highs of the day at 88.
I close out of I've been scalping these puts too, the 450 strike puts.
Well, look at what the stocks have been doing. They've just been oscillating around, jumping back and forth. That's a cheap way of buying dips by selling puts, right?
Yeah. And there's just I don't want to stick around too long because volatility is so low across the board that
IV rank of 8 in Microsoft.
Yeah, and the stocks had a nice pullback. So I get the looking for long delta positions. Maybe you do diagonals or calendars where you don't have the same sort of like short vol exposure as we talked about in the last segment. But with vol here with a VIX at 16, how much lower do you play for to go? I don't want to be in this put and have the stock basically go nowhere, but volatility kind of expand in the market, and that put goes to $4. It goes from $280 to $4, and I lose that $100. And I'd rather be putting the trade on at that point.
You'd rather be putting it on than taking it off.
Yes.
For sure. Totally agree with you. 100%. What else do we have here, Son, in the overall market to look at as even the S&Ps are only, I was going to say only up $1, but now they're unchanged down $1. NASDAQ down 47, Russell down up 12, and the Dow up 146. Volatility, which has been on its butt, as you can see here, every time it catches a little bit of a rally, it sells off. We'll see what it does today. Volatility down 20 cents. What do you think?
I'm going to try and here's another great example. So yesterday I closed out that AVGO put. I sold the 300 strike puts on the 15th at 410. Closed them yesterday at 310. So it's 24 hours. So I took $100 out of that put. Today, with the stock down $3, basically a nothing move, that option, the 300 strike option, is back at $4. These are tiny, tiny, tiny little moves.
Right. But you got to take it. You're looking to take advantage of them, right? That's what you.
So I'm trying to get back in at like $4 here, and
in it to win it. Again. I got it.
It's the same thing I did with Microsoft. It's like, but you can't be greedy when volatility is so low because you're trying to capture 50 cents or $1. You're not trying to get the 50%. Like I'm not holding that for $2 because you missed out. So I just got filled at $4.
Another way of ramping up and the opposite of that would be to kind of take your profits a lot quicker when volatility is low, right? When volatility is high, we ramp up. We might sit for that 50%, 30%, 60%, something like that on the trade. When volatility is low and it really is just a directional bias, you got to take your profits a lot quicker. You can always reload. Like everybody worries the market's not going to be here. Pretty soon we're going to be going 24 hours a day, 7 days a week, it seems like eventually. So the market's always going to be here. Take your profits when you can, ring the register, move on.
And it allows you to remove some of the overnight risk. Things get a little goofy sometimes. You cycle out of risk.
Yep. Good job out of you. Good job out of the team. I think we're going to take a quick 90-second break. We'll come back. What's your assumption? We're going to look at 10 trades, figure out what's going on here. Right now we have pretty much an unchanged market just about across the board, except for silver, which is up 3 in the orders, or 3 3/4%. Palladium, if you're looking at that, which is really platinum, is up 3%, $57. Nat gas up 11 cents. which is almost a 3% move, and oil up 75 cents, which is 1 1/3% move. Everything else pretty much.
I kept those puts from yesterday, oil puts.
Yeah, those oil puts
for $100 too.
Yeah, why not, right?
Yeah.
Right? Take those off too.
Cost me, if I held them, $200, $300.
My aunt had peanuts. She'd be my uncle. We'll be back in 90 seconds. This is Tasty Live. We got What's Your Assumption next?
Yes. Trade ideas.
Trade ideas.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
All right, so you've got a couple spread trades under your belt, and you're ready to start scaling up your trading. The common thought is to just increase the contracts, but this is only multiplying the risk and the reward of the position, essentially pushing the chips in and doubling up. Instead of adding contracts to the position, consider widening out those spreads.
One of the things that I do differently than a lot of people is that for the purpose of the show, I have multiple accounts, right? So I'm trading in a lot of different sized accounts. So I've got to balance finding ideas and finding opportunities for smaller sized accounts as well as finding opportunities for those larger sized accounts. I think that the variable of trading on a day-to-day, hour-to-hour, minute-to-minute basis is really powerful and really fun to have access to.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Nikki, we are back, son, and you know what that means. Time for a little more Tasty Live with What's Your Assumption? Even the S&P is down $6. There we go. Now we can do it. Even the S&P is about as low as I've seen them since we've been on the show, down around $6 and change. Relatively small move with a $30-ish expected move in the even the S&P. AMD doing a little
closing
a little AMD.
It was a 1/3 ratio.
An aggressive ratio, right? Going to give you some delta when you go 1/3.
Well, if you calendarize it, you get a little bit of longer delta in the back. So I had about 5 deltas.
I noticed that now you're Jan Feb.
Yes.
So you were long Feb, short Jan, short the shorter dated. AMD, let's take a look.
You actually had long delta on the trade because the shorts were into this down move. You lose the delta on the shorts, but you're also short volatility and a little bit of time. So you had this, you were kind of short vol in the near term, long delta in the back.
Paid about $5 and change, sold it around $6 and change. You just did that trade on the 12th, about 5 days ago. Weekends in there too. You make yourself $1 on the trade. Sure, run like a thief in the night. Again, rinse and repeat. I mean, made 6 trades today. It's 15 minutes into the day. You've been covering a lot of risk off on the positions. I think it's what you're supposed to do. Good job out of you.
Yeah. Cool.
Let's go to what's your assumption?
Yeah, what's your assumption?
There we go. We're looking at your viewer assumptions. What's the first assumption here? Take a look at that. Ooh, AMD.
All right.
You just did that. Did you look ahead?
No, I didn't.
Did you just look ahead and close that trade because you saw this AMD down $2.47
from the UAE, Dubai.
Wow.
Little Dubai chocolate.
Welcome to the show.
Yeah. Neutral. Okay. Early October. Yeah, we are back to the early October level, around 200-ish. I'm expecting chop or maybe a Santa rally drift. Okay. IVR 23. Come in a little bit today. January, 250, 270, 1/2 call ratio, and you want to do the 195 put. I like it. So this is short put with a call ratio spread. So synthetically, you're short the strangle. You're short the 195, 270 strangle with a little bit of a buffer and a kicker to the upside because you have that call ratio. So let's look at this from...
Stock's IV rank of 17 right now has come in a little bit. So it doesn't have a price on this one, but we can take a look at it.
The 250, 270 is kind of cheap. You might have done...
It's 88 cents. Like, yeah, that's what it's trading for.
Yeah.
It is 1/2. I apologize. I was just looking at the spread itself. So if I buy one of the 250s...
Yeah, you're paying like 40 cents for it.
Yeah, it's a 40-cent debit. Not our cup of tea.
It is a 20-point wide, so it is relatively wide.
It is relatively wide.
It's just not adding to the position.
Right. We would probably go closer. And if you're going to stay at $20 wide, you're never going to get the credit that you want on this spread. So you're going to have to go $10 wide if you wanted to get a credit. Like you could do the 250, 260 would give you a 20-cent credit.
I think that's a little too... They're looking at January.
Yeah, with only 30 days to go. That's why the credit is so low. And the IV rank is down too.
I'm thinking maybe we do the 85. So we move this to more like a 1 standard deviation.
Okay, so you're going to sell the 85 put?
Yeah, and I imagine they were looking at this at some point in the last week where the stock has been up a little bit more. Stock's down $2 and change here. But so the 185 is around a 20-ish delta, 19 deltas. We do the 230, 240 call ratio. You do that ratio at basically 50-cent credit. Ish kind of leads you, you get a little bit of a credit there, and kind of plays into the same sort of directionality here.
I like it. Markets are relatively tight in here too, which is good. So you should get filled at your price.
I put that in 405, got filled.
Got filled right away.
Yeah, now it's above the mid, so we're.
Yeah.
Didn't think I was gonna get.
It's 2 cents off the mid right now, so you got.
I thought I would be moving that to $4.
Well, it has long delta, and the stock is now down $2.70. It was down like $1.70, $1.80, $1.90 when you first started looking at it. So the stock went in the opposite direction that you needed, and that's why you were able to get filled so quickly.
Cool.
Good job.
I like it.
Which is probably what you want on every order that you enter, right? So you can get filled at the mid price that you see. Is you want the stock to go in the opposite direction you need for just a quick second, and then bounce to whatever you want. TLT, bullish. What do you think about this one?
All right.
We got Jackie W. in Guatemala. Wow, look at that.
Okay, you want to do a zebra here? This could be our long bond.
Sure.
How far out you got? January or February?
It makes no difference in TLT, right? I mean, it's all one stock, unlike ZB, which might be a different bond future that you would be doing it to. So usually I would default to February. You got an IV rank of negative. This is all pure directional. All pure directional higher, right? So if you usually buy around the 70-ish delta, a zebra would be buying 2. of those 70 delta options. If you're in February, that's around the 86. And you usually sell the 50-ish delta, which would be the 88, but you only sell one of those. You're doing it for a 377, 378 debit. And you'll notice here, it's basically, I'll put up on the screen for you, buying two of the 86s, selling one of the 88s. You want to have around that 50-50 probability of success. You don't want to be paying any extrinsic value. You're paying pennies in extrinsic value here. You're getting your 100-ish deltas. It says 86. Basically 100 deltas, pure directional play. You are paying $376 for this so it has defined.
Way cheaper than buying the shares.
Way cheaper than buying the shares. It's a directional risk, but you do have more risk than the expected move, which is around $2.80. But you have an embedded, it's a debit spread. You have an embedded stop in here. You can't lose more than $3.78. All things being equal, you probably can't make more than $3 on the overall trade.
I'm going to move it to the 85. I'm going to do the 85.89. So that nets you like 100. 85 is a 75 delta, and the 89 is a 38 delta.
Oh,
so
good.
net, it's 102 deltas.
Okay, or you're going to the 88 though. You said 89. You should go to
I did the 89.
Right, 85, 89 would be where sure, okay, give you 100 deltas, completely 50-50 shot.
Yeah.
Go right ahead.
Yeah, same.
Yeah, you look at your theta, it's nothing.
Yeah.
Basically, stock replacement in TLT.
Yeah, exactly. Yeah.
Yep. Good call on there. Trading for around, what does it look like,
$5 and change.
Nah, it's gonna be like 5.25 or something like that.
All right, I'm gonna put that in, and we'll just let that sit for a second. Bonds are rallying a little.
Yeah, they're down 6.
Yeah, down 6. I like it. Thank you, Jackie. And Guatemala, amazing.
3 down days for SPX before Christmas, due for a rally, and we saw the abandoned baby patent today. LOL.
We finally got it? We've been waiting for it for
I don't know. I wouldn't know what one
years,
looks like, to be honest with you. Selling put spreads or another bullish play. Ooh, what do you think?
All right.
Just a bullish SPX play in the 0 days.
You want to do like 20 delta, $10 wide?
Sure. You can get smaller and go into SPY if you wanted to. I mean, listen, I know. I'm just. You can go into ES and get smaller.
526.
Oh, well, you got filled at your price. Good job.
How about the 6770, 6760? And we'll try and get like 225 out of it.
Okie dokie.
Hope for a little bit of a downtick, and then if we get filled there, we'll
Volatility in by 30 cents. Sure. This would be a spin on doing the 0 day.
There it is.
Oh, there you go. This would be a spin on doing the 0 day. You're only doing one side, right?
Yeah, they said selling put spreads.
Yeah, I'm just saying it's a spin on doing the 0 day. You don't have to do both sides. You can be directional.
You talked all that about the Thursday is bullish, but the downside is bigger sometimes, this and that.
But today's Wednesday, so it doesn't.
No, I know. The next, you're talking about how going into tomorrow.
I actually said volatility is going to go higher today, with the market maybe even a little bit higher, but we've got volatility lower with the market a little bit lower. So don't listen to what I say. I'm completely wrong.
Vol down, market down, that's like the ultimate pain.
Not intraday for the next day, but yes, you're right. You're right. Not to help this trade, but we'll see. We'll see. Listen, as a standalone trade, that's the way you have to look at this.
60 to 70% probably.
That is
profit.
correct.
I mean, that's what it is.
Correct. That is correct. Good job.
Cool.
Next one,
We're in.
please. 73% pop on you.
Rocket Labs. All right. Christoph from my Reddit peeps. I like this. Somebody gave me Rocket Labs last week. We did that call ratio. I bought in the risk. So I have the 65, 75, 85. So 10 by 10 equal with butterfly on for free. Kind of a risk-free butterfly. You leg into it if you get, you put the ratio on, stock goes down a little bit, you can buy in the risk. It gives yourself a free shot. You have this kind of butterfly that is marked for some sort of value, so it holds value.
Big stud.
Doesn't it? All right, so trend-aligned long dip idea using a small defined risk Johnny-style put spread. We're doing the 31-day, so this is into January expiration. Short the 20 delta, $5 wings, Credit is slightly under 1/3 the width of strikes, but fits my account. A larger account should sell the puts instead. I like this.
I like it too. So you're going to do this?
Yeah, so let's see. So you're looking at short
January.
Yeah, the 20 delta
Gesundheit, God
would
bless
be
you.
like around the 45 strike. So if you did the 45.40, it'll trade at about $1 right now. So you're a little less than 1/3 the width of strikes. But if you are bullish the stock, I don't mind the trade selection. It also has 30 days to go till expiration. So you got to, if this was more towards 45 days, this probably trades at $1.50,
Right.
70.
Markets are less desirable, less than great in here on this $54 stock. Down to $1.58 helps your bullish stance on here. For sure. I should think the markets would be a little bit tighter. This stock's had a 3 or 4 day slide, which was met prior to that by about a 2-week rally from 40 to 65, now trading 55. Middle of its range or so. Even the S&P's down.
What do you want to do? Sell the 45s?
Sure.
Yeah.
Sure.
We'll do a 45 strike. Let's see if I can fill the.
I mean, it's a 20 delta, right?
Yeah.
30 days to go. Put you under or at the low end of its most recent move, which is 40.
All right, I'm going to let that one sit and try and get filled on that if possible.
Even the S&P's down 11.
Oh, I got filled. 167.
Wow. 167, 67.
That's 2 6.7s I got you Zoomers out there.
That's 2
today.
6.7s. You got the Zoomers. Good job out of you.
Next one, please.
Next one, please. Energy, oil, neutral, summer 2026 time frame. What? They're going to go all the way out to July on this? Roberto in Chicago, South Side and the Netherlands. Looks like 2026 will be a quiet start, ? Even Middle East, Iran, Israel have become boring. Short strangle, Iron Condor and CLN6Q6 were short strangle and XLE to avoid tanker truck visiting Tasty. That doesn't happen anymore.
It doesn't happen
brokerage
anymore.
firm will close you long before your tanker
You
truck.
can't, even if you wanted to, even if you had a big old plot of land where you're going to build a shed out back and put it there, you can't. You have to have like all the licenses and all this stuff. You can't just have.
Yeah, you ain't no landman.
Yeah, you ain't no landman with 1,000 barrels of oil. And
Roberto.
Yeah, and that's probably a lot. Like if it came in barrels, that would be a lot of land. You need like how big do you think that would be?
I have no idea.
Like a building that would have to, that's huge.
Yeah, I would think so.
And the 55-gallon drums, they're like this big, right?
Yes.
4 feet.
About as round. Yeah. Yeah.
We'll do the
enough to fit a body.
Yeah, that's true. That's true. Not one your size. I don't know. I'd have to cut yours down a little.
Well, I'm tall. I mean, yours you'll be fine.
No,
you'll be fine.
You know what? Don't you put that fake news out there? People every time I do the live events, they're always like, "Wow, you guys are taller than I thought."
I know. That everybody always says
you
that.
put that out. I'm long oil, so I'm with you here a little bit, sort of. But I'm short.
Oil up today, up 66 cents, although it is off of its highs by about 70 cents or so. So it's up under 1%. I'm sorry, it's up around 1.25%. It was up almost 2% a moment ago.
I'm short the 55-53 put spread in the 28-day. And I'm also long one of the micro oil contracts, which is /MCL. So I have some long delta in oil. I'm going to keep that position, pass on this one.
Okay.
But thank you, Roberto. South Side, as well as the Netherlands. One of the more odd combinations, I think, of two places to be.
Mm-hmm.
South Side and the Netherlands.
It's an oxymoron.
I feel like you might be the only one, Roberto, that's in those two places.
Yes.
I like it. That combination.
Yes.
Usually it's like Chicago, Florida, Chicago, Arizona.
Sure.
You get one cold, one warm. Frankie, Wisconsin, Arizona. Like those are.
That makes sense.
That makes sense. These are two
more common. That makes sense.
Yeah.
This makes sense. It's just not
on
the
the
norm.
other side of the world. It's all over the place. But that's cool. I like it.
Yep.
Next one, please.
I'm getting questions. Do you put in a bid for your put spread in the 0-day SPX?
Oh, yeah.
At like any price? You sold it at $225.
I know.
Or you put in a $1.50, $1.25, $1.70. What do you?
$1.50.
Okay.
Right. Getting close.
They just want to know if that's something that you would do.
Yes. We have done that with all of our 0-day trades. I forgot on this.
We have. Yep. So it's okay.
Yes.
They're just trying to help you. They're just trying to help you. You got a lot going on over there.
Hey, they're a lot more helpful than you are. I'll tell you that. Yeah.
3 of the 4 indices are higher. Volatility in by 36 cents. Only the NASDAQ down 50. Even the S&P is basically unchanged. Go.
All right. MU earnings play turned bullish after the pullback. Looking at put spread. This is Cole in Santa Barbara. Let's do it. All right.
You been to Santa Barbara?
I have not. No.
That's beautiful. Yeah, for a nanosecond.
Just for like one of the shows that we've done.
We had a show close to there, and then I went to Santa Barbara. Yes, yeah. Took a little extra day over the weekend, but I did not have a travel day on Monday. I was back to work on Monday.
That was a slight
inside dig.
Inside dig. You know what?
MU bullish for earnings play. They're taking away our trade that we were going to do at 9:45, but we could look at it now. What do you want to do?
You want to sell just like the 190 puts in January?
Sure.
Like a little, I guess the 195 or I'd do the 190. January. I mean, Micron has spanked me many times, so why not? Why not once more?
It's allowed, right?
I'm in. All right. We're with you. We didn't do the put spread. We did just a naked put. We're with you. A little bit of long delta.
A little bit of long delta. They're going to use more buying power, obviously, than the spread. Yeah.
I also have an upside like crab trade, so.
You're looking for MU to rally.
Or stay right here. Kind of be neutral. I'm short a lot of volatility.
Thank you, Cole Sosnoff. Appreciate it.
Yes.
Next one, please.
It could be. Next one, please. What do we got here?
OKLO, an old favorite of yours, bullish.
Peeps on Reddit. All right.
Down $1.23, trading at 82. Once a darling of the market, trading 182. Now down to 82, where it kind of took off from. It took off from around this back in September, around $70-ish, and then doubled or more in a month and a half, back down to 82. OKLO, IV rank of 40, still elevated. The $70 short put in Jan. Now, I would imagine, I haven't looked at OKLO, but there would be call skew in here. You were mentioning skew all day today. 70 puts about $11 away. It's trading for around $3.60, let's say, on the bid. You go $11 away up to around the 90-ish call. Well, hell, you can go to the 95, which is $14 away. It's trading for 50 cents higher than that. $14 away versus $11 away, and it's 50 cents higher than that. I guess that would be definitely have call skew in here. What do you want to do in OKLO if you want it to be bullish?
I'm thinking the 65s. Sell the 65 puts.
65 put going a little bit further out of the money, around that 15 to 18-ish delta. Stock's down to
240.
240. The market was 215, 250, and you got filled at 240. So you only improved the offer by about 10 cents.
Yeah.
With the stock weak like this, you were able to get filled better than mid price, is my point.
Yeah.
All right.
Cool.
Good job out of you.
All right, I'm in.
You are in.
Peeps on Reddit coming through.
Well, we don't know yet.
No, that's one of my.
We hope they come.
Nobody knows the future, so unless you got a crystal ball.
Actually, I've seen the peeps on Reddit. They do know the future. So
next one, please.
Done.
Uber, 30 to 60 days out, low IVR, low price, poor man's covered call. Really the only choice. Okay, Owen, Omaha. I've been trading puts in Uber. I like the thinking here. Stock has gotten whacked over the last couple months here. I kind of like this. What are we thinking? 30 to 60 days out. So you want to do a poor man's covered call?
Stock definitely got whacked, going from around 90 to under 80.
Yeah.
They're bullish. Stock's lower.
Yeah.
I like that.
I think you do something like
does have earnings coming in February. Let me just give you a little bit of that. You've got a 41 volatility in February. You only have a 36 in January. So you're going to have some delta to this trade to make some money.
I'm thinking like this.
Because the vol differential is just too much to make it on time, I would
Yeah,
imagine.
you're doing like, this is a poor man's.
Poor man's cover call. Yeah. Mm-hmm.
What about doing a.
Omaha! He's in
Omaha.
In
yeah.
Omaha.
Don't Omaha me. What about doing just. You could do a poor man's cover call. You could do something like the 75 in February. It puts you at, or even the 70 delta, or the 70 strike gets you about 80 deltas. And you could sell like the 82.5 in the January expiration. What do you think about just doing a normal cover call? Because we don't really have.
Yeah, you certainly
don't normally do that. A lot of that.
Yeah, no, you certainly could. I mean, there's more buying power, you're saying, or you can just sell an in-the-money put. It's exactly the same thing. Uses less buying power.
That's true.
I mean, it's not really commission sensitive anymore because there's no commission on buying stock, but it is buying power sensitive. So you can just sell the at the money 80 put, or you can go in the money if you sold the 80.
Let's do the 82.5.
82.5.
And we'll wheel this. We'll hold this.
Okay.
As a covered call.
Synthetic covered call.
Synthetic covered call. We'll hold this into January. We'll take stock and start selling covered calls, and we'll use this as like a, we'll show the order chains and everything.
Okay. Yeah. Sounds good. An experiment, you're saying.
A little experiment.
Yeah.
Or the stock will rally above 82.5.
And we'll just get paid.
And we'll just get paid.
And we'll just be 6.7.
Oh, you got to wait till the 6.7. You can't force the 6.7.
All right. Sorry. I tried.
Come on.
The whole thing is going to be the price that you go in at.
Yeah. So this should trade somewhere around. So
440-ish or so.
I'm at 445.
Okay. Well, you could sit if you think the stock's going to go lower.
I'll put it at 440 and hopefully we'll get filled there.
Very good. Very good.
Next one, please.
Stock rallies, you won't. Stock goes down, you will.
Riot. All right. We're digging. We're digging into the depths for some of these. Mikey, how about just a long covered call? So you just want to be long the stock or long stock, short call.
Long covered call, bullish. I think they're thinking a covered call. You know what? Because it's a $13 stock.
See, this I think we're getting confused with the long delta, long.
Yeah. I mean, the 15 calls trading for around 90-ish cents in Riot.
You buy the stock, sell the 15 call.
How about this? How about just buying the 12-15 call spread? I mean, the mid price is $1.40. That would give you a cost of $13.40.
Basically a 50-50 shot.
50-50 shot. You're probably going to have to pay a little bit more than $1.40, I would guess. You probably have to pay closer to $1.50-ish, if I had to guess. Maybe a little bit more, but you could just sit. The stock goes lower. It is up 46 cents. I mean, we are chasing something that's up 3.5%. It already has.
We'll let it sit.
What's that?
I'll put it at 145.
Okay, perfect. Yeah, that's what I would say. Put it at 145 and sit.
Cool.
Yep. All right. Good job. Good job out of you.
Last one. We got one more.
We have one more. ZW. There we go. Somebody did come up with.
I knew my peeps.
You did know your peeps.
490 short put. Or what were we talking about, ZW?
Yes, wheat is the weakest of all the softs, meaning corn, wheat, and soybeans on a relative basis. It's trading right at its lows. 507 and change is about as low as it's been. Ivy rank is about as low as it's been too, at a 6.
All right.
What do you think here?
That's our.
I think I filled at Uber.
So Uber must be going down.
Uber was down around $1.06. It's down $1.11. So what a difference just a couple of
5 cents
pennies make.
All right, I sold the puts, 490s.
In wheat.
In wheat in January. I think that's our first
Very
ads
nice.
trade.
Very nice. Yeah, that'll be the first one. We're definitely not buying it on its highs. It's as low as it's ever been.
Yeah.
Although wheat does have a low IV rank too.
Cool.
All right, let's see how many we got filled on here. I think you did a really good job on these. I guess it's not really.
And we have 2 working too. So AMD, we got filled. The TLT we did. SPX, we're in the Rocket Labs put for 167. See,
now you can do it. 167.
It.
167.
Oil, we're already in, so I give that a pass. Passing grade because we're already.
It's already had that position.
MU, we did the put. Oklo, we did the put. Uber, we just got filled. Riot, we're working that order. ZW, we got filled. So pretty much got them all. I think that's 100%. Thank you. No applause needed, guys.
No pats on the back on this unchanged market right now. Even the S&P's down 4, NASDAQ down 76. That's your big leader to the downside, down 76.80 on the NASDAQ. Russell's your big mover to the upside, up 17. Dow up 173. So you've got a tug of war between up and down between the NASDAQ and even the S&P's on the downside and the Russell and the Dow on the upside. Volatility down by 30 cents. Volatility has not reared its head at all today. Bonds down 4, 115.18. Bitcoin trading over 90,000, son. 90,000.
That's a mover.
Yeah, a decent sized move in Bitcoin. Bitcoin has just had a two-sided market back and forth every day. If you're trading the opposite each day, seems to be working well for you. Ethereum, meaning if the stock goes down one day, it goes up the next day. Ethereum up 63, oil up 85 cents, gold up $39, catching itself a bid. But so is silver, back over 66.
Do we try and get it again? Do we try and get it again?
Or you do the 2x1 pairs trade. You could do that.
Okay, you want to try that?
Sure. That would be selling 1 silver and buying 2 gold. You sold your silver, and now you're buying your gold. Perfect. Cool. So where do we do the pairs trade? Let's take a look at the pricing on that. You want to while I push this trade through for you?
Where's our SPX at?
Hold on one second. Putting this in so everybody can see it. All right, trading around what, 65-ish or so? Maybe.
Yeah, that's where it's at right now. It's 65, 66-ish.
Very good.
Crazy.
Very good. Well, let's take a quick 90-second break. A lot of trades there. Good job out of you in a
good job out of you.
First short period of time. Our SPX trade is basically unchanged, up a couple of pennies, 20, 30 cents on it. That's the only thing that we have working so far for the show is a closing trade. We'll take a quick 90-second break and come back. We got more Tasty Live, and I'm surprised the market hasn't rallied here with volatility in 34 cents. I mean, the S&Ps and NASDAQ, but we'll see right after these messages. What do we got coming up next? TP's coming.
Oh, Tasty Extra.
Let's get in TP. I can't wait to see him back in 90 seconds. Tasty Live. I wonder what he's wearing.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
All right, so you've got a couple spread trades under your belt, and you're ready to start scaling up your trading. The common thought is to just increase the contracts, but this is only multiplying the risk and the reward of the position, essentially pushing the chips in and doubling up. Instead of adding contracts to the position, consider widening out those spreads.
One of the things that I do differently than a lot of people is that for the purpose of the show, I have multiple accounts, right? So I'm trading in a lot of different sized accounts. So I've got to balance finding ideas and finding opportunities for smaller sized accounts as well as finding opportunities for those larger sized accounts. I think that the variable of trading on a day-to-day, hour-to-hour, minute-to-minute basis is really powerful and really fun to have access to.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Nicky, we are back some, but you know what? Enough out of you. We've got this man. That's right. I'm talking about TP in the house. How are you, brother?
I'm great. Thanks, Pat. Hi, Nick. How you doing, guys?
Doing good, man. Doing good. Thank you so much for joining the show. Do appreciate it on this Tasty Extra.
Well, happy to do it. Gives me a break from the holiday stuff.
How are the llamas and the alpacas and whatever else you have over there?
Do they get presents?
Oh, them? They're delicious. They're delicious. Thank you for asking.
Oh, are they on the smoker right
No,
now?
I'm just kidding.
Are you preparing them for the Christmas dinner early?
No, I'm just kidding. I never had alpacas or llamas. That's a little bit, as I say, beyond the pay grade. I got enough going on. We're back to 5 dogs. We had 5 dogs. 1 dog went to doggy heaven, and then my wife rescued another dog about 3 weeks ago. And so we're back to 5 dogs, and we got about 500 pounds of dogs in the house. So it's
and just to be clear for everybody out there, not to eat those dogs.
No, I don't.
You said 500 pounds like you had them in the freezer. It's like no. These are living dogs. The alpacas too. They're out there living.
Nikki, I checked the spice drawer. Make sure I got enough, garlic powder, got enough pepper, stuff like that. Smoked paprika, things like that.
You really thought this out a little bit.
Okay, we gotta stop this because the hate is gonna start flowing. Okay,
we don't need that.
We gotta be careful. People love their dogs, and the dogs are great. And but we get the cats, we get the little horse. It's just a lot. I don't need any alpacas.
The alpacas, do you get like fur from them?
Oh yeah, that's the whole point. So it's in Central Texas down here. There are little, I don't want to say, they're ranches.
Huts?
Not that small, but they got herds of alpacas, like 10, 20 of them. And they make a modest living shaving them and selling the fur, hair, whatever it is.
Yeah.
So, I said, that's a little bit beyond the pay grade. Ain't gonna be shaving any alpaca.
Oh no, I was hoping like a couple throw pillows or something. Like
Nikki,
I could get some throw pillows from the TP farm.
Nikki, you're more of a man than I. If you want to try your hand at shaving alpacas, it's what? Yeah, go for it, dude.
I like my alpacas shaved. I'm not gonna lie.
Hey, he's been a little
quiet.
horny this week.
I've been quiet.
It's the baby. There's babies coming out, and
I've been quiet.
And this one, he's a little bit.
I like my alpaca shaved.
This is twice we've talked about hairless things here. Thank you,
Tony.
John.
I'm there with you. I just don't want to be doing the shaving. The alpaca can take care of itself.
I don't mind participating a little bit. Be quite honest with you.
No, that's fine. That's your call, man.
Thank you, John.
And you know what? It's a big world, Tony. There's room for both.
Room for everybody. That's right. Absolutely is. There absolutely is.
Oh my God.
Let's get to this tasty extra because this has been tasty so far.
Before HR hears about this segment, we're gonna have to. I don't know if this one will be.
Now you know why once a week on TP is enough. It brings in the best of us.
Oh, too good.
So today, let's talk about the cherry picks that I wrote up for yesterday. And I saw on What's Your Assumption, you guys were talking about an Oklo trade.
Mm-hmm.
And it sort of fits into what the cherry picks was, the same thing I was talking about yesterday. is what we've seen over the past month is a lot of weakness in the big nuclear stocks. So, because it's a hot industry right now.
Yeah.
AI and all that stuff, and people talk about AI, but it's crypto too. Those things hoover up electricity. Oh, this is the cherry bomb, not the cherry. We got to get the cherry picks up. This is the cherry bomb. So let me go back into what I was talking about with the AI stuff. So AI, those things suck up a huge amount of electricity, and I don't know where you guys stand on nuclear power, but it is seen by a lot of the people running these AI shops that nuclear power is the way to supply it. Tony, you and I are both of an age, we remember 3 Mile Island. And growing up in the 60s and 70s, nuclear power was kind of scary. Yeah. Nick, I don't know
That's
what
why
your
he's
take
so
on it
demented
is.
now. That's why he's such a horny little bugger over there.
Yeah, okay. So fine. So a little bit of nuclear radiation, you know, it comes with the territory. So they're kind of growing up with that. Now it's starting to, 50 years later, it's starting to, you know, people realizing, hey, maybe we can start using this again. The problem is, and my contention is that as the chip stocks have fallen, so a lot of, and you know, it's hard to trade AI directly. So we talk about the semiconductor stocks like NVIDIA or Oracle, right? Those things have been crapping out, or Oracle especially have been crapping out recently. And part of that is when those stocks go down, the nuclear stocks kind of went down too. The correlation between something like NVIDIA and Oklo is about 50%. Not extremely high, but it is positive. So the weakness in those chip stocks, I think, was part of the reason it carried over into these nuclear stocks. The nuclear stocks that I looked at in the cherry bomb fit a couple of criteria. First of all, these all have options on them. Some nuclear stocks do not. And there are a lot of names you'll hear in the nuclear space that don't have public companies yet. They are in the, you know, they're in the pre-IPO stage or in the angel investor stage or whatever. But these 5 stocks, and I didn't include what is it? I forget the name of the ETF. Because it didn't do the nuclear ETF, because it didn't have tight enough options. These options, the options in these stocks are relatively liquid, which is why I was looking at them. So looking at the price changes of Nano, Centrus, Lightbridge, Oklo, NewScale, I've traded all of these in at one time or another, but they're all down for the past 3 monthst. Some of them have been pummeled, like NewScale, SMR, pummeled. Oklo down 50% over the past 2 months. 3 months down a little bit more, but they're still up, with the exception of NewScale. They're all up year to date because they had such a strong 2025.
That's correct.
And they've
but I
had
mean,
massive
well off of its highs. I mean, you know, back down to numbers they haven't seen since they went parabolic, right, TP?
That's exactly right. And as we scroll down a little bit, we'll talk about the volatility of these animals. And the thing is, when I write the cherry picks or even the cherry bombs, it's the things I talk about are for context. You know, I talk about the Army coming up with their programs, things like that. Those are just context. The news is simply context to talk about a trade. Because if all I talked about was volatility and liquidity, well, these things would be 2 sentences long and you know, okay, whatever.
It'd be boring.
So the point is, the interesting thing, Tony, what you were talking about, what you just mentioned is they came off their highs. And what's interesting when you look at the implied volatilities, the nuclear stock IVs graph, their IVs have fallen at the same time. That is very unequity-like of them. If we can scroll back up just a little bit on the screen to look at the previous, can we scroll up a little bit to look at the nuclear stocks IV, not the IV ranks? Anyway, let's keep this going. The point is, And this is what I was thinking about, Tony, is the excitement on the upside. It was like you were saying, it was, irrational exuberance. It was just crazy on the upside. And they jacked up the out of the money option prices. They just, who knows how high these things could go. So they jacked up those prices, jacked up their IVs, and you saw these things of trading over 100% implied volatility. But over the past 3 months, as the stocks have come back down, their volatilities have dropped. That also translated into lower IV ranks. But these things are still 30, 40, 50% IV ranks.
Oh, yeah. I mean, you look at SMR, because I'm going to see what you're doing here, but volatility in here, 90 to 100% implied volatility, which tells you, that this move, that is a huge move, it could continue to be, this could be zero in like the next year.
Sure. Stock could go to zero, stock could double pretty much.
Yeah, or double.
Saying, right?
Right. You don't know.
Yeah.
Okay. But that's true of anything. Okay. And the question is, do I get rewarded for taking risk? Okay. I got to take risk in every trade I do. Nikki, you do. Tony, you do. That's what we do. You get a hunch, you bet a bunch. Well, you don't bet a bunch, but ones, twos, whatever, right?
Yep.
You have some opinion about a stock, you put a trade on, you put an option trade on. The question is, Nick, am I getting rewarded for that? Yes, SMR could go, we can talk about that, but SMR could go to zero, 100%. But the point is, am I collecting enough premium because of that 90% IV to reward me for taking that risk? That's the question. So as we go down here, the IV ranks are pretty strong. And I talk about the liquidity of these things. Okay. Oklo is by far the most actively traded. No question. Oklo is a very it's kind of the bellwether stock for the nuclear industry. And that's great. Okay. Nothing wrong with that. But SMR and Lightbridge, LTBR, are also fairly liquid. Okay, it takes a little bit more work to get those orders filled. Excuse me. But I was considering those three stocks. The other two, like NNE and LEU, a little less liquid. They're also a little bit more expensive, like LEU. $200 whatever stock price. I was looking for things a little bit cheaper to make them more accessible for people. Okay. So let's scroll down and actually look at some of the trades. And to your point, Nick, can these things go to zero? They absolutely can. The issue is the option markets don't necessarily agree with that. Of course, anything is possible. So I looked at the skews on these things. And the way all I do with these skews, take the current stock price for SMR, 60.92, it's close enough to 17 to do the analysis. Okay. Then I go 2 points down to the 15 puts, 2 points up to the 19 calls. I look at the ask price for the 15 puts and the 15 calls. Which one is higher? That's it. That's all I do. There's no
magic
math
to it. Right.
No, nothing. Tony, that's what we used to do on the floor before computers.
Sure.
Okay. It was a quick way of evaluating it. So all these stocks, the options so skew to the upside. So that says not that the stock will go up, but the market sees risk to the upside. That's where it's placing the risk. So for this SMR, okay, maybe you think it might rally a little bit. Maybe you're bullish on maybe you think it's oversold. Like I said, it's got a high IV rank. The 14 put gets in. I do have a price on there. I can't remember what the price is. It's 60 cents. 60 cents right there.
It's right around
there. So it has an 83% probability of earning $30 in the next 31 days. And typically that 50% profit comes in the first 10, 12 days. Okay, so you might be able to take this off around 21 days for a 30-cent profit.
Or you
say,
become, sorry to interrupt you, TP, or you become a little bit more aggressive and you go closer at the money, right? Like Nick just sold, because you mentioned this, and it's not something we really have looked at this ETF, but it's got great tight markets, penny wide markets, basically. 2 cent wide market. We sold the puts, the 16 puts at $1.35. So we're fully supporting you here, TP. I want you to know it's not falling on deaf ears.
No, thank you. Thanks, Tony. It's the same idea. The 16 put is just another approach than the 14 put. That's it. Here's another thing that's interesting, Nick, and I don't know if you can see this if you did the trade, you can see this on your platform. The actual capital requirement of that trade is about, I don't know, I thought I saw yesterday it was about $200, $300. And something like that.
Yeah.
And in a margin account.
Yeah.
And for a $30 profit over 30 days, let's say maybe it takes you 30 days to make half the profit. That's a fairly good return on capital, like we talked about yesterday. And SMR as a $17 stock is something that people with smaller accounts can trade. If I have a $2,000, $3,000 account, I can step in and try a naked short put in a stock like SMR.
Right. I mean, we should.
To your point, go ahead. I'm sorry.
No, I'm sorry. We should say, I mean, there is a, even to the end of the month, the end of the week is $1 expected range in this. So it does have volatility to it, right? I mean, it's 100% volatility in SMR. So there is risk that you sell something that's, $2 or $3 out of the money with the expected move being $3, that you will be tested, right? I mean, if it's
100%.
Yeah.
100%. Yep. But also realize that, your max loss is $1,340 if SMR goes to zero. Yeah. Could it go to zero? Yeah. Will it go to zero in the next month? Probably not. The odds are against.
The market's spending a lot of money.
SMR is a fan favorite too.
Is it?
From Option Trading Concepts Live. Mikey's girlfriend's cousin works at the company. He comes in and chats with us, or used to chat with us in my former show with my former work wife. And so I've actually traded SMR quite a few times. And so I'm.
Well, tell them to get their act together, will you? Because SMR.
I sold the puts. I sold the at the money puts. That's as good as I can do.
Right. No, you did fine. No. Tell them to get their act together.
I know.
So rally a little bit.
Yeah.
And that's all it takes. That's all it takes. Yep. And then I did the same thing in Oklo. And I don't know I think you guys were looking at the 70 put in Oklo. If we scroll down, same situation in Oklo. Yeah. The skew is pointed towards the upside. Okay. I think you guys were looking at the Jan 70 put. I talked about the 65 put.
We did the 65s, so we're with you.
You did the 65. Yeah. 86% probability of making half the max profit. What's the IV in there now, Nick? What's the volatility?
About 100, 98.9. So you got, that's in a sea of low vol, like the market that we have right now. These few stocks, but these have, these things move. So you got to you got to size them appropriately. But these are the kind of spots that you look for when volatility in the market is low.
Mm-hmm. That's exactly right. And so Oklo is a little bit more expensive. It's an $82 stock. So the margin requirements are higher. You're going to need a little bit bigger account to trade this than an SMR. That's just the nature of the margin requirements. Mm-hmm. But if you have enough money, and Nick, to your point, if you're willing to take the risk in this stuff, you can be rewarded.
For sure.
Absolutely.
So do I know these things are going up? Do I have any idea which way they're going up? Nick, you got some friends in the industry. Maybe you know. I don't know. But I do know that these, as you're pointing out, Nick, the high implied volatilities can reward me for taking the risk. That's all.
I like it. I would like to just add a couple things from the chat, though. I would like to update you. There's a couple people calling out that, the tourist farmers only eat the eggs on their farm. I think they're throwing a little shade at you about not, going with the alpaca, shaving the alpaca, making the throw pillows for us. So there's a little.
TP can take it.
Fine.
There's a little shade. They're calling you a tourist farmer, but I know that's not true because I know you got.
You want to pick a fight with me?
No. I'm just telling you, the chat.
I'm not saying you, Nikki.
This is the chat.
You and your dad are smart enough to do that. You talking? Somebody's out there.
Yeah, they don't know the TP Farms. That's a legit farm. That's a legit farm. I know that. I also have an update. I don't know if this is a real alpaca or something naughty, but Frankie is going to send you a picture of his alpaca.
He did. It's legit alpaca. It's a birthday alpaca.
Okay, good.
Birthday.
All right, that's
not birthday suit.
It cannot go through the work
I get other
email.
things on my
I'm just
birthday.
warning
Once
you.
a year, I get it whether I want it or not.
That's the homo.
Unless I'll pack his pack his code for something. It was always a cup of coffee.
Well,
for me.
that's what I was wondering if it was if you were
Right. I don't think so. I don't think so.
Very good.
So, guys, that's all I got for you.
TP, you did wonderful. You really did. I'm going to give Nick a little bit more food for thought. You're up about $150 on your gold. You're basically unchanged on your silver. So the gold ratio spread was the right play to make at the very least. If you don't want to take it off, it was.
What do you guys?
Do you want me to give you one? You want me to do it?
Long 2 gold, short 1 silver.
You want me to do it?
I want.
How does Daddy do it?
I want you.
How does Daddy do it?
That's right.
The crowd's been waiting for that.
The silver has been outperforming gold over the past couple of weeks.
Right. So we sold silver.
Yeah,
and bought
fading silver, getting long gold.
Yeah, 2 to 1 ratio.
And there's some questions in the chat too. Just do we want more alpaca pictures? If they're real alpacas, we'll take the alpaca pictures. Okay, none of the other stuff.
We should put it on the website, instead of sending kid pictures and stuff. Send your alpaca picture.
Yeah.
How about we do a GoFundMe for my alpaca farm?
Hey, that's an excellent idea. Let me look into it. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with the trade desk coming up next. We're back in 90 seconds with Tasty Live.
Thank you,
TP. Gonna go to Florida. I got Rob. Rob in Florida. What's up?
Hello, Tony and Nick. I am a big fan. My wife and I watch you guys for hours and hours every day. You can be very, very proud of your son. He is doing a great job. I really didn't know anything about stock prices or options or anything until I started watching probably 500 hours of Mike and his whiteboard from years and years and years ago and learned all about it. And we've been trading actively since February and just couldn't be more pleased.
Awesome, man. Thank you so much for the kind words. Really do appreciate it.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
On the subject of bonds, let me now expound.
Swoons, they will, nay, must someday turn around. Oh, cursed bonds, will you not soon fall like rain? Quit this parched desert of misery, I can take no more pain. With thy nimble run, I admit I am impressed. But climb no higher, or I shall be depressed. Ye tasty traders, all now hear my plea. This position chafes worse than the bat to me. Markets, this is no time for foolish frivolity. Will ye not cease this fatuous flight to quality? Oh, if I could, I'd wave all my magic wands to sweep away regret from shorting bonds.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Nicky, we are back, son, and you know what that means. You know what that means?
Oh, I know what that means.
Time for this, man. Tasty Trade World Headquarters and the trade desk, my friend and yours, Q. How are you?
Fellas, how's it going? Doing well. How are you?
Good to see you. Good to see you. How's the trade desk today?
Yeah, good. Actually, things for the past maybe like week or two have been a little bit slower, I guess.
Volatility would echo that sentiment.
And like it's also starting to get holiday time as well, things like that, which is, go ahead.
I have to interrupt your previously scheduled programming.
How does Daddy do it? That was all you.
To announce that Nick basically scratched, he has a gold-silver pair where he bought 2 golds.
Oh, we took $300 out of that.
I was going to say, you scratched the gold side of it.
Yeah.
And you made about $300 on the silver side of it. It doesn't matter where it comes from. A moment ago, just before the break, the gold side was up around $100, $150 or something, and the silver side was unchanged. The heavy side of that spread seems to be silver today, the way silver has been moving back and forth. Gold has been in a much tighter range than silver. So it would be expected that if you have a profit, bigger profit, or a larger loss or a bigger profit in that it would come from the silver side. Kind of going back to why you just wanted to trade it, and you did trade originally just the short silver side. That's the side that has the movement to it as of right now.
Hey, Nicky, that's a good job out of you.
That's a great job out of you.
That's why I had to give him.
Oh, there we go. That's respect. Yeah. That's much respect right there.
He's calling it the way he sees it. I mean, we're on.
He's good for like one a week. You know, I gotta like, you know, really exaggerate it.
It's fair. It's fair enough. It's fair enough.
Amazing.
Fair enough. Hold me up like an old man. That's fair. Even the S&P's down 26. Volatility down 14 cents. It's about as low as we've seen in the market. Actually, it's the lows of the market. NASDAQ, the lows of the market. Russell and the Dow still up only a skosh. Okay, up only a skosh. Trying to help the market. That's all I can add.
A little funky. You got Bitcoin up pretty significantly.
Yeah, off of its highs though by about $1,000.
Which one's lying? Who's lying? Bitcoin
Bitcoin's
or
lying.
You think Bitcoin's lying?
Bitcoin's always lying.
You think so?
Yeah. And volatility looks like it's a head fake right now.
All right.
But we'll see. Anyway, Q, back to the previously scheduled programming. How are you?
I'm good.
Trade desk a little slower with volatility being lower.
It's a little slower, which is a much welcomed pause, I will say, because we've been getting slammed for.
You don't get paid by the
past 6 months. We do not get paid.
You don't get paid by the email.
We don't get paid by the email.
And you don't get paid by getting the lunch.
We don't get paid by getting lunch. No.
That's a nice perk.
But it is a nice perk.
Yes,
indeed. I do enjoy the lunch. Because I remember there were talks like, is the lunch going to go away?
We've been waiting for that ride.
Sorry. Yes. You're right.
I apologize for interrupting your trading, fellas. I mean, it looks like I'm coming in at a bad time.
No. Hey, it's a trading show. We got to talk about the trades. Did you
scalp your NASDAQ futures for basically a scratch?
From yesterday?
No, today. Did you?
I didn't do any NASDAQ.
I'm sorry. That's gold. I apologize.
Yesterday was a clinic, but yeah.
I apologize. I made a mistake. Forgive me. My eyes are not what they used to be.
Yeah, no.
Back to you, Q.
And
Sorry.
feel free to interrupt me anytime. I'm not one of those people that's like, no, you can't interrupt me. Interrupt me anytime.
You used to get interrupted. I mean, if you're talking on a phone to a customer, if I was calling you in and you were starting to yap, and I would interrupt you every time you were.
Sometimes you get interrupted. Sometimes you're the therapist. Sometimes you're the punching bag. We wear a lot of hats.
You do wear a lot of hats on the trade desk, most certainly.
Yeah. And so, I got a question for you guys. Sure. So we recently had a YouTube short or reel, whatever you want to call it, posted from the Tasty Trade YouTube channel. And it says, what does resetting your portfolio mean? So I just want to ask you guys, as the year's coming to an end, how are you guys resetting the portfolio? Is this something you do? And then what does that mean to you?
It's a great question. We actually had this on a confirm and send earlier this week. I think, for our style of trading, it happens kind of naturally because we trade on such a
relatively short.
I guess it's kind of like a medium-ish time frame. 30 to 45 days is like our typical time when we're putting trades on and we're taking trades off with somewhere around 20 days to go till expiration. So you're kind of cycling every 30 days. And when you get to an expiration, you're usually lightening up positions in this time frame, and you're starting your new positions. And the new positions we're starting are January or February. We're starting those kind of new positions, that kind of fresh slate.
So our delta's a lot smaller, and we're looking at our outlook is a little bit different because it's changed from month to month, hopefully. With the
so you're kind of my 2025 is kind of done already, whereas mostly done.
Yeah, looking into 2026 with the new expirations that you're trading now. Yeah.
Yes. So it kind of happens naturally. I think a lot of people.
But your January P&L is not done for the year. I mean, you still are going to have risk on.
Oh yeah.
Because your positions are in January and February. Your December P&L isn't done because you still have market risk no matter what month you're in. Right.
Yeah.
You always have market risk.
I'm talking about it.
But you don't do too much. There's no tax harvesting.
No.
Because we don't really trade stock. That's of a stock thing. For us, it's really just rinse and repeat. We probably rotate the different stocks because the herd and volatility kind of moves in waves. Right now, it seems like the NASDAQ is starting to catch a little bit of a bid in volatility. And the Russell and the Dow is kind of less volatile at this moment, but that's subject to change, in a day.
Yeah.
It's just that you're always on your feet, so we don't really reset.
So you guys are always constantly.
If it's December going into January, or it's July going in, June going into July, it makes no difference to me.
Yeah, I will say, because the new year, when it comes to trading, it's sort of arbitrary, right? It's just another date. So I will say, though, I do, in my trading, I do use that day to just reorganize, make sure everything looks good. I don't have any stragglers, that are getting.
It's probably prudent.
That I'm not paying attention to. I'll use it as hey, even though it's arbitrary and I should, maybe be doing this more often, but it's just hey, make sure everything looks in line to, my investment goals and my trading goals and ththings like that.
You were right on Bitcoin. It just dropped $1,500.
Yeah.
And vol is basically unchanged.
Yeah. Bitcoin 88.4 after getting up to 90,500 just dropped about $2,000 just a couple of minutes. Bitcoin was the head fake for sure. Oil up 73 cents, gold up 31, silver up $2.27. That's about a 3.5% moves up around 4.5%.
That Tesla butterfly too. Stock is down $5. It's moved about $1.
Right.
On that, because
you're out of the money. Call spread loses some value.
It's got basically no delta to it.
Right.
Because you kind of.
It has time, and it says time.
Time, but you need that kind of little bit of a down move.
Right. And you got it.
Perfect spot.
Yep. And even the S&Ps are down 35, about $4 off their lows. Volatility still unchanged. Much like yesterday, even the S&Ps were down around 50. Volatility wasn't up that much. We got the same thing so far today. How was the volume yesterday on a percentage basis, day after day?
I think it was. I don't usually pay too close attention to the volume, but I think it was still pretty high. And it was a very active day because we were choppy markets.
Yeah, it was definitely a choppy.
And then towards the end of the day, they just goosed them all the way up, and then right after the close, fell back down or into the close as well, and then after the close, the futures. But Yeah, I mean,
interesting. TP was
active
on
markets.
a moment ago talking about some of these high-flying energy stocks. It'll be interesting to see from a tax harvesting point of view from funds where, you know, some of these funds are going to have good gains in them, and some of them that got on late in the cycle are going to have some losses on them. I wonder if there'll be some pressure or at least volatility.
Yeah, I wonder what that's going to look like. Actually, yeah.
Yeah, when you just made me think of that when you said, you know, do I do anything for the end of the year? I don't do anything for the end of the year, but I know funds, money managers definitely do some tax harvesting.
Yeah, and we'll get customers as well talking about like their taxes. You know, what's my taxes expected to be like?
Sure.
You know, for the
You can get that all on the Tasty Trade platform too.
Yeah, my.tastytrade.com under manage on the left hand side under tax center. You can download like your year to date file and see where you're going to be. And we actually, so about some future demos that we've got coming up, that's one of the demos we'll be having is how to go over all your tax stuff. You know, I mean, we're not registered tax advisors, so no.
But you still have the tools to help people.
Yes, exactly. Yeah, so we're not going to tell you like how to file certain things, but we'll tell you where to. Sorry, you know, no free tax advice here, but we'll tell you like all the tools that you can use on the Tasty Trade platform to see, you know, your specific gains. You know, like things like SPX and the futures that are 60/40, things like that. And so just so you know,
advantageous tax advantage.
Yes, yeah, which is advantageous. And so just to see where you're at for April. And we've got a lot of good demos coming up as well. Like the IRA one is the next one we'll be doing in January. So that'll be a really good one because you can still contribute in the IRA all the way out to tax day in 2026. So that's something important to keep in mind.
tastytrade.com/webinar, tastytrade.com/demo, tastytrade.com/demos.
There we go. All right, let's get into this list, fellas. Top 20 symbols going through the system and their IVR. At number 1, no surprise, we've got Tesla, 11, NVIDIA, 6, Netflix, 21, SLV, 83, Broadcom, 14, Oracle, 50, GLD, 41, Google, 10, iBit, 48, AMD, 19, Micron, 59, Robinhood, 17, Amazon, 9, Palantir, 7, CoreWeave, 21, Meta, 2, Apple, 1, TQQQ, 25, SoFi, 13, and Microsoft, 10.
Good list out of you. Good job out of you.
Thank you very much, fellas.
What do you think of this market here, Nick? Even the S&P's down 35.
Doesn't look great.
Does not look stellar. Volatility still unchanged. What do you think?
I'm routing an order to close that. We did a Jade Lizard in Meta.
And you got your
820. So we got like $145 out of that.
That
like
was
5 days.
Pure directional trade, right?
I mean, Jade Lizard. So you got a meteor put, but you're selling a call spread too. So
yeah, I mean, the call spread gives you some time, but the heavier part of it is going to be you get the delta from the naked put, right? And Meta's up $1 and change today. So you're able to take that off. Good job out of you.
Yeah, market doesn't look great. I think you nailed it with the Bitcoin and vol lying to us today.
Yep.
So that's what it looks like.
Yeah, but it doesn't look like it has the velocity of the move. We had about a $30-some-odd expected move earlier today on the E-mini S&Ps. You've got about still a $31 expected move on the E-mini S&Ps. I think you might be near the low end of the range. NASDAQ is the weakest of the group, so keep your eye on that.
Yeah.
Q, thank you so much for coming on.
Thank you very much. Thank you.
Always a pleasure to see you. Are you ready to take a 90-second break?
Yeah, sure, great.
We can get Liz and Jenny in here. Just as I say that,
live from the floor of the SIBO. It's always electric.
Ladies are alive. Yes. Just as I say that, even the S&Ps go down 41 and volatility upticks 5 cents. We'll be back in 90 seconds. This is Tasty Live. Got that wrong. Peace.
Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
tastytrade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
and Jenny Show. My name is Liz Deerking. We all know the beautiful brunette next to me, Jenny Andrews, but today we have a very special guest for you. Jenny, bring it in.
We have Rob Hocking joining us today. He is the global head of derivatives from the SIBO. Thank you so much for coming on our show
Yeah,
today.
thanks for having me. I think, as they say in the radio world, long-time listener, first-time caller. So thanks for having me on.
We're really excited to have Rob here today. Just would you do us a favor? Now I can give your resume, but why don't you tell us just a tiny bit about yourself?
Tiny bit. Okay, started in 2000 as a market maker. Traded in the SPX. I've traded in the VIX over my career. Basically, in call it 2018, left the trading world to come to the exchange side. I've been at SIBO for about 7 years, running product development and now global derivatives.
Wonderful, yeah. So once again, he is a product of this environment, just like the three of us.
Just like the two of us. We came on in '97, so you were here just a few years after.
Yeah, it's kind of it's an environment you can't forget, and clearly you can never get away from.
Oh no, I said that earlier. This is Hotel California.
Exactly.
You can never leave.
But we do love it here. We do love it here.
Absolutely.
And we love options. We love trading, and so do our viewers. Let's talk a little bit about how hot options trading has become since COVID. It's exploded.
How about we just the options in general, or are we going to talk about the SPX?
Just options in general.
Yeah, I mean, obviously, everybody's seen the volume numbers. They've exploded. And I think the beauty of that is customers are learning that optionality is a good thing, defining your own outcome of where you want to take your investment. And so you hear from all of the different platforms that, call it 4 to 8% of a lot of customers on these retail broker platforms are options enabled. And so to me, we're in the early innings of that, and it's exciting to see in a world that we know so well and one that we cut our teeth in, to now see retail customers benefiting from the same things that we learned how to do in the spread trading and different strategies, income generation, to now see that expand into retail is a fun time. And to be honest, given those percentages of who has access at this point, we've only just begun.
So I love that you said that, because I say this is in its infancy, but I don't have the numbers to back it up. He's got the numbers to back this up.
Well, and it's crazy to say, like, anything that's 52 years old, you rarely say it's in its infancy. I'm almost 52 years old, and I'm clearly not in my infancy. But it's an exciting time. We're seeing more and more people entering the space, and quite frankly, more and more people seeing the utility of the space, which is the best thing. And so education is key in that. Thank you for having me. I think, opportunities like this to talk about options are great, and teaching the market. We've also introduced a bunch of new programs out of our Options Institute to try to do the same thing, where we keep trying to build just user adoption and understanding of how they can benefit from defining their own outcome.
Now, can anyone out there sign up and be part of the Options Institute?
100%. Go to our website. I believe all you need is an email, and you can sign up for a lot of the online courses that we're giving in our learning portal.
Options Institute is a long-standing, I remember that from years and years and years ago.
Yeah, it's been around forever. We just hit our 40th anniversary. So yeah, it's great. We continue to evolve the product offering. The class is available. The team's been doing a wonderful job. And so and quite frankly, if any of your users have things they want to see, classes they want, please reach out to us, and we'll make sure that happens.
Yeah, we love it.
And who would they email?
That's a great question. Probably just info@sibo.com is a great place to start.
Okay, great.
You're good about that.
Great.
Okay, so now I want to bring it back to the retail trader, if that's okay.
Absolutely.
You can back up some of the things that we say on this. We just say it. We don't know if it's true or not. Maybe you can edify us. Is it true that how much of the percentage, or give us a number or quantify how much retail SPX is?
So it's a great question. I'll give you a few numbers.
Okay.
So first off, in 0DTE, we'll focus there first. The amount of volume coming in 0DTE from retail broker platforms is over 90%. And so it is a huge number, and it's actually been that way pretty much from the start and the launch of 0DTE. Now, I always like to qualify that, because certain people coming through retail broker platforms are not necessarily your traditional individual investor, or what we may think of as retail. But that group continues to get more and more sophisticated. I would say right now, if I were to go to retail specific, it's probably north of 55, 60% is what I'd call that individual investor. And it's great. As I mentioned, they're getting more sophisticated. We're seeing things like algos being used, bots being used, figuring out, the spreads you want to trade and how to do them more efficiently and quicker with all of the different functionality.
Okay, hold on one second. I'm going to let Jenny jump in because I don't want to step on Jenny. But so you're saying 55% of the SPX 0 DTE volume is retail?
Yes. Yes. So 2.6 million contracts a day, back out 55%. You can do the math.
So we have taken over.
You have. It's been amazing.
And it's just in its infancy.
It's hard to tell. You never know. We get, obviously, at the exchange asked for volume, asked to predict the future all the time. Where are these products going? And I get real nervous in doing that. But when I think of, okay, here's the volumes we're seeing today. Here's the access point that people have. If only 4 to 8% of these platforms have access today, then it's has to be in its infancy.
And when the SIBO created the 0 DTE, they probably had no idea how it would take off.
So that is a funny story. We absolutely did not. I would argue, and I've used this analogy a few times, hopefully I don't get in trouble for doing it here, but it was kind of the thing like, you had one of the number one selling trucks and somebody calls you into the Ford F-150 and says, can you put air conditioning in the F-150? And you're like, wow, yeah, that makes sense. Why not? I drive my truck, air conditioning would sure be nice. But you think of it as just kind of an extension of the product. It's not a new product. You're just adding Tuesdays and Thursday options to complete the full week. And what it allowed people to do is completely change their investment strategies. And the growth that we've seen from it is just amazing. If I think of volumes back before 0 DTE, we were in the 1.5-ish million options a day in SPX.
SPX was always the biggest pit on the
Always
trading
the
floor.
biggest.
Yeah,
always.
the biggest.
But to go from 1.5 to now, I think the average roughly between the last fourth quarter here, October, November, December, we're looking at 4.2 million options a day-ish, roughly. So 1.5 to 4.2 off something that was just adding Tuesdays and Thursdays into the mix, and now you just had options Monday through Friday. But it truly changed how you manage risk. It changed how you could manage downside risk. It changed how you could overwrite strategies and sell spreads. And it's been amazingly successful.
And we've been doing this. So we've been doing this show for about 15 years, and I can honestly say, I think in my opinion, the 0 DTE SPX or 0 DTE cash settled. So I know there's 0 DTEs all over. 0 DTE cash settled has changed, is the biggest game changer I've seen in the industry.
Absolutely, and I'm
not just saying that because you're sitting here.
No,
I'm not just saying that because we're here. We say that. I say that all the time.
And it's true. Whether I work for SIBO or not, it's just true. And it's the cash settled aspect of the product. When you can, because you're turning over your position so frequently, and every day it's expiring, and you're starting over the next day, to have a physical element that you would have to deal with coming into your portfolio, a physical stock, just makes it that much more operationally intensive, harder to manage. With the fact that your positions are just continually expiring into cash, and you have now either more or less cash, depending on how good you did that day, to now manage the next day, it just makes for a very, very easy product to use.
So with these cash settled products being so hot, SIBO decided to create a new cash settled product.
We did. We just on a week ago, this past Monday, launched the Mag 10 product. And Mag 10 is just the Magnificent 7 plus AMD, Broadcom, and Planter. We think it's just a better representation of so we got a lot of inbounds that people wanted to trade more cash settled dailies in single names. Those aren't available right now. We're working through how we could make those available, but the non-cash settled aspect of single name options makes it difficult.
Is bandwidth still an issue? I remember being on the trading floor years ago, and they'd be like, it's a bandwidth issue.
I don't think so. I think technology has been able to keep up with the advent of cloud store. I think most firms can keep up. I know the exchange can keep up. But at this point, it's more how is the product designed. So the Mag 10 is just targeting giving people an opportunity to get more exposure in a tighter basket, closer to that single name representation of some of the stocks that people are trading the most these days.
Yeah, well, it's not on the Tasty Trade platform yet, but I know everyone's excited about it. It just came out last week, so we've seen this with all new products. It takes a little bit of time for them to start building up steam, but everyone's eagerly awaiting it.
Well, and we're excited that you'll be adding it to the platform. On our side, too, we're building a market. It's brand new. I think we've traded roughly 5,000 contracts since launch. But in addition to that, we're also working through the regulatory process to add the daily expiries, so that those aren't even offered yet. So, you're not behind. We're excited to be doing this together with the market.
Yeah, and so, and kind of springboarding off that too, those names are names that, and I like the 0DTEs I use. I think it's the best teaching tool that I've got for the younger viewers. Like I've got my son doing that too, and so that's also names that he knows. So instead of me being like SPX, he's like, what's SPX? It's everything.
Absolutely. And that's kind of the key to this. I feel, I've often said people have more of an emotional attachment to single names, whether you like the company, the management, what they stand for.
You can say you don't, but everybody's emotionally attached to something.
Absolutely, absolutely. And I think, when we can service that need, provide the cash settled aspect that's so valuable to how people are using the products today, I think it's a home run.
And the cash settled is huge for the young people because the young people have smaller accounts.
That's right.
And they have to deal with the pattern day trading. So if it's cash settled, they could put on a position and just leave it.
Let it expire.
Yes.
That's right. It's so much
instant
easier.
gratification for them. You find out if you're making money that day instead of having to wait 45 days till expiration.
Well, it's funny you say that. Yeah, that is the trend of the market. I think it's incredibly exciting, and we could probably, maybe I'll come back, we can probably speak novels even about the event contract space and how instant gratification is, I think, driving a lot of that, and it's exciting times.
Yeah, for sure.
So what is next for SIBO? What's coming in 2026? Are you working on any other products?
So yeah, we will, I would argue, we just launched Mag 10. We hope to continue to grow that with folks like yourself.
I don't know if you caught our segment yesterday. We filmed from in front of the Mag 10.
I love it.
They were a great crowd.
I love it.
They were. You know
Absolutely.
what? It is a great crowd over there for the Mag 10. Some veterans that have been on the floor that we knew from when we were on the floor in the 90s. They've been here for 45 years or so. Yeah. And those are the market makers in the Mag 10.
Well, Rob probably knows all these spaces.
Yeah, I do.
Well.
I do. And luckily, they're not throwing things at me right now. And if you didn't notice, like even some of the new products we're bringing to the floor, we really want that floor presence. And so we're looking to bring more products to the floor, have a pit environment, because we do think it adds a lot of value to the overall liquidity profile of the product. As for other new things, on Monday we launched 2 continuous digital futures, which were a new thing. It's a hot topic. A lot of people like trading more in the digital space. We've had pretty good success since launch, and we're on day 3, but we're already with our Ethereum future trading, in the thousands of contracts a day, which is great for the start of the contract.
That's wonderful.
And then into next year, we'll be leaning heavily into the event space and how SIBO can get involved in that. I think you've heard from Craig and others on the SIBO platform that we're staying away from some of the exciting things like sports, and we're focusing more on financial derivatives, economic derivatives. But given what we've seen in 0DTE, and quite frankly how I believe 0DTE is being even used as an event contract, it's exciting to kind of expand our user group into that space.
For sure. Okay, so not to put you on the spot, I know we asked what's coming through the pipeline. I don't know if I can ask you this question, but I'm gonna do it anyway. Okay, SPX is trading 60. Wait, I can only see the SPOOs right now. Where's SPX? I can only see the SPOOs.
SPX 6750.
6750. Okay, I'm going to ask you. Because this is
down
fun.
50.
I know,
down
that's
50.
What I'm saying.
I didn't see that coming today.
I was trying to alert her of that without alerting her of it. Okay.
I didn't see that coming today. I thought we'd get a little rally today.
And once again,
why I'm sitting here today is because I stopped trying to make those calls.
Nothing we do is a trade recommendation, but these are just opinions. Where do you think we're going to be? Do you think we're going to be up or down for the day? And where do you think we're going to end the year in SPX?
Ooh. Up
Once
or down?
Again, just opinions?
Just opinions, yes. Massive opinions here. I feel like down on the day, but I do feel like it will be up from here, but down on the day.
She loves to ask people if they believe in the Santa Claus rally.
So because the traders won't talk to us, so as they were on bio, I was
Santa
like,
Claus
Santa
rally.
Claus. Really?
Having been on the floor, it was a thing, no doubt about it. I think it's not surprising you're seeing volatility come down in December after a pretty active October and November. I think 60. It's so hard for me because I look at the market and I see 6,800, and having the days of when I traded, you're just like,
it's insane.
Yeah,
right?
it's hard to say we keep going, but I think you have to say we keep going. There's momentum behind this, and I think there's a great regulatory environment that's pro-momentum in this rally.
Well,
and
makes
I
you
think
feel any better? Jenny and I said 7,000 before the end of the year.
Well, we were hoping we had more of a long portfolio, and we were hoping, but
I think you could hit it. It's not unreasonable.
It's not impossible.
I mean, what VIX is 17, 16, 16.
Right
Actually, I think it's settled today. The settled today at 16.
Oh yes, this is expiration.
It was.
So
It was. We were excited. We traded just under 140,000 SPX contracts as part of the VIX settlement, which is good. It's good to see the liquidity in the process. But so VIX 16. What is that? A 1% move a day.
Yes, it is.
So
see, look at that.
Look at that.
We talk about that all the time.
There you
Not
go.
a lot of people know that. That's like an old trader trick.
It is. It is.
It's funny though, you say, coming from the trading floor, trading for so many years, you see 6,800 and you think, gosh, this seems crazy. We say that to trade, have an unbiased view of trading, you have to take a mind eraser. It's like you need
It's
the mind
hard.
eraser every day to
Yeah,
not think
Well, it's
back
hard to
of-
think back when I was running my sheets 25 years ago and you saw 1,300,
Yeah.
on your sheets, to think 6,800. It's
Once
been a
again,
great
Tasty-
rally.
Once again, Tasty Nation, he's using our verbiage. We say sheets all the
Oh,
time.
yeah,
and nobody
sorry.
knows what we're talking
Sorry.
about. I love it
Yes.
because, you had the sheets.
That's
what they were.
That's what they were.
sheets.
Yeah, that's how we valued everything and how we made all winning trades, of course.
Absolutely.
Well, thank you so much for joining us
Yeah,
today.
thanks for having me.
And do you have any last questions?
No, he's a very important person. We know he has a heart out because we are lucky to have your time.
Well, thank you.
While I've got you on air, so we can pin it down. Would you ever like to come back and join us again?
I would anytime you would like. I
asking
love
you
talking
live.
shop, so anytime you would like. This is fun. Thanks for having me, truly.
Oh, thank you for coming on. Everybody, stay tuned. We're going to take a quick break. We'll be back with some 0DT SPX trades. Stay tuned.
body totally bustin'.
Hello, everybody, and we are back. Our Superfly production crew changed our operations, and we're back at the SPX pit.
And I want to give a shout out to the SIBO and to Rob Hocking for coming on again. That was great having him. It's nice to hear the numbers and the volume and the figures behind all the action we see here every day.
It's funny, like I said, we say it. He's got the facts to prove it.
I know. So why don't we, on the heels of that, jump right into SPX and put on an SPX 0DT trade.
Let's do it, Jenny.
We'll join the, do you remember how many a day?
I don't remember, but and one.
All right, I'm going to jump right into SPX, and with SPOOs down 45.
Now, I've seen him as low as down 50, I think.
Let's sell a put spread, and maybe let's sell a put spread, and we won't take too much risk. If we'll make it close enough.
Oh, let's go with Jacob's study. You go $10 wide, 50 delta. You're going to
$4. $4.
The reason, okay, so $10 wide, we're looking at this.
I'm going to go $3.95.
Yeah, you're getting, your drawdown isn't much.
Filled.
$3.95?
$3.95.
Did you want a high five from that? Is that why you're like this?
Damn it. Why do I forget? Never let me do that again.
She's always holding her hands like this.
Never. Every time I say high five, I can't use my hand for the next hour. You're going to have to feed me at lunch.
I'll spoon feed you. It's going to be fine. It's so
all right.
funny.
Now, we sold that for $3.90. I'm going to put in, Liz wants to butterfly it off. I know we could get out, you could get out quicker if you just take a quick $100.
Well, let's put the butterfly in if by the end, because now we're only down 42, so if by the end, we'll take it off.
We'd have to really rally. You have to really rally to butterfly it off.
Yeah.
Unless we butterfly it off for just less, like butterfly it off for $50.
Deal.
Okay, we took in $3.95.
So then $3.45. You're going to buy the one for $3.45.
So I'm going to complete this butterfly, buy the 65, sell the 55, and do this for $3.45.
$3.45. And if at the end we're not butterflied off, we will cancel that and just close the trade. What do you think? Or do you want to just take $50 out of it? You can do whatever you want because SPOOs are down.
So I think we have a higher. There's a higher chance of taking, $100 out of it or $50 out of it.
$50, we can get $50 out.
There's a higher chance. We already had close to it. With the little bounce, we could get out of it very quickly.
You could put the order in to close it for $50 because if for $50 you won't get, unless a massive move up, you're not going to hit the other side.
What?
I'm going to blow your brain up right now. You could put an order in with the butterfly order in to close the original order for $50. If that fills, you
oh, that would fill before the butterfly ever hit.
It would fill well before.
Well, and I do want to bring this up too. Like, as far as if I'm butterflying off something, I do want to take in more than $50 to butterfly off something, because if it's all in the money at the end of the day, you get exercise assigned on every leg, on the 3 legs. So I think, and if you're going to butterfly it off, you need to take $100 out of it.
That's just my go-to rule is $100 on the butterfly off.
Okay, so I will, so $3.95, so I'll put this in to buy this for $2.95. $2.95,
and then put an order in to close it, and we'll see which one hits first. I mean, obviously.
Well, the close it'll hit first.
Yeah.
So if one or the other.
Yeah.
So $2.95. That will turn this into a butterfly where we locked in $100. We'll see if we can get that. We need a pop. We probably need spoos down 30, down 25, something like that to make that happen. But we'll see if we can get that pop. The spoos quickly went from unchanged to down 50. They can just as quickly go from down 50 to down 30.
Hey, markets move. Right?
It's one thing we know after doing this for decades, markets move. Markets move. Okay, so that is in there. That's working, and that will just sit there. Talking about 0DT SPX, you know him. You love him. Look at this guy. Jack, we were telling Rob about you. I told him SIBO pretty much needs to roll out the red carpet for you and take you out to dinner.
They should erect a statue.
Yes. So here's Jack. 3 double tranches of 0DTE, collected $33,000 in premium, watching Liz and Jenny in position for today.
Love it. I like to see what time he puts it on, because I know Jack Tucker's in our time zone.
So you see,
10 o'clock.
10:03, 10:03, 10:03.
So he's doing this at our showtime.
Showtime he did it, yeah.
Showtime.
It's showtime, Jack. 3 tranches.
It's amazing.
Yeah. Look, 20 lot, 20 lot, 20 lot. Big
Can we high five?
No way. Never again. Never again. Never again. You better hope I get soup instead of a sandwich.
To feed you soup?
Well, soup's going to be easier for you to feed me than a sandwich if my hand doesn't work at lunchtime. And my drink, too. Oh, I'm thirsty, Liz. Can you give me a sip of my drink?
Because of a high five, ladies and gentlemen. Oh, you know what they took away from us? Because of you.
Oh, yeah, we're not allowed. We're not allowed. Okay, so Jack, good luck. And it's pretty wide. It's a pretty wide iron condor.
It is a pretty wide iron condor, but I like watching. I love that Jack publishes everything. I love that he puts it out there for us to see the good, the bad, and the ugly, and how he adjusts. I saw something he posted late last night. I saw it. He didn't post it late. I saw it late, where he was adjusting everything yesterday.
Well, and he's doing a high probability trade. He's going out far with his shorts where he's got a high probability trade. When we're putting on this at the money spread and trying to butterfly it off, that's not, we're not doing 60 of those. Like we just did one of those. When Jack's doing 60 of an iron condor, he's got a high probability iron condor on.
High probability, high risk, high reward, because he's risking a lot more than we are. And that's another reason why I like the near term for us is you're collecting enough and your drawdown is small enough. Let's take a look at our Lennar, because that was something we did yesterday.
Oh, Lennar is bad news. It is down 740. So
it's not the end of the world because it was a defined risk.
No, but it's down beyond its expected move.
Yeah, that's what I'm saying. This is great that we did this instead of selling, I don't know, a put.
Yeah, right. Better having lost, $240 on our diagonal instead of having a naked put here, because Lennar is down 245. Is that surprising after Toll Brothers popped up on earnings and Lennar is down so much?
I heard Lennar pulled Toll with it. Check Toll.
Oh. Let's see.
But I mean, you never know. Just because the market does what the market does. Just because I don't know if the numbers were good or bad, but sometimes you'll see good numbers and the market doesn't like it.
And
it wasn't
Lennar,
good enough, right?
And honestly, Lennar wasn't down $7 earlier, but the market with SPOOs down 45, everything's getting pulled down. Toll is just up a little bit. It's not really moving. But a big mover today, big mover today is silver. So you take a look at silver. Another
rip your face off rally.
Yeah.
That's what I said. I said getting in front of this is like stepping in front of a moving train. I don't get in metal's way.
You heard it here, folks. You heard it here.
I don't.
I know.
Metals are they're and when the implied volatility is high, I think it keeps going in that trajectory.
It's wild. Silver's it's been crazy.
So
and
up,
this is one where they're not all following. So you've got silver up. Palladium is up too. Yeah, it is. I was looking at the wrong peak. Palladium is up $4 today.
Yeah.
Look at that.
Yeah. Metals are up too. So check gold,
just a
because I
weird-
heard gold was up more than silver, and I don't know if that's still the case, because that was when the market was up.
So what did we have? Silver up 3.3%.
3.33.
GLD is up.
Oh.
0.5%. No.
I had heard gold was having a bigger move than silver.
I don't know. Maybe.
I think that was one of them. I don't know.
Maybe. Again, it could have been, and you could have dreamt it last night.
No, I heard it.
It could have been. It could have been.
I heard Nick and I heard the bats talking about it this morning.
Well, this morning you could see, if I zoom in a little bit, you could see gold was up more.
Because I can't see anything.
If I zoom this in, you can see gold had this little pop. See
Okay, yeah,
see
there
that
you
little
go.
pop?
What's the high in it?
So it got as high as 399. Now it's 397. So
Okay.
yeah, this morning I can see it.
I think this morning gold was up higher than silver.
Yeah.
But hey, guess what? What did we say in the beginning of this? Markets move. It's been now 3 hours,
Yeah.
and that's an eternity in market time.
Okay, so
It was down 51.
I know. Like, where's that Santa Claus rally?
It's what, like Vecchio said. I don't know why we started whispering. Where's that Santa Claus?
Where's that Santa Claus rally?
Vecchio said it's after Christmas. It's the week between Christmas and New Year's.
Well, I don't know.
He's working right now. Santa Claus rally is when he's eating cookies.
What is taking a big hit? The only thing to see up, at least crude is having a little bit of a pop, because crude, we sold those puts, it was down yesterday, now it's popping up a little bit. So if you take a look at crude oil, we've got short puts in micro crude.
Yeah, we're up a little bit on those.
Yeah, it's maybe getting a little bit of a lift.
I'm trying to think if there's anything else we need
We
to
never got filled in natural gas. Let's see what that's up to. And when I say up to, I don't mean it's up. I just mean, like, what is it doing? Oh, and it's popped up a little bit. Popping up a little bit. Yeah. So,
like I said, when you look at the long-term picture of this, only because I know the price point of natural gas, it's still pretty high.
4. Now we're back to 4.
Yeah.
4 doesn't sound so good.
No. And when we were putting it on there yesterday, we were getting us down to the 3 level.
Yeah.
But even the 3, I kind of like my break-evens in the 2s.
Well, we
But
are
it's good to want
taking
things.
live tweets. Send us your tweets. Include the hashtag LAZJNY. Besides Jack coming in and Bob on Fire coming in with earnings, Micron and Accenture. We'll take a look at Micron today. We had. And look, Blue Wackadoo, he's in with his position. Happy Wednesday. IV ranked juggling around 16.6. Opened a 4-lot iron condor at 14 to 16 delta. 90 points wide between the shorts.
Yeah. Then went full scalpathon with 2 to 3 short MES contracts.
GTC's firing. Seriously, all over the place. Yeah. I mean, I really didn't see this move coming today. I thought today would be a quiet day.
I don't know. I mean, we've reversed every day for the last week.
Yeah, it's strange. Okay, I wanted to get to this. And here's Frank Walsh, the amazing Frank Walsh. He's out there in the chat. If you post something in the chat, Frank will share it with us on Twitter. Fazia comes in, taking advantage of the down move to sell ratioed strangles in CRWV and Jan, selling 355 puts, 285 calls, buying 160 put, all for a 610 credit.
So that's a broken wing butterfly? Or no.
So she's got the 60-55 ratio spread, but 1 put, 1 long, 3 short. And then 2 short, 85 calls. Let's take a look at that.
Here, I'm going to pull up her strikes, and I will tell you what they are, okay?
CRWV
in Jan. Sell 355 puts.
Sell 355 puts.
Sell 285 calls.
And 285 calls.
And buy 160 put.
And 160 put.
All for a 610 credit. Now we're 640.
So this downside ratio spread, and I like this concept. 1 by 3. We're used to a 1 by 2. Here's a 1 by 3.
Ratio is anything you want it to be.
Yeah. Especially if you've got a big down move and you're playing into a big down move, that 1 by 3, that could give you some extra bang for your buck.
It can.
But it adds a little extra risk. Then these a couple short calls. Well, most of your collection, I guess half of your collection is coming from the downside and half is coming from the calls. So if it runs up.
I kind of like the concept of this, even if it was a 1 by 2, but she's getting a lot of credit from there.
Yeah.
Even if you switch it to a 1 by 2, can you just remove 155? Okay, you're still taking in a credit. It didn't move your break even that much.
Yeah, but you're getting like $3 from that call. You're getting almost $3 from that call. Then you're not getting. I think she had to have the 1x3 in order to get enough from that downside.
I get it. What the issue is, and then there's no issue, but then the problem is you're double long core weave to the downside, which is fine. There's nothing wrong with that. Puts are neutral too. But you're almost banking with a ratio. You want it to go to it, not through it. You want it to go straight to that short strike, not through it.
Core weave is crazy. You know, I don't want to. It's not that far from where it was IPO week. So I don't mind. I kind of like the. And I'm gonna delete the calls. I kind of like the idea of that ratio spread.
Oh, I love the ratio spread. I'm a big fan of the downside ratio spread.
Are you surprised the 1x3 is only using $1,200?
No, because core weave is the one that gives us really good margining.
Yeah.
You tried to stop it, but they wouldn't let you.
I alerted some people about that margin on core weave, but.
Yep, but unstoppable. So I like that. I like the ratio spread. I like that it's $5 wide. You're taking, so you can make. Can you pull it up on the curve view?
Curve view analysis. Here we go. So you've got anywhere to the upside, you'd keep that 375. And all I'm doing is taking Fuzzy's trade and just like tweaking it a little bit.
Which is decent. Anywhere to the upside is pretty decent.
Yeah.
Getting 375 anywhere up there.
I do like this. And then you've got this peak here where you could make 872, but we're not playing for that. We're really playing to keep that 372. But then that long gives us a little bit more room before we would hit our break even on the downside, which is around 50.
The only thing I don't like on this is the amount of days on a ratio spread, but it's fine. It's still fine. I like it. We're taking in a decent amount where I don't mind it. You know, if I'm playing for the down move, if I'm playing to make the 800, I wanted it in shorter term. If I'm taking in that decent of a collection, I'm okay with it.
We could, for us, I know Fazia's, she's been trading a long time. She's comes up with very creative strategies.
What was the ratio spread?
We could just sell 155 put for $500.
Look at that buying power.
Well, right, because it's one put instead of three. Well, it was a 1x3, so that was like two short puts, and that buying power was 1,700 or 1,200.
Yeah, because you've got two puts and the distance between the spreads.
Maybe we just sell one put for $550.
I'm a fan.
I should have brought this to my high school class. Kids,
give me $500. Give me $550.
I'll give you $270 at the end of the month. So I kind of like, for us, just keeping it simple, 155 put. Now, her break-even was down to 50. And she was collecting a little more, but then she had the risk of getting long 200 shares instead of 100 shares.
Yes.
Yeah.
Yeah, but
there's
I like that Fausia
brought
the attention to us, and then we kind of switched
busy. It is busy. Like you have times of the year where the pit is thinner, where people they're not all here.
This is not one of those.
They're all here.
Yeah.
They're all here.
This is not one of those. But I don't think December is one of those months.
Right.
I think, a lot of year-end cleanup. Speaking of.
Okay, so I'm just going to keep this very simple. Sell the 55 put for $275.
I like it.
Using $500.
I like it a lot.
And then I'm going to jump right into the position page. It's really tempting. It's very tempting to think I want all $275.
Oh, we couldn't do that. Right now I want all $275. If we get $100.
So when you put in a GTC to take 50%, our research shows that's probably best practice, right? Best practice is taking 50%. If you get to that 21 days till expiration and you don't have that 50%, then close it and move on to the next cycle. That's what our research has shown. It works best, especially with evening out your risk, keeping your risk, it keeps your deltas a little smoother, which helps your risk.
Yeah.
I mean, one short put is one short put.
You're long stock. I mean, basically, that's all. That your risk is your long stock, and that's why I love. That's why we always say, if you don't know options, if somebody's like trading puts is too risky. No, if you're buying stock, you can short a put.
Right. If you're not afraid to buy 100 shares of stock, you shouldn't be afraid to sell.
You shouldn't be afraid to sell a put.
You can be smarter than that. But I know people say closing at 21 days or rolling out in time, it takes some risk off the position. It doesn't change, there's still one put to one put, but what it could possibly do is move the put from the 55 down to the 50 or give you a little bit of better footing. gives you a little more credit. It lowers your basis a little bit.
Yeah, and it's got a 23 rank, so I'm okay with this in core weave, and that gets us down to almost the IPO price.
I'm glad Fazia brought that to our attention.
Okay, let's go to Twitter, and then we're going to do the, whatever, I think it's the 8th day of Christmas, or 8th day of trading.
Oh.
I knew you forgot about it.
With so much going on today, I did.
Yeah,
I did. All right. Tell me, Liz, what is the 8th day of trading?
Oh, we're not going to go to Twitter first and get it.
Oh, yeah. What do you need? What do you need from Twitter?
No, did we get to everybody?
Yeah.
Okay, perfect. So you sing the song and I'll fill in the end.
On the 8th day of trading, the traders gave to me
Tasty Trade trading tools. So order chains, bracket, watch lists. So let's look at order chains and watch lists.
Who doesn't love a watch list?
Who doesn't love a good watch list?
Who doesn't love a? And you know what I'd like to see?
We use a watch list all the time, actually.
Okay, here's what I like to see. We're down. All right, SPOOs are down almost 1%. Nasdaq's down 1.5%, almost 1.5%. What's the big mover? What's the big mover in the Nasdaq? So if I go to watch list. And I sit right here at Nasdaq one. Here we've got the Nasdaq 100, and I can go to net change percent.
Oh, there you go.
Biggest mover.
Constellation Energy, of course. PLTR is number 2.
Oh, nuts.
AVGO is number 3.
Oh man, it's not looking good.
These just got added.
It's not looking good for the Mag 10. It's not. I wonder what the percentage that's down today.
Yeah.
Because you look
and
at
then
this, Palantir's
NVDA,
down.
AMD.
Whoa, down. Palantir down 5%. AVGO down 5%.
Now the next two aren't in there.
NVIDIA down 4%. AMD down 4%.
Yeah.
AMAT down 3%.
You got your Google in there too.
Oh, nuts. Tesla.
Tesla had a big move yesterday. Can we take a look at Tesla?
Anyway, you look at. Is this surprising to you?
Yeah. I'm not okay. So I will say, doing the live show is a pretty
Intel's on there. Intel.
But it's a pretty interesting thing. So we are watching the markets. We are watching them. We are watching here. But when we walked in today, as a matter of fact, when we were on the train today, the SPOOs were up.
Yeah.
So hours ago, we were looking at a completely different screen. And then we had our discussion with Rob. Then we opened up our platform.
We're on the train, enjoying our coffee, looking at our positions. Not a care in the world.
Except for the cops running by us. But other than that.
Yes.
Other than that, we're fine.
There has been a lot more police presence on the Metro, for sure. And today, our conductor, who's very nice, he really, he's an overachiever for a conductor.
Oh, in or out?
The morning guy.
Yeah. Oh, he's an overachiever.
Yeah. So, but then he goes running by. Then you see him running by the other way. 2 policemen, in full bulletproof vests, following him.
Yes, and so they all have to get through. Everybody's been on one of these trains before. Those 2 doors where you have to open and get in, then open the other one and get in. Yeah.
Yes.
So then they went through that way. So Jenny and I got our stuff, went the opposite direction.
We always do. You see something fishy going on the train, you pretend you're getting off.
Yeah. Other than that, it was a delightful morning.
A wonderful morning. The SPOOs were up, not a care in the world until the police ran by.
That's right.
Yeah. Okay.
That's right.
So you want to look at what do you want to look at?
I wanted to look at Tesla. I know Tesla was moving yesterday.
And we'll take a look at some of these others. We've got some big movers.
I know. Tesla. I just want to go to the chart. Well, let's use the. Let's go to the Tesla chart. These are the Tasty tools.
All right.
So Tesla had a big move yesterday. That's what I was going to say. It was up, and everybody was. The discussions were: do we fade it? Do we not fade it?
So
whoever faded it, congratulations on your wealth.
Up to, I was just talking to someone who was short Tesla, who's been riding a short Tesla position and then complaining about yesterday's move. But today it's just giving it all back.
Who is this?
The one who thinks all EVs are going to be in the.
The person who I thought walked into the.
Yeah. We have one friend who thinks all EVs are going to be in a landfill one day. He's the one who's been short Tesla, and
that's going to hurt. Okay.
Yesterday he wasn't happy, but today it's giving it back.
Yeah, not a lot though. That's what I was saying. That percentage looks a lot, but yesterday's percentage uprise in Tesla was more.
Yeah, right. It's still looking pretty good. Now, I wanted to look at Intel, only down 2.5%, but I'm just curious to see what's going on. If we do not have an Intel position, we don't. 21 rank. Down
we do have an Intel position.
Oh, we do?
Yeah.
Well, I did not see the I. IBIT, IEF. Oh, there it is. What is IEF?
IEF is
7 to 10 year Treasury bond ETF.
Of course.
Maybe I put this on with TP. I don't know.
Okay.
Okay.
Well, we have
so
an Intel position.
We do. How low is it? 36.45. You know what? It has been.
What do we have in Intel?
A Jade Lizard, I guess, is my guess. No.
Oh,
yes.
Yeah.
No. This was from unusual option activity, where we've got this one wide put spread and 2 long call spreads.
Okay, the long. Yes.
Here's what I'm going to do. With 30 days to go, I'm going to buy back the short call for 9 cents. Then we've got unlimited profit potential if Intel has a wild move.
Now, that does have a long time to go.
Hey, 9.
Wait, let's go. Can you change this back to open interest and volume? Let's take a look.
Open interest is here.
Yeah, that's good.
So 240,000 here,
and then
110,000 here, and then you've got only 32,000 here. Whoever, they're out of their puts. Yeah, they're out of their puts. That big order that came through, so they're out of their puts.
Yeah.
But you know what? Intel has.
How long have we had this on for?
Oh, a long time. Here we go. 50 days.
50
Yeah,
days.
and we probably
That's an
could have. I
eternity.
mean, it got pretty high. We probably could have gotten out of those puts, but we were always looking at this as like one trade.
Yeah.
So.
Let's roll this
But I find that Intel has been teetering, and I don't just because it has been doesn't mean it will continue that, but it has been teetering. It drops down to the low 30s, but then seems to bounce back up to 40. In this recent run, we've broken 40.
Yeah.
I have.
So wait a minute. We have 30 days left on those puts. It's in the middle.
Yeah.
We could go to 45 days if we want to roll the puts out in time and take something else in. I don't know. Leave it.
Just leave it. Just leave it. Don't let this market scare you.
It's not. I don't even can't believe we looked at Intel. The only reason we opened
It was
this
on
position
that
up
list.
is because it was on that list.
Okay,
Let's
so
go back to the watch list.
Yeah, back to this list. I just wanted to look at some of the big movers. AVGO, Palantir. Let's take a look. AVGO is expensive, so it's not something that we typically trade, but it has had, look at the move that Broadcom has had. I think that was earnings. I think this was earnings, and then it's really continued to fall.
Yeah.
Now, would you ever think of a put spread in AVGO? $10 wide strikes, you'd hit that 300, 290. It doesn't.
I think these are all, I think the Mag 10
yeah.
are kind of, I'm not saying interchangeable. Sometimes one will have a heyday, one doesn't.
Right.
But I think the Mag 10 is slightly interchangeable.
And PLTR?
We have that.
We have. Oh,
No,
we have.
the
Oh, gosh,
calendar.
we put that on yesterday.
Yeah, we have the calendar on,
Yeah,
which is
we put
fine.
the
I mean, it's a very long-term calendar. It's the 44-day, 65-day calendar. This is working fine.
We don't need to
There's
worry about that.
nothing we need to do with
There's
that.
nothing we need to do with that.
But I kind of think they're all interchangeable. I would go with the highest implied volatility if I was going to sell a put spread. Let's take a look at that. If we're selling a put spread in one of the Mag 10 products, let's go with the one with the highest volatility.
It doesn't have to be Mag 10. I was just looking at big moves down.
Do IV rank in NASDAQ. Letlet's sort it by IV rank.
IV rank.
There we
so
go.
highest one, Paychex.
MU, we do have to look
Micron,
at.
they have earnings. MicroStrategy, no thanks. Comcast.
Those mags aren't even in the top.
Mondelez, Kraft.
Those mag.
No, not for IVR.
Yeah, for IVR.
Not for IVR. What do we? If I'm looking through this and looking for something that is in our trading universe.
I mean, I think we got to go with either Marvel or, which we probably have Marvel. I would like to look at Micron though.
Yeah, look. Yeah, Marvell. We don't have Marvell.
We don't have Marvell.
No, and that's been falling. So let's get into Marvell.
That was up huge today.
It was?
Yes. And it might have been before the open, but can you
But it
take a
had a
look
big
at
down move. Oh yeah, look at that.
Yes.
No,
what was the high? Can you read that?
87.
Rob brought down the market.
Son of a gun.
Can we blame it all on Rob? We're kidding. He's a trader. He can handle it though.
We're teasing. Okay, but it's been. And what was this? Was this earnings? Was it? I don't know. But it's been on a little bit of a decline. And we've been in and out. I'm pretty sure we've been in and out of Marvell.
Yeah, and Frank's got a great Marvell story. So if you
Oh,
ever
he
see
does?
It. Oh yeah.
Wait, what?
Remember, he texts it to us all the time, and then you ask if we can say it on air, and he says no. That's what I'm never telling her, Frank, because she won't.
This morning Vanetta said, like, tell Tony, tell the world. Well, you could remove Tony and insert Jenny, because I never know what's a secret and what's not.
Even if you say, don't tell anyone, she's like, wait, I can't tell them that.
Oh my gosh. Don't ever tell me something and say it's a secret.
I know.
My husband told me something and he said, don't tell our son. Every day when I'm talking to my son, I'm like, don't say it, don't say it. I have to say it to myself like 10 times. Don't say it. Don't say it.
Yeah.
Kills me.
Yep.
I don't like secrets.
You just don't know how to keep a secret. You like hearing them.
No. Okay, so what did we have here? Oh, that was a buffer. We had a buffer. Let's see, and that was back when Marvell was trading, 100.
So I think
now
it's
trading
decent,
83.
Yeah, it's got a 23 rank, so Marvell's got the highest one of the highest rank. It's down.
$2 on the 77.5.
That's not bad.
But look at that. We in CRWV we sold a put. Not that it was pretty similar, and only was $500. This is using 1,000 buying.
No, but CoreWeave is low. CoreWeave is lower than
60. No,
not price. Lower than your average buying power.
Oh yeah. Again,
that's what
why?
I'm saying. Not low price, lower, and that's why we were always like, what is going on? Yeah.
It's crazy. They're like crazy today.
It's not that bad. It's just a low rumble.
I don't know.
And we got Jeff over here, Frank. He's monitoring it. You're not on camera, but he's monitoring everybody.
I can't turn my head this way, really. That tonal class is killing me. When they set us up and put Rob here, I thought, well, that's not going to be good. my head's going to be stuck that way for the rest of the day.
All right, let's play some more trades.
We got time. Down 60.
We've got 4 minutes. We need a trade. So, all right. Okay, the reason we got to this point is you were looking at a put spread in AVGO, and I said, let's do the Mag 10 or one of these on the NASDAQ with the highest IBR. We led us to Marvell.
Yeah, Marvell's not in the Mag 10. I just want to let you know it's not in the Mag 10.
No, but what led us to there is the NASDAQ. When we flip the cards over, let's do a put spread in Marvell then. If you don't like the buying power, put spread Marvell.
But, we could do a naked put.
I'm fine with the naked put.
I'm fine with the naked put. I was just commenting that the buying power is double.
Well, CoreWeave is a special product.
Now let's compare. So if we sell the 77.5 put for $2, our break-even's around 75. I just want to compare because the previous position we had on was the buffer. So if we did this, 82.5, 77.5 long put spread, it's $2. We find a call that's $2. Okay, it's the 90. We sell the 90, and now we're getting $660 on the buffer.
So your break-even
using 1,400 instead of 1,000. So our break-even is going to be around 77.5.
Please show that on another one of our amazing tasty tools.
Look at this tool, the analysis tool.
So how much is your loss in between 82?
So we can make $600 instead of $200.
Yes, and that's
in between $86. I don't mind it. I don't hate it.
I couldn't do the math with the little thing there.
And then to the downside, our break-even 77.5 instead of 75.
Yeah, I'm in.
But I like $600 profit potential instead of $2.
And we've been in and out of the buffer already.
Yeah.
Let's do it.
678 credit.
So a buffer trade, for those of you just joining us, is something that we stole from the buffer. We stole it from buffer ETFs.
They're making these buffer ETFs.
The Gen Pop is trying to jump into these buffer ETFs where they're saying you can buffer your downside by X amount % if you're willing to cap your upside.
Yeah, look at that P&L graph. So you see, this is where the stack is trading, where this flag is. So to the upside, we can make $678. We have some room. We have a small loss, but room before we really would have to get long 100 shares of Marvell. Yeah. Okay, we have 2 minutes. I'm going to pop into Twitter just to make sure I got to everybody.
I think we did.
Think we did. Sometimes I can't.
Sometimes we're not updating it.
I know. But with just 2 minutes, we're still working CoreWeave. I'm going to adjust that.
I thought I tweeted the thing from that 70 show yesterday, and I couldn't find it anywhere.
You sent it to me.
No, I tweeted it too, but it's just, I don't think I put the hashtag on there.
Okay, working CoreWeave, I'm going to make this. No, that's just the working order to close it.
And let's take a look at our SPX.
It's not going to be good. It's not going to be
bad
good.
Because the second we put it on, it went down from there. So now we got to decide, do we want to close it for a little bit of a loss?
No, we just, now at this point.
So here's what I would do now. I would take off the order to butterfly it off and put an order to close it for $50. Right? Or even
Or
scratch.
100.
Or
I mean,
a scratch or $30 or something. It's gone in the opposite direction.
$3.95.
You didn't get the pop you're looking for.
All right, I'll put in or just take $50 out of it. But the thing is, like, we had that at one point really fast after we put it on. It was there.
It was up $30.
Yeah. So
yeah,
it was never.
Mm-mm. We put it on and we went directly down.
Okay.
Like
so
all boxes that we are.
Hey, you know what? My put spreads are much higher.
But the drawdown on those, and that's why I do like the 50, the 50 delta, because the drawdowns are less.
It's not bad.
Yeah.
Honestly, like I'll be curious to pop into my account because I did some put spreads this morning where I had some more aggressive like that with a higher collection, and I had some less aggressive where, $10 wide I was collecting $2 further down. I'll be curious to see if the market's through those.
I think it is because you were pretty tight.
I don't know. I haven't.
50 points, I think so, because we were up when you put them on.
Yeah, you're right. We were up when I put them on.
Yes.
I put them on the open. Yeah. Because the calendar was so expensive. There was a lot of vol in tomorrow's options. That calendar that I paid is $7.94 yesterday was $11.50 this morning.
It was.
Okay, we are out of time. Out of time, Liz.
Okay, Jenny, fast hour of the day done and dusted. Everybody, good luck with Micron earnings. We didn't even get a chance to look at it. That's okay. JT,
no,
good luck with Micron earnings.
We didn't. Good luck. Good luck with Micron earnings. We probably wouldn't have, I don't know what we would have done in there. So we'll just watch it, make an after earnings trade. Remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show.
We'll see you tomorrow,
everybody.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
tastytrade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
tastytrade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Love me, know me. I like how you do it. You're helping me through it. Baby, your love is too good. Baby, your love is too good. Baby, your love is too good. Baby, your love is
welcome back to the show. This is Options Trading Concepts Live. My name is Mike. I'm here with Jamal.
Hello.
And Glenn Freibarger from TastyFX with the cherry pin on the little collar there. It's nice.
It's
Thank you.
it's
Nice touch.
Glenn's Day. It's Glenn's Day. Is what
There you go.
I think we should start terming this Glenn's Day.
Man.
Glenn's Day.
Yeah, that took a long time, but that fits beautifully.
Yeah. Well, you know, you don't get a nickname right away, okay? I mean, you got to earn it.
I've gotten some pretty mean ones pretty quickly, so.
I can see that.
I heard you ran into Cassie yesterday.
I did.
She said that there was maybe it's a little something, and then she was like, "Oh, never mind."
Mm-hmm.
Wait, what?
Yeah, never mind. Just never mind.
Wait, what?
There's I can't tell
You gotta say it now.
I can't say it.
I thought it was the pictures.
You guys ran into each other?
No, it was just it was a whole. Oh, look at this. Big.
I think it was just
never mind. Maybe you'll find out more later this week.
Oh, so it wasn't the pictures.
Can't stop looking at it.
It might have been. It might have been
Okay.
the final copy of the pictures. You never know, but it's gonna be good. That's all I can say.
All right. Well.
Anyways,
I was just thrown off for a second. I was like literally racking my brain. Where would you and Cassie run into each other? I can't come up with a place.
No, it was
here.
Yeah.
Gotcha.
At the front desk, but it was a off-putting interaction. She's like, "Oh, have you gotten your present yet?" I was like, "What? Oh, never mind. No, don't worry."
Yeah.
That sounds just like that's a good Cassie impersonation, by the way.
I talked to her after that happened. I was like, it would be so funny if she was just messing with you and there was no present at all, and she was just getting in your head.
Yeah, I'm gonna start doing that to people because it works very well.
Here we are talking about it.
I didn't sleep last night.
But no, I think it's gonna be good.
Mm-hmm.
You'll find out soon enough.
How are
just
your
like-
Glenn's days going?
Good. Same amount of syllables too. It's a nice little touch. Wednesday, Glenn's Day.
What is that?
Wednesday.
Yeah.
Glenn's Day.
Yeah.
Glenn's Day. Happy Glenn's Day.
Same amount of syllables.
Yeah.
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 It works.
Glenn's Day and Glenn's
Syllables.
Day. Happy Glenn's Day.
Cha-ching.
How are we doing on Glenn's Day? I'm a little annoyed. I made the mistake of eating blueberries. And when you eat blueberries, you know how the seeds kind of get stuck? I got one seed I can't get rid of, man. If I get rid of it during the show, if I just start cheering during the show, you guys will know. That's exactly what's going on.
It's just jammed.
So far, it's been about an hour and a half.
Well,
Damn.
Yeah.
glad I'm sitting here and not in the
Damn.
the strike zone for.
I can still get
potential,
you from here. No, I can still get you. Trust me. I'll still. Yeah.
Man. Market's down. Down bad, if you will.
yeah, what happened?
I hate it when I'm right. I mean,
Heavy is the head.
Right.
I know.
Yeah, E-minis down 60, NASDAQ down almost 400, Bitcoin down 1,000. Wasn't as bad this morning, but we are seeing a swift reversal here to the downside. E-minis just ticked below 6,800. What are we doing here with this market? I mean, ETH and Bitcoin continue to fly around. ETH is the leader to the downside, down 3%. NASDAQ down 1.5%. Bitcoin down over 1%. To the upside, not too much moving other than crude oil and natty gas, so your energy there. And then silver. Silver is the precious metal that is just churning along, ripping higher.
Dare I say,
66 and a half.
en fuego.
En fuego. En fuego.
What are we doing here? I don't know, man. Look, I told you this was my thought. I mean, literally, this was half of what I thought. I thought that we were going to move a lot this week. I thought we'd end the week at 68.50, still to be determined. And I just felt like it was weak. The market felt weak. You could feel it. As much as I am positioned for upside plays, and that's all I want to do when I keep looking at this. So that's actually why I've kind of like been a little hands off. You know what's interesting is we put on the year-long trade. I have the MNQs. And as a result, I think it's actually helping me not just go out and put on like long different individual names, because I do have that exposure and I'm basically a little bit in the money now. I'm short the 25,250 MNQ put. And so as a result of that, I don't want to go out and get long like more AVGO or add on Google or like all these other names, because I do have that exposure. I'm like, I'll chill. I'll wait until we get to some lower levels. And so right now, I mean, as much as we're down, We haven't really broken any major support levels, I don't think, as of yet. I mean, yeah, we're breaking through. We're right around 6,800. You can see we're sitting and we're hanging. The other thing, as I said under my breath, we started the show, I forgot that VIX expired today. And we will typically see a little bit of volatility around VIX expirations. Totally what's happened today. DEES expired. January is the front month. So I'm just kind of sitting and watching for now. If things get a little bit crazier, another 25, 50 points, might add a long delta here or there. But as of now, I don't know. I don't see anything that's like, oh my God, this is on sale. I got to get some.
Yeah, I mean, market is selling off aggressively here. I mean, Microsoft back down to mid-year lows here.
Man.
Kind of crazy to see. But that would be the first place I would go, is checking out the Mag 7 products and seeing if there's anything that's worth biting on. But, I mean, a lot of these are taking it on the chin here. So I guess from that standpoint, I might just pick the one that I feel like is most stable long-term and throw some cheddar at that. But it's tough, to your point, when you look at the E-minis and we look at the magnitude of the sell-off here, down almost 200 points in 4 days, and there's no real buying here on these bars. I mean, we're at near the lows of the day today, and as you can see, we had a quick reversal. We were up 60, 70 points higher than we are where we are now. So, yeah, kind of crazy.
Took down crypto pretty bad too. That it looked reassuring for a moment.
Yeah. Oil is up though. By the way, this is a good time to mention that I finally started watching Landman. That's good.
Nice.
It's a good show. 3 episodes in.
To the first season?
First season, yep. I think they're in the middle of season 2 right now, I think.
I haven't, yeah.
That's with Billy Bob?
Yeah.
Yeah.
I haven't started season 2 yet, but season 1.
Have you seen Bad Santa?
I never watched it, but I know the movie for sure. I mean, people love it. I hear.
Yeah.
I hear it's
my favorite Christmas movie. And it really is. It's just the most ridiculous movie ever.
And he's just like being rude and like talking
Yeah.
shit the whole movie, right?
Yeah.
Well, basically, he is Bad Santa in this movie without the Santa outfit.
Yeah. I mean, that's his role. Every role I've seen him in recently is he's this angry, disgruntled person that turns into some kind of hero in that space. But
facts.
Which I'd be very curious if that's his actual personality. Must be like just the easiest job in the world.
Just reading
probably
lines.
don't even probably doesn't even make lines. Just like talk about this, rant about that.
It's acting.
Easy money.
I mean, that's what they do.
Yeah,
right?
his famous line from season 1 is, "You want oil to stay above 60 and below 90, because that's the sweet spot for them. Below 60, they start feeling the pain. Above 90, you start feeling the pain at the pump."
I actually, somebody...
Except for California, they tax the hell out of that.
Somebody actually tagged me on that yesterday, and I put that clip out. And so I actually attached a bunch of people. You were one of them. By the way, I don't know what happened. I don't think I know what happened. I for some reason I was like, wait, I'm not following Mikey. I don't know what happened. But maybe it was like a fake Mikey. There's a lot of fake people out there, by the way. There's a lot of fake people impersonating us.
Yeah.
BT.
You might have followed a fake one.
I might have, and I didn't even realize it. I need to check.
God, Mikey never responds to any of my stuff.
Because I'm like, that doesn't even make any sense. I know I'm following you. I think I followed a fake one last night.
You might have given me your Bitcoin account through WhatsApp.
The way you guys look, the way you know,
You still owe him back.
The guys, the way you know, look and make sure, because some of them actually are what's the word I'm looking for? The blue check.
Verified.
Oh yeah.
Make sure it's not just retweeting everything that we have. That's when you really know it's fake. Because a friend of mine alerted me one last week. I was like, oh damn, yeah.
It's like your buddy's asking me for all my Bitcoin through WhatsApp. Like, what's the deal?
Yeah, not cool. Not cool at all.
It's insane.
Not great, Bob.
Just know that we're not going to reach out to you on WhatsApp.
No. Or ask for money.
Yeah.
Rarely.
He might.
I've gotten no impersonators yet, so
you'll see.
Yeah, you
it's
will.
gonna be like
Only matter of
at
time.
Glenn with like 3 N's. Freiberger. It's kind of how they do. Or Glenn _ Freiberger. I'm telling you, they're crafty.
Before we get to the FX markets here, just a quick update. I rolled the IBIT strangle that I have. It's expiring in 2 days, so I was like, not going to take the stock. I want to keep this in options position, and I'm going to keep this through next year anyways. So I rolled it out to Feb, the 60-65 inversion. So I went from a 65 straddle to a 60-65 inversion, picked up $1.20. I have $3,120 in credit now. So we're still looking good on this position, and any rally will benefit this position greatly. So
cool.
Just keeping it alive, but I still will do a year-end review of anatomy of a trade for this one. It'll be a good one. And if you missed it yesterday, got into the MES year-long trade for 2026, the 6,600, 7,100 strangle, picked up just under $500, but I'm going to run the same sort of strategy with this one. No upside risk, roll out and down maybe once if we get tested to the downside, and then just keep the short put on, get rid of the upside risk of the short call. If we're tested on the upside, just shift the whole thing up so that I don't have any upside risk ever, really. And we'll see how it goes.
No upside risk ever.
But yeah, without further ado, why don't we pop over to the slides, talk a little bit about the US dollar that is destroying me.
Yeah.
And maybe you can give me a little light at the end of the tunnel here.
There's some light definitely going around. Not sure specifically for your US dollar position, but today I wanted to talk about trading the US dollar volatility squeeze. Excited to get your guys' take on this. I did some analysis around, FX markets compared to all other asset classes have been a little bit less volatile in recent months, euro dollar in particular compressing. Wanted to validate that thesis and see if there were any opportunities and what pairs are moving right now. So let's go over to the next slide. I'll get into the numbers of what I did. Looked at just the past 6 months, get the recent view on markets right now, the landscape of major US dollar pairs, 7 of those covering basically the entire globe of major economic players: euro, pound, Japanese yen, Australian dollar, Canadian dollar, Swiss franc, and New Zealand dollar. Did some little crafty math tricks to normalize some of those daily changes in price and calculated realized volatility using some standard deviations and compared a 20-day look-back window to a 60-day look-back window and made a ratio out of that to tell which pairs are ramping up in volatility and which are compressing. So let's go over to the next slide. We've got the table for you, and this validated a few things that us on the desk are looking at and not too excited about. This euro dollar, most popular market in the world and most popular market for U.S. retail customers to trade because of its low margin requirement and high liquidity and just general ease of understanding about our exchange rate between the euro and the US dollar. That volatility ratio coming in to 0.79, so that's below 1, meaning that the 60-day daily volatility is greater than the 20-day, so that really coming in. And we saw that pretty much across the board of these dollar pairs, hitting the Japanese yen the hardest, euro, even the Australian dollar, which tends to be a more volatile pair than both of those other ones, and definitely exhibited those traits in the beginning of the year with those tariff shakeouts. The Australian dollar, definitely the vehicle that some of that risk-on, risk-off sentiment was passed through. And what was interesting to see was that the New Zealand dollar isn't as affected, hasn't been as affected by this volatility squeeze, that ratio staying around 1%, and the outperformer from a volatility perspective, the Canadian dollar, so that pair, that North American pair that is historically lower volatility just because of the relative geographic proximity, has been moving quite a lot, and we'll get into what possible trade setups there are there with that ratio expanding to 1.14. Does this surprise you guys in any way? What do we think about the methodology?
I think when it comes to the difference in the volatility ratio, I think it's certainly interesting with some of these pairs that have been moving showing a lower ratio here, like you mentioned, the New Zealand dollar USD to on the opposite side, but like the dollar yen. What do you make of that pair? Like, why? For me, I would have expected it to be maybe. I guess the volatilities are matching more.
Yeah.
That's why we're seeing that, but.
Yeah, and that one's interesting because it kind of gives you an opportunity to you reflect and separate volatility from price level. You think, oh, I've been seeing this dollar yen at all-time extremes, 20-year, 30-year extremes. That should be more interesting. But when you look at the numbers, it appears that although we've had a few days where we've had some reclassifications higher or lower, it's been more of a continuous drift. And since some of those repricings on political regime shifting, we've really been stuck in a range of daily moves that are more predictable than we've seen, not in terms of direction, but in terms of daily pip range, or in this case, percentage wise. And what's also interesting to call out is when you think about this from a retail customer experience, tradability, for you guys looking at some single name equities and the options landscape, these percentages must not be very interesting at all. But what are you talking about? None of these are above, even 0.5%. Well, why do we care about this at all? But when you factor in the leverage that comes with these pairs, that's why this euro dollar is so popular, because you get leverage on that pair of 50 to 1. And most traders in all landscapes tend not to look further than that, but you actually do have some of these other pairs that are built out from a product perspective. In the same way, this US dollar, Canadian dollar, also 50 to 1 leverage. Australian dollar, Swiss franc, and New Zealand dollar, all 33 to 1 leverage, margined at 3% there. So definitely more tradable products out there than just this euro dollar when it gets compressed in these volatility ranges. And still, the common denominator on all these pairs is US dollar on one half of the story. So while there could be some more nuanced drivers to learn from a fundamental perspective, half the story, half the narrative already there with that US dollar component.
Yeah, this is great data, Glenn. Really, and great call out, like the idea of leverage. And again, it's all relative, right? Like these are all low compared to things that we look at day to day. But of course, these are currencies. I remember when I was in grad school, I tell you, some of these professors, they just live to bust balls, man. They would bust balls just like I'm about to bust your balls, just to make an example. Like how you said there's, because there's two, right? There's actually two that are above the ratio of one, right? And it's interesting looking at like those two first. Any specific reason why you think those two above all?
Yeah, when you look at a fundamental perspective this year for Canadian dollar and really the commodity currencies across the board, New Zealand dollar, Australian dollar, which surprised me not to follow that narrative. We've had similar shakeouts when it came to the April lows and some tariff volatility, but for the Canadian dollar, which has really been pressed on lows recently, a lot of drift higher to the US dollar's favor as a result of that tariff landscape, has really started to come back on some fundamentals of their own, getting some growth in their economy, starting to get their unemployment rate under control. That was up near 7%. So a lot of good things coming out of Canada specifically that allow this kind of idiosyncratic movers in just this pair as opposed to other US dollar pairs. New Zealand similarly back against the wall, pressing at lows, highs for the US dollar there. So just some more movement in those in nations independently as a result of their fundamental drivers, but we still have a lot of uncertainty on the table as it pertains to U.S. tariffs, U.S. interest rates, and that side of the story as well.
You're right. It's a trip that Australian dollar and New Zealand dollar, like those aren't closer. Any guess of how far New Zealand and Australia are? Closest distance.
Kilometers or miles?
Wow. Whichever one you want to do. What's the closest distance between Australia and New Zealand?
I'm going to go 300 miles.
What you got?
I'm going to go 299.
Wow, I framed that one. and you are no good. That is rude.
Closest, shortest point. Shortest point, yeah. Oh, you're okay. Shortest point across the Tasman Sea between Tasmania and Fiordland being around 924 miles.
Ooh, take that, Mikey.
Yeah, 900.
That's what you get undercutting me.
So, yeah, closest without, yeah. Closest.
That's pretty
Sad.
far.
That is pretty far, actually.
Yeah.
Thank you. Next level stats provided by Jamal.
Thanks.
Let's kick it over.
Your stats.
Let's kick it over to the next slide, and we'll take you through this dollar CAD. Give you a look at. We were looking at volatility only. Let's now lay on top of it the recent price action, and you'll see that a lot of this volatility came from this big Canadian dollar comeback. But that's only in the recent 3 weeks or so. So that's a lot of where that 20-day realized volatility is coming from. But it does set up a lot of possible trade ideas. I mean, here we've got, from the time frame we're looking at, we've had some volatility compression in the past 5 trading days here. If you'll look, very inside days. And so if you're respecting the elevated volatility and you are getting some compression within this expansion, it sets up, one for mean reversion traders. You can try to get a little bit of scalping out of this range, which looks to be between 138 and 137.50. That's a pretty tight range to try and get any sort of profit out of, but it also gives you, a pretty tight range of knowing when you could be wrong. If this is a spring that is loaded and ready to pop in either direction, then you have those tight bands to know when that this landscape categorically changes back a reversion to the upside, or trading through new lows as we've tested the past 2-3 days here to the Canadian dollar's favor. So this one very interesting to look at, some huge moves that we might get some possible reversion in to the US dollar upside, or we trade through this kind of congestion period. And if we zoom out, the Canadian dollar's been a lot stronger in years before. So historic price action to both sides. And then let's kick it over to the next slide, and we'll compare that to the Japanese yen, which is running well below its 60-day baseline. And we've seen, now you can see this is much more of a drift higher, which is unusually quiet because this pair is, from a retail perspective, margined at 5% right now, because that's reactionary to the increased volatility in the pair. So a regulatory move to make this margin requirement higher. But this, as we know, won't always be the case. We see a lot of historic reversion in the FX space, and there's no real fundamental reason why this dollar-yen pair should be compressed and over a long term find a less volatile environment from the way I see it. So it's just a matter of when this starts to pick up again. And so that could mean patience for now, but we've got a Bank of Japan meeting tomorrow that could be the catalyst. We've expecting them to hike 25 basis points before. The Bank of Japan has surprised before, and this hike, although it would only take them to not even 1% interest rates, 0.75%, that would be the high of the cycle. They've been historically low for many, many years, and so they are starting to turn up the dial there, and that hasn't meant so far a stronger currency. So we could start to see off that catalyst, some reassurance for this yen that could take this pair back down to more historically normal levels, or we could also see, a surprise to the other side of just a verbal threatening of trying to hike these rates. And if that doesn't come into effect, we could see this go through new highs without any sort of US dollar component to it. So it's always nice when you're looking at all these markets from a US trader perspective to have some of this idiosyncratic risk on the other nations' side of things if you're looking at just US dollar pairs, because that does present more trading opportunities, potential trading opportunities with the same side from the US perspective. And we've also got just some more US data. Part of the reason why this US dollar volatility's come in so much has been a result of a hangover effect of the government shutdown. One, not getting data in a timely fashion. Two, not trusting it or not thinking that it's valid. So as we start to shake some of that out, we could start to see the volatility tick back up in all these pairs. But I thought it was a really interesting exercise to see just which ones are still moving and which are compressed the most. So key takeaways here on the next slide. Just respecting what the market we're looking at, right? Not trying to say, you know, this dollar Canadian dollar pair is historically very low volatility, so I expect it to stay that way. If it is starting to move a little bit more now, have to respect the ranges. But what these do is compression might mean smaller take profit stop loss levels, but it also gives you a historic basis for when these things start to change, when the new ranges could be established, and take directional positioning after the fact and not have to take a direction, a long-term direction without all the information. Whereas if you are in a pair like US dollar, Japanese yen, this could mean that you're getting, for long-term traders, a better price point in either direction, that you know it'll come around, even though we aren't seeing as many unique price points right now fluctuating. If you have a directional thesis, you could expect in the long term that this volatility could pick back up. And if you think it's a cheap price right now and you're comfortable holding on to it, then you can position yourself in this lower volatility environment and react to when things start to pick up.
Love it.
That's what I got for you today.
Thank you very much. Yeah, I looked through the TastyFX platform here and just pulled up all the popular USD pairs, and every single one of them is on the extreme side of the Bollinger Bands in terms of where the USD is relative to the pair. So definitely a theme we're seeing with USD weakness relative to everything on the popular USD list. So definitely some opportunities out there. I tripled down on my USD franc position.
Triple smash.
Which is still a small position. I only do 5 micro lot positions to start, so I now have 15 micro lots at a basis of 129.70. Sorry, I'm down 129 bucks.
Yeah, let's look at if we can pull up the platform.
Yeah, if we can pull up the platform, we can take a look here. But
15 micro lot.
Brought my basis to the middle of the Bollinger Band range. I was like up here near the top of it. So just dollar cost averaging.
Yep.
And still a small position. It's not the end of the world here.
You have you've taken the portfolio thesis here of get in at price points and wait for reversions in either direction. If we wanted to do some some reflection on this pair specifically, your initial fill pretty close to the top of the range here. Mm-hmm. If you were trading this more frequently, looking at turning around this capital and not being tied up in it as longer term, I think where you got in was on more of a potential breakout. Mm-hmm. And perhaps could have known pretty quickly on that big red candle there afterwards that maybe your initial thinking wouldn't prove correct right now. This pair also yields a positive carry, so mm-hmm. something you're comfortable legging into and having longer term. If you zoom out, historically this is still very cheap for the pair, so it's not like I'm invalidating your thinking at all, but it's important to think about the time horizons you actually you want to get in on trade entry and making sure psychologically you're not retroactively changing that validation and saying, oh, I was going to be in this for 5 days. Now it looks like I'll be in it for a lot longer. A more dangerous game to play, and one that is more reliant on trader discipline as opposed to options, which have expiration dates, are easier to see those guide rails or plan for them. So just a call out there.
Yeah, all valid points. And I think that's because I know I'm going to be trading this more like set it and forget it, trade the price extremes. I'm just trading it so small to where I can layer in tranches and reduce basis aggressively through that avenue. But also I'm choosing products that have a positive carry, where if I'm long, if I see a positive number in the swap ask, or if I'm short and I see a positive number in the swap bid, I know I'm getting paid every day to hold that position. And it's not that much day to day, but I've been in this position for a month and a half now. So if I look back at my activity and I see the distributions every day, like it's going to add up over time.
Exactly.
And it's offsetting a lot of this P&L for sure. But yeah, I'll stay in it. And again, I'm getting paid to hold this position, and it's still such a small position to where I can hold it. I mean, this has been the worst case scenario in recent times for, buying at the top. We're sitting at the bottom now, but still only down $150 on 3 tranches is decent. So we'll see.
There you go.
We'll see. Thank you so much, Glenn. Appreciate you.
Of course.
If you want to follow Glenn on Twitter, he's at Glenn Freibarger with an A, and give TastyFX a follow as well. Check out their website, tastyfx.com. But yeah, appreciate you. What's for lunch today? I don't even know.
Art of pizza.
And
And sweet green. You want me to save you a bowl? You look like a super green goddess to me.
Goddess.
My shirt will open. I actually, if I'm going to rank them, it's Harvest Bowl number 1.
Yep.
And Kale Caesar number 2. Those are the only 2 I really get.
You know that the barbecue chicken one is actually pretty good. If
barbecue chicken salad.
Okay, just okay.
Stop yelling at me.
It has like apples in it and pickled onions.
Yeah.
It's a very interesting flavor profile. If you're allowed to douse the barbecue yourself. I don't go too heavy, too crazy, light dressing.
That sounds like sweet and savory. I don't really like that kind of thing. But to each his own.
I won't save you one then, Jamal.
But that's why the Harvest Bowl is great, because you got apple, chicken, sweet potato, wild rice, and then like a balsamic glaze. And I actually hate balsamic glaze, but this one is good because it's not really balsamic.
More glaze.
It's like it's a glaze. It's some kind of glaze. But balsamic glaze I just can't do. But I do like balsamic vinegar. So
I don't have time to unpack that.
Just like a thicker, like the brown balsamic, like sweet glaze. I'll have to find it. And I don't know.
No, it's cool. I actually don't. No, it's okay. I'll just stick to balsamic vinegar.
There you go. There you go. Well,
Thank you
enjoy
guys.
lunch, and
Appreciate
we'll see you on the other side here.
Later, man.
But appreciate it. You've effectively got me to triple down on
Don't worry. Even though you're leaving now, it's still Glenn's day. Don't worry, all right? Don't let anybody tell you different.
Thank you.
That's right.
E-minis down 47, NASDAQ catching a bid, Bitcoin down 900. Still decent red day here. If we look at volatility, seeing basically a flat move. I mean, it's kind of wild to see the market sell off so much without a volatility spike, which again just tells me I'm not going to have too much fear into this sell-off here. There's still inside moves when you consider the day-to-day movement. Inside 1%. NASDAQ over 1%, that's a bigger move. But yeah, I mean, it looks ugly, but volatility is still in the teens. So I'm not expecting anything like we saw in April, at least as of right now. We need to see a change in the vol structure before we should start to believe that that's possible.
Yeah, agree. I mean, because of where vol is sitting, I'm not really rushing out to go out and get long anything at the moment. Like I said, I'm I'm not decently. I wouldn't say I'm decently long, but I am long stuff. I mean, there's iron condors like Oracle. That's basically I'm just short the put spread now, right? It's not in the money quite yet, but it's close. It's 175, 165 put spread. And that's just Jan positions. Like I've been saying, most of my longs are now in February. The Core Weave, Super Bowl, February. MicroStrategy, Super Bowl, February, and a March one. AVGO, same deal. So, I mean, I kind of pushed things there for this unfortunate potential chance that we were just going to keep drifting lower here, and that's what we've done. I think. I mean, for the way that I trade and the way that I think it's just kind of self-preservation. And again, I'm still wanting to go markets to go higher. I would need another level. I need us to. Not that I need. I don't need. I shouldn't say it like that. If we break 6,800 meaningfully, 25, 50 handles from there, maybe I start, picking out longs on the shopping list. But right now, I'm sitting pat.
Yeah, and it's kind of tough because we're in this middle of the range, so it's hard to see where we're going next. But, I mean, the lack of volatility tells me I shouldn't be surprised to see an upside swing, but we haven't seen an upside swing in 4 trading sessions, and they all look pretty ugly. So it is kind of like a holding pattern period where I would rather get long after we see more of a sell-off. But I'm in positions anyways, like the MES position is getting tested to the downside just slightly. So if we continue to sell off, I'll just get more long naturally there. Mm-hmm. And then same thing with IBIT. Like I'm already aggressively long in IBIT to macro products that I want to be long anyways. And then I have these other positions within there. So yeah, I'm in the same boat. We do have some earnings though. Over the next couple of days, I see some YouTube chat questions. If you want to join us on YouTube, we're streaming live there. Just head over to Tasty Live. You can throw in your trade ideas and questions along the right-hand side chat in the live video that you'll see on the page. But yeah, MU. MU after the close today.
I think you know what I'm going to say here. I mean, it's the same story for Oracle. It's the same story for AVGO. Why would I try to get long this thing right now? I mean, these names have struggled on earnings.
Yeah, it is tough. I mean, normally we see a pre-earnings pump with some euphoria around the announcement, where this thing has dropped 50 points, 20% over the last 5 trading sessions. So it's tough out there for these names. With that said,
I'm going to get long a $200 put calendar. I know I usually like to go calls. I'm getting long one, and I'm going to hope
short
I'm wrong.
term?
Yeah, I'm going to do short term. I mean, it's only the 200 strike. What's the expected move? I assume it's like 20, right?
Yeah, 20 points.
Yeah.
So you're right
there. And hope I'm wrong.
Yeah, really cheap way to get exposure to MU earnings, and if we push this evaluate at date till the next day, Friday, it will assume we get all this value. You'll see the P&L spike, P&L potential spike. But yeah, if we assume downside move closer to 200, we get all the premium out of the short option by pushing the evaluate date to Thursday. If we go to Friday, it looks even better. Let's do Friday just for the sake of simplicity here, and then let's crush this implied volatility down to where the other cycles are, like 65%. You could see the back months crush to like 60, but you'll still see a little bit of elevated IV in the 9-day cycle here. If we just do 25%, like this is a realistic expectation. Crush 25% in the 9-day, kill all the premium in the weekly cycle, you can make $200-300 on this dollar debit. So
I'd go regular Jan, but I don't feel like paying. It's like $500. I don't feel like paying that.
Yeah, I hear you there.
I actually don't even feel like doing this trade. I'm actually putting this trade on to make a point.
Hey, sometimes you got to do it.
You know what I mean?
I would rather do a Jan upside. Like if you're thinking that longer term, you can get a bounce, and then maybe you get a bounce from earnings. But this market is tough. It's tough to buy into a big rally in a weak market with weak movement in the product you're trading for earnings. So I like the downside move. I like keeping it real cheap just in case you're wrong. But if you're right, you can make a couple $100 on a very small debit. So going 9-day, 2-day, I think makes a lot of sense here. And even with the 25% vol crush in the 9-day, bringing this 80% down to the 60s, you still have a decent profit potential if you get that sell off.
Yep.
But if we have any other trade ideas for MU, we can check those out. What else do we have today?
I think that's the main one today, right?
Yeah, that's the main one today.
Tomorrow.
FedEx and Nike are tomorrow.
Oh, FedEx.
Yeah.
Always somewhat interesting. If I remember correctly, when was last earnings? Now that I think about it, I'm looking at the wrong date.
Yeah. FedEx is always interesting, sitting near highs, which is tough. I like to buy the dips in FedEx and play upside moves for earnings, but this is a tough one. I mean, 18-point move on a $300 product, that's really low implied volatility. I guess not really low, but lower than I would like. And then you're seeing a really low IV in the back months. So if you're trying to trade this directionally, you do get a nice discount by going to Jan or March even. Going to be very expensive if you go to March, but long Jan, short the 2-day, decent cost basis reduction for sure. And you can see this is a good example of where they're just really front-loading implied volatility into the weekly cycle relative to the monthlies that are all sitting in the low 30s. I mean, you'll still get a little bit of a crush in Jan, but nothing too crazy. And then Nike, we'll come back to FedEx and Nike tomorrow for sure, but Nike, $5 expected move on a $66 price point. But again, big implied volatility premium in the weekly relative to Jan and Feb. 5-point expected move over 2 days, 7-point expected move over the next couple months here in Feb. So,
is like the global story of Nike over?
I don't know.
Yeah, right. I mean,
it seems.
What would be the shoe that eventually supplants Nike as the athletic shoe of choice?
Hoka's.
Oh gosh.
I see Hoka. I see Aloe.
Shoes?
Yeah.
They have shoes?
Mm-hmm.
I didn't know that. Oh.
But yeah, I mean, it's a weird time.
Well, it does seem to be, as you mentioned this, it's interesting how we are really at this point now where maybe this has been the case maybe a long time, but more so than ever, I feel like depending on your age group kind of shows the shoe you wear. You know, if it's like On Cloud or Hoka, like if it's skews younger, it's, I don't know, Golden Goose or something like that, which are crazy, by the way. So, I don't know. I think maybe that's what we're seeing here more than anything. It's changed a lot. It's almost really kind of been changed by age in a way.
Yeah. And and also just like technology. Like back in Jordan's heyday, like Jordan is the reason why Nike is what it is. And now you don't have a global superstar that everybody wants to buy their shoe. You know, you have these like micro stars, depending on where your little niche is. If you're on TikTok or Instagram or YouTube, you just don't see it.
Yeah.
So I think that plays into the hands of competitors more, but yeah, there's no global superstar that is wearing Nikes where everyone's like, I want those shoes.
Mm-hmm.
You know?
Mm-hmm. It's true.
Unless it's Jordan.
Unless it's Jordan.
Like,
I don't know. Maybe shoes have become kind of like like if somebody has an AOL.com email address, you kind of know how old they are. Maybe that's what's next that's going to happen with.
Really, you're going to call out those AOL?
I'm really calling out people who like wear Skechers. Okay, if you wear Skechers, you're 159. All right, I'm just going to let you know right now.
The old Skechers. I mean, good for New Balance. New Balance used to be that same.
They were.
Same feel. It was like, you got the 409s. Like, you're definitely a dad.
They were.
But now it's like New Balance is the shoe to have.
It is.
They're making it come up.
Particularly with women. If you see those ones with the big ends, women love those.
Oh, yeah.
I feel like there's a lot of ladies around the office that wear those.
Those are like the fashionable streetwear right now.
Yeah.
All right. Checking out the YouTube chat. With MES, XSP, or SPX Strangle, assuming you're not tested, will you still roll at the standard 21 days or wait a bit longer because it's got secured? I am way more flexible with the time frame when I know I'm going to be in the trade for a whole year, just because you have the flexibility to be aggressive or more conservative depending on the situation. But yeah, I think around 21 days is where I'll still naturally end up because I'm rolling into 30 to 60 day cycles. But I'm going to be much more aggressive with my management to the upside. The downside management, I mean, it is what it is. Like I will accept a short put going in the money because that's a position I would want to have anyways. But to the upside, I don't want to have a short call that's in the money. So regardless of time frame, I'm going to be shifting that thing higher. Maybe I roll it up and out to give myself a credit, but the upside tests are where I'm going to be much more agnostic of time frame and more about delta. Where downside, I'd rather be able to time it and roll out into a sell-off and get a bigger credit, if that makes sense. GTC'd out of GLD yesterday. Do I get back in? So I assume you were shorting it, and now you want to short it again.
Huh.
I mean, it's had a hard time getting through this range here. Recent high of 403, sitting at 399. A couple days ago, it was sitting at 400 and sold off. It sold off all 3 times from the trading highs. So if you want to take a shot, I think the IV is really cheap in here. I would still be defined risk. But yeah, I don't mind it.
I am long it. I am waiting for the next move higher. It's still been riding its like 1 week moving average. When you look at that on a simple basis, probably the same thing on an EMA. That doesn't mean you can't short it, but these look strong. Silver and gold look strong.
Yeah, I think if you're doing it, again, 20% IV, don't care what IV rank says. 20% IV is dirt cheap when it comes to buying delta in here. So, and if you're bearish, even if you're bearish in the short term, doing something like a Feb-Jan calendar or diagonal spread, like it's still very cheap relative to the delta exposure you can get. So keep that in mind. Or even like a short-term zebra, those can work out really well if you're willing to put up a couple $100. This is $1,000 for a 5-day zebra to the downside, but $1,000 to rent 100 delta on a $400 product, still pretty cheap here.
Mm-hmm.
But yeah, short-term diagonal spreads, calendar spreads, still got. I would keep it a debit trade personally, but 20% IV, nice and low. Thinking of getting long Oracle after today, maybe with a short put, but with MU earnings, maybe not so sure. Yeah, you could see a sympathy move for sure, especially if MU has a big downside move. Maybe you see Oracle sell off, but the opposite is true too. But yeah, I mean, objectively, we are at June lows in Oracle, back down to sub 180. And the premium here, 50 IV rank matched with a 50% IV, pretty decent.
Yeah, it's elevated, that's for sure. I'm still short a put spread in here, or I'm only short a put spread in here. I had Iron Condor, and I just closed the upside because it was like 26 cents. So, and I don't feel the need to roll it down. So I'm just short the put spread now. 175, 165.
There you go. Yeah, some other people chiming in. Short the 165 at 30 days. It's decent return on capital. I mean, you're picking up $400 on 2K buying power, just taking risk on one side, and your basis would be down at 161. So 161 gets you back to the June levels. But yeah, I mean, you're reducing cost basis nicely here. Still a solid premium, $400 for a $160 stock. Don't mind it at all. Thoughts on an MU 1x3x2 call butterfly for earnings 240, 260, 270. 1x3x2. Let's try it out here. I haven't looked at these skewed ones in a while.
Yeah, me neither.
Okay. So evaluate at tomorrow. You can look at Friday or tomorrow, but tomorrow is a much more smooth value because you have the extrinsic value expectation here remaining in your options. Friday, you obviously want to be between these ranges here. But yeah, if we're to break it down, you have a long call spread from 240 to 260, financed by 2 short call spreads at 260, 270. What if we were to just, instead of ratio this, what if you were to just do a standard butterfly, but widen this out to like 280? Does this look better? For tomorrow, it looks a little bit better. Not as big of a profit potential here on the upside, but those shorts are going to be pretty explosive if you get that move. Similar trades.
250. What's that? 260 area.
Yeah.
Yeah, that's. I mean, that's like 6 weeks ago price.
Yeah.
Not that crazy.
Yeah, either one I think is fine. You're playing for an upside move in the next 2 days. It's pretty simple. However you want to do it, but yeah, definitely on the table.
Mm-hmm.
Both of them are defined risk to the debit paid. That's what I was checking right there. So yeah, not too much of a difference.
If that thing gets back up to 260 in the next few days, oh my God.
Be crazy.
Wow.
Would be wild.
Yeah.
A couple minutes left here. Would you use the same strikes for the year-long trade if placing it today? Sure. You could skew it lower if you want, just a little bit, but I want to be long into the sell-offs here. And again, it's a year-long trade, so I really don't care about the strikes because this is just like IBIT. Look at the chart of IBIT. We went from 50 to 70, back down to 40s. Like, it's going to fly around. I'm going to be moving these strikes, so it really doesn't matter. As long as I'm collecting enough premium to take the risk, that is all that matters.
Yep.
And then I'll make the adjustments along the way. You know what's sus today? Silver up 4% and the miners still being held down. Yeah, I mean, you're seeing the same exact move in silver that you did in gold a couple months ago, where there's no ceiling in sight here.
Really strong.
Which is crazy.
Wow, that's candle.
What is the plan with the Lulu long put at 165? Right now, it's just a long put hedge. I mean, it's worth 60 cents. So there's nothing that I can do here to reduce basis anymore. It's 30 days out. We need a big sell-off in Lulu, and then maybe we can redeploy a diagonal spread or calendar spread. But as of now, the short premium is just not there to cap it for me.
These shoe comments are just cracking me up.
4E width, yeah. That's Nick's world. Nick has flat feet, so he's talked about this before. But New Balance,
I heard him, yeah.
They've got the abnormal, like whatever you need, they've got it. One more question here. Do you have any experience selling box spreads as a synthetic loan? Not really.
I mean, saw that you guys actually have from a few years ago. You got look, just actually literally Google that, and you can add tastylive to it. We have a ton of content on that. You and Nikki did something I saw, so you can look that up. I personally haven't really ever done it as a trade, but I'm aware of it.
Yeah, I mean box spreads can be nice. You can box off risk for sure, but box spreads and SPX to get whatever yield, like I think you got to do it in size for it to make sense. And a lot of these products that have come out, like BIL and other ways to capture interest rates, are interesting and it doesn't use as much buying power to.
It can also be tricky too, though. Sometimes you can think you're getting free money, and it's not working out. So I would definitely look at all the different information on it before just. If it looks too good to be true, it probably is. Just remember that when you're pricing some of these.
Yeah, and sometimes like we know that markets are pricing in interest rate cuts, but if you have a long-term box spread on and they cut interest rates, you're going to see a marked loss on that spread because now it's not reflective of the previous rate. So it can be a situation where now you're kind of locked into holding it for a long period of time unless you want to take a loss on that position. So
yeah, for those who don't know, interest rate changes do affect options.
Yeah, there's definitely nuances. So it's not something I do, but that's just me. That's it, though. We're out of time. Thanks for tuning in. If you have any further questions, you can find us on Twitter. I'm at Trader Mikey B. Jamal's at Jamal Chandler. Glenn is at Glenn Freibarger with an A. Give TastyFX a follow. Give tastylive a follow as well. And tastytrade, too, while you're at it. But plenty more content coming your way on the YouTube channel as well as tastylive.com. So stay tuned, and we'll see you same time, same place on Friday. Tomorrow we're out.
No show tomorrow.
But Friday we will be back. We'll round out the week, see what's going on in these crazy markets. We'll throw on some earnings trades in MU, Nike, FedEx if we can see something that makes sense. But keep your eyes peeled on the Tasty Trade follow page for that. But yeah, we'll see you next time. Have a great rest of your trading day.
Later.
Peace.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
tastytrade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
What is going on, everybody? Welcome back to Risk and Reward. We have an interesting Wednesday on our hands here. We are sliding a little bit, but you know, it's a good day as always. It's a little warmer here in Chicago today. I walked outside and genuinely thought it might be 50 degrees and checked my phone to find that it was 30, but it is it's warmer than the days that we've been having. So feeling good. Joined as always my wonderful co-host Daryl. How you doing? What's going on?
Pretty good today, brother. I got to piggyback off of that because legitimately when I woke up and I walked outside this morning, it felt like 50 degrees. I could honestly still see my breath, but it felt good. Also, I double layer the big jacket sometimes. Didn't need to do that today. And I was like, oh, it might be a little cold on the way over there. Get out there. I'm like, yo, it's 50 degrees. Check the weather. It's 30. So we were conditioned over the weekend, if you will. But yeah, a little bit of a slip and slide today. But we'll get into all of that. But doing well. Well.
Yeah, I had to. I didn't have to let my car preheat this morning.
Right, that was probably nice.
Over here, the transmission fluid is just ready to go when it's not 5 degrees outside. So
there we go.
I was telling you just before we came on, I have an interesting situation on my hands here, people. I just am floating this. I want to see everybody's opinions. Okay. So I have tickets to the Texas A&M football game this coming Saturday, Miami, the first round of the college football playoff. I bought these tickets like 2 days after they came out. I did some gyrations on if I thought that the prices would drop or not, and I decided they wouldn't. And so I bought tickets in the third deck, and we paid, for loose numbers here, $800 a pop for these tickets. Now, the ticket prices have cratered, and the same tickets that we have are about like $550, $600 ballpark, and there are now $800 tickets available down in the first deck. Our current seats are in the third deck. So the question becomes, in this sort of has stock parallels here, should I cut losses on the tickets that we have and reposition into these new tickets? Or should I eat that $250 and then move down on another $800?
That was framed exactly like what I would read off of a Scantron, taking one of those assessments. You know what I'm saying? So, okay, you got third deck tickets, $800 a pop. Yes. They went down in value.
Yes.
$800 a pop to be at the first deck.
Yes, I've lost on my third deck position. It's a loser.
It's a loser.
So do I close it and I reposition?
You got to roll.
I guess that's what it is. It would be more like a roll. I'm gonna post up another $250 of capital to get into these new seats.
Yes, unfortunately, you're putting up another $250.
Yes.
So unfortunately, you got to pay a debit to roll that one.
Correct.
Unfortunately, which we usually only roll if we could collect the credit.
Yes.
Right? It's almost like if you would have rolled and they would have given you the difference, maybe going from the third down to the first.
Yeah, if it was the other way, if I was rolling my first into third, I could collect the credit.
But that's not the case. So you might have to pay for the debit. But this one sounds pretty reasonable. I mean, the first deck sounds attractive and sounds fun.
Yeah, it does, and I mean, it'd be a lot.
Can you justify the risk?
Different experience. I think I can. I think
it's a personal question.
I think I can, and also I'm willing to just call this boy math and say the first deck seats cost $250, right? Because that's where I'm at now. The $800 is sunk cost. That's gone.
Yeah.
So to upgrade, if all it would take is $250, then that might be something worth considering.
Again, because it's in Texas, it's Texas and Miami. You're not in Texas every single week.
Yeah,
if you have the means to do so, I would say, hell yeah, let's get it. Let's do it. So that would be my vote. I don't know what Chad thinks. I don't know what you guys would do. But from your excitement in the game this weekend, I think it'd be worth it.
Take advantage of an inefficient market and find a sucker who still thinks they're worth $800, Gus.
Wait, but
just put them up at an $800 ask, and hope I get filled. That could maybe.
I mean, you could.
I just couldn't list them on any app because everybody.
There are some people that would snag it, right? I mean, some people are in a position to where the money isn't the thing, the convenience is. It's just like, yo, is there a ticket available? My nephew, I just need a ticket. It's $50,000, I don't care. Just give me the ticket. So I don't know. Yeah. Let us know what you end up doing with it, though.
Yeah, I'm juggling this idea, but thus concludes
that was fun. I like that.
Our real world stock market analogy here. Diving into some more tangible stuff.
Yeah.
I saw defense and oil stocks mentioned. Yeah, we got this Venezuela thing messing with defense and oil stocks at the moment. Unclear what's gonna develop from that situation. Holistically, we're down. Oracle kind of leading the charge as far as things moving down.
They've been weak, right?
What?
They've been really weak as of late, right?
Yeah, that's what I was going to say. This Oracle leading the charge of the broader market downward is a sentence that I have said, I think, a couple of times before now in the last week. But yeah, Oracle going through a little bit of a rough patch. Today, I believe that they lost... they were trying to build a new facility and they lost a $10 billion investment from somebody. Okay. That's the bearish news for today. In other market news that's moving things right now, Warner Brothers, unfortunately for my position, has elected to go with Netflix, even though Paramount's deal is way, way better. But the shareholders still have to vote. So save me, shareholders. If you are out there and you are a large Warner Brothers shareholder, Why do you want $27.75 a share instead of $30 a share? It makes no sense. Some of it's going to come in Netflix stock too. What do you care? Take the $30 cash and buy some Netflix stock.
Well, then there had to have been some type of underlying value. I wonder what it was. What was the incentive for them to still go with Netflix? The branding, personal reasons?
It's antitrust concerns because Netflix wants to buy less. They want to buy less of the IP and everything. It's like going to become a little more fractionalized. So I think they think it'll be easier to get it through than it's full on just merging Warner Brothers into Paramount. There's going to be antitrust stuff there, and also they had already like full on committed to the Netflix deal before Paramount swept back in with this all cash, the hostile thing. Initially, Paramount's offer was comparable and was going to have some stock included, but then when they learned they lost, they decided they weren't going to take their ball and go home. They were going to shoot another shot, so they went hostile, and they were like $30 a pop. But Warner Brothers also said that they were concerned with the fact that the Ellison family was going to finance the deal personally instead of it being like a business-to-business situation. So there's a lot of moving parts there, but yeah, that does look like it's going to be Netflix or golly, I feel like it's going to be Warner Brothers' final decision for who their suitor is. Although, like I said, shareholders still have to vote, and if the shareholders decide they want $30 cash per share instead of $22.50 per share in cash and $4.50 per share in Netflix stock, then they'll choose to go with Paramount. So the jury's still out, but the Warner Brothers board is on board with the Netflix deal and has recommended the shareholders vote on that.
I mean, even though nothing really came out of this for Paramount, it was exciting to see the hostile steal on that contract, so it was kind of cool to watch from the outside.
Got it, man.
It was cool to see, though.
I wanted it so bad, but a good, valiant effort by Paramount, certainly. And like I said too, I mean, it's the deal's not over yet, and you know, and I think that the board and the shareholders. And I mean, this is by no means a hot take at all, but the board and the shareholders think differently. Like they are thinking about the company in different ways. The shareholders are thinking more about what will personally benefit me the most, while the board is thinking about what will benefit the company the most. And so I do think, and I would be interested to see what the live odds are on Polymarket right now, actually, but I do think that there is a legit chance that the shareholders still choose to vote for the Paramount deal because it's more money.
Yeah, great point. I mean, when the stars align, maybe eventually the shareholders and board could somehow get onto the same stratosphere, and then maybe these transactions.
Yeah, I mean, Netflix is offering $27.75 a share, and some of it is stock. So if you take the Paramount deal, you know, you're getting $4.50 of Netflix stock a share, but you could take the Paramount deal, get $30 cash a share, and then just straight up use the $2.25 difference that you're getting ahead of the Netflix deal and buy Netflix stock with it if you so choose. You could take $4.50 per share if you want and buy Netflix stock with it and have the exact same thing, but get $2 more cash per share. So it just doesn't, it doesn't compute a whole lot to me why they're so hung up on this Netflix deal, and I do think the shareholders might change course on that.
You know, I mean, as we're getting a little bit older, it's starting to seem that Netflix is starting to become one of those competitors that might be around in 50 years. You know, it's starting to seem like after we're getting a little bit further in this capitalistic, you know, society that we live in, it's kind of Netflix might be one of the winners of capitalism, you know, so they just might be one of the big dogs, just for the media space at least.
Yeah,
so it looks like how things are panning out.
Yeah, I mean, they're just buying up more. I mean, we're definitely seeing, you know, consolidation going on in the media space right now. I mean, Paramount themselves just merged with Skydance and, you know, listed themselves in like May of this year. So even that is
I'm waiting for the
recent merger.
I'm waiting to hear the bid for Netflix buying Paramount. I'm waiting to hear it.
Yeah, Paramount clearly is asserting themselves as one of the big dogs in this business, and the Ellisons have bottomless pockets, so that's the best thing that Paramount has going for them.
100%.
But yeah, I agree with you. I think Netflix absolutely could be around, you know, in 50 years from now.
I mean, most companies aren't lasting half a century.
Well, what it would take, I think, is it would take something, and I don't know what this even looks like, but something coming in that revolutionizes at-home entertainment so much that TV itself is sort of something that becomes obsolete in a internet or AI style way, where it's just like a whole new
format is completely different.
Yes, and I don't know what medium that. I mean, holograms, VR.
I see what you're saying, though.
But I think that for Netflix to legitimately get shaken out, it would take a fundamental
disruption
of what entertainment is. Yeah.
I see.
I think they're too big to fail, barring something.
Funny you bring that up, right? Netflix disrupted the space as to why they're so successful. They literally disrupted the space.
Precisely. But as we've seen with Google, who did the same thing, now all of a sudden we have these concerns about Google because this revolutionary thing has come in and is going to cannibalize their search engine revenue. So things change sometimes.
Right before that, I was literally talking about, I was like, who's ever going to catch Google? Literally like a week later, with OpenAI is coming out like crazy. No, we'll see what happens. It's going to be exciting to watch.
Yes, definitely. What's catching your eye?
Nothing too much on my end, to be honest with it. Just a little bit of the micro NASDAQ. We had a decent couple potential opportunities. We can get into that right now if you want to touch on it.
Yeah. One last thing on the merger topic as well. There's news breaking today as well that Frontier and Spirit are looking to merge. This has worked out very favorably for me. Airlines, both of them.
Was that? It was Spirit and Blue.
Spirit and JetBlue.
And JetBlue
yes,
originally.
Which is exactly what I'm about to get to here.
Gotcha.
Is that so Frontier and Spirit have expressed interest in a merger. Both stocks got a bump today, which is actually to my great fortune. Frontier yesterday announced that their CEO was going to be gone at the end of the year. They're forcing him out. He's resigning, whatever vernacular they're going to use. He's leaving at the end of the year. They're going to replace him with the sitting president. And their stock tanked 13% as soon as that news broke. I have a tweet breaking this down yesterday, but this CEO has done nothing but drive their share price into the ground. They IPO'd in May of 2021. They hit their all-time high, $21 the same month, and their current share price is $5. So why would that CEO's exit justify a 13% sell-off? It doesn't compute. I don't see how the new guy could be worse. So I got long some Frontier, which, by the way, their ticker is ULCC. Terrible. Pick a new ticker. But I got long some Frontier yesterday off that news, just trying to play the gap fill. And then, fortunately for me, today news breaks that they're looking to merge with Spirit, and the stock moved up a little bit. But this should be moving the stock, to be quite honest with you. I'll take the gains, but this is so getting blocked. What are we talking about? If Spirit and JetBlue got blocked for antitrust concerns, if Spirit and JetBlue gets blocked for antitrust concerns, I know Frontier is a larger company than JetBlue. How in the world is this going to not get blocked?
We have a real world example. The CP3 trade that was blocked. Chris Paul going to where again?
Sure, that was Lakers, yes.
With the Lakers, right? And that was blocked. And then now we got LeBron going to Miami in 2000, whatever year that was, going to Miami to team up with Dwayne Wade and Chris Bosh. I mean, very, very, very similar principles going on.
Yes, it is. Yes, because the NBA said it would be anti-competitive if they let the Lakers be that good.
100%.
Yeah. No. Now they do everything for the Lakers because they're the biggest market. But that's beside the point. But yeah, so I don't see any way that merger could get pushed through. And I will say even furthermore, that's just me objectively analyzing the situation. I don't think either of them should have gotten blocked because the third company exists. If Spirit and JetBlue merge, Frontier still exists. There is still competition. It's still a giant company. And vice versa, if Frontier and Spirit merge, JetBlue still exists and there's still competition. So I don't know that necessarily either of them should have been blocked, but this is 2017 finals blocked by James. If they try to merge, there is no chance.
You know what?
This works.
A little bit of lobbying, maybe a little bit of influence could be going around. Look, there's things that go on behind the scenes that we don't see. There could have been personal reasons with the Chris Paul thing going on, and some politics behind the scene going on to not let that go through, and then more politics going on to let LeBron go to Miami. In the same way, that could have very well happened with the airline industry with Spirit and Blue, and the same thing could be happening with Frontier. Maybe if whoever has a little bit more power back there, these things align in their favor now, maybe they'll let the Frontier and Spirit go through. But I think taking everything at face value when it comes to some of those deals, I think there's always so many details and little things and nuances that we just will never be able to know or grasp that go into a lot of these decisions.
Yes, absolutely agree. Ryanair has this figured out. Whatever Ryanair's model is, somebody needs to just jack that. Because I remember thinking in Texas, like, why is it still $150, $200 if I want to fly from, Houston to Dallas? I should be able to hop on some plane for $90 that takes me from Houston to Dallas. And it just doesn't exist. But Ryanair is doing that all over the place in Europe.
They should let all three merge. Yeah, let's just have one airline. If they don't end up corrupt, we could have one airline. Then if you want to upgrade, you upgrade a little bit more. No, I don't know. Maybe we might end up with one of everything in 100 years in the society that we live in. Like we might end up with one big dog in each industry, anyways. I mean, that's the game every company is pretty much playing in their space. So
I mean, we were there 100 years ago, and that's why antitrust stuff even became a factor in the first place.
Right.
Rockefeller.
I mean, what's that one game where you eat the small bubble and then you eat the bigger one?
Oh, like what? Like Agario?
Snake.io or something?
Yeah, Agario.
Yeah. That is capitalism. I mean, perfect visualization of exactly what's going on. So I know we've seen Netflix should buy them in their bankruptcy. Something similar could happen because Netflix is in the position to scoop some of those up later on. Netflix can play the long game. I think if you can play the long game, you're going to win. So.
Yes, for sure. Then there's antitrust issues. Yeah, we obviously just dove into that somewhat, but I assume you beat us to the punch on that one. Yeah, absolutely right. Costco being mentioned. We'll take a look at Costco here in a sec. They should all three merge. Now that's an idea. That's an idea right there. They don't even need to necessarily merge. What if they did like a what's the United thing, the Star Alliance or whatever? Like there's 5 airlines that are all in the Star Alliance bucket. They should do that, but call it the the Dirt Alliance, whatever, whatever the opposite of a star is. When they merge, we're getting squeezed for every cent.
No, with that being said, we can jump over to the TradingView platform and just check out what some of these markets have kind of been up to. It's been a little bit more difficult on my end, I will say.
Stephen, yes, absolutely. I mix up my strategies. I think Arrow likes to stand on his convictions a little bit more. I don't mean to speak for you.
No, what was the question again?
The question is, do you guys mix up your strategies in the trade cycle? Like, if we're in different points in the market?
Oh no, more so your sizing will change.
I certainly do. It really, I think I could break it down to just like when I'm deciding strategies. The first question is, am I going to try to, gain credit, or am I going to try to farm theta here? Like, what's the angle going to be? And then I kind of zoom out from there. But yeah, if premiums are juiced, and I know that theta is something that I want to take advantage of, then I'm thinking more short puts, short calls, whatever it may be. If we're talking about a reversal, and then if it's a situation where we're just in normal market conditions, but there's something that I'm particularly convicted about, I'm more likely to be buying things.
Yeah. A Big Deal said, I don't care about merge. Just please go faster. Travel takes too long. Big Deal. You're going like 50 million miles an hour on the plane, brother. But I still agree with you. If we could teleport, that'd be a lot better, because I'm not a big fan of a 3-hour plane ride either. Even though it's a lot quicker than a horseback ride, 50 years ago.
Yeah, and to this point, I really can't believe nobody's ever tried like a Concorde sort of thing again. I think that the failure of the Concorde is what has people, so concerned to try that again. But there's clearly a market for, like, I don't know, slightly, like, there is clearly a hole in the market, in my opinion, between first class and private aviation. And people are coming in to plug that gap a little bit with these shared private jets. The like JetXs and NextJets of the world are sort of filling that gap. But even then, the gap is really big. I mean, a typical domestic first class flight is going to be like maybe a little over $1,000. Let's call it $1,000 for, the sake of simplicity rather. And then, if you want to jump up to like a NextJet sort of situation, that's going to all of a sudden be like $9,000-$10,000 a person. So there's a middle there. And if someone would just make a fast jet that's like good, service and not super packed, I think there is a market that would be willing to pay $3,000, $4,000, $5,000 a ticket to do that.
Yeah, I would agree 100%. I just never been a big one of travel, but I will say last to that point is, because I haven't been a big fan of traveling in my earlier years, maybe by the time I would like to travel a little bit more, maybe we have some more new gadgets, more new tech, whatever it is, maybe make the ride a little bit more comfortable. I don't know. I hate the whole process. Yeah. I'm just one of those.
They're always innovating. I mean, these little things pop up in like planes. Anytime I'm in a plane that's like, relatively brand new, there's always something a little new in there. A USB-C port pops up, or
my
screen's
USB-C port or my outlet never works. Like, my outlet never works, the one that I sit at. But anyways, that being said, we had a couple opportunities today. The market sold off right out of the gate. We tried to take a long off the value area high, kind of just for like a dip buy kind of move, just because of how volatile the market was to the downside. So we stalled just a little bit over here at this value area high, started to get a little bit more volume. So we ended up taking the long here, and we added a couple contracts, and things seem to be going pretty well so far. We ripped about, I think, we went up about 100 points over here. But I mean, if we're, looking from a structure standpoint, I remember having in one of the limit orders, maybe somewhere in here at one of these highs. And it was just shy from being able to exit about half of that position. So with that being said, the market started to consolidate a little bit longer.
The use of a sad face is why I'm chuckling. Half off here. Market.
Oh, yeah. It was just sad. It was like, man, we got the momentum into the market, and then it was like, yo, this market might be turning around. So because we were already up 100 points, I didn't want to get stopped out on both of the contracts. So throughout the duration of this consolidation, I was like, we'll take half off, because if I can take half off here, if we do get stopped out, that will be able to cover the costs of just getting in this trade if this ends up turning around and we don't actually seek value to the upside. So the market started to stall. We took half off, and then we had our stops down here at the lows, because, again, that's going to be the area that kind of invalidates the trade thesis. So that's kind of why we had the stops in at the low. I didn't want the low to come, so I don't want to be in the trade if the low does come. So that's why we just exited there in sad face. But that's a little bit of the annotation for that one. We took one more opportunity at another level of value today. We sold off down near this value area low, and I was very careful right here, right? Because my bias, I wanted to get long a little bit more over here down near this value area low. But I was very understanding of my bias. That's why I was also very quick to cut the loss. And I did about a couple times. So let me see if I can go on a smaller time frame so that you guys can see exactly where we were getting in and out of the market. But this was a difficult one, right? It had a little bit to do with the lack of preparation, I will say, because for the morning, I was more so prepared for this first move. So all of this was game planned. If things went south, I know exactly what I'm doing. But when the market sold off down to this value area low, I didn't think we were actually going to get down here. Bro, that's where you got to check yourself. That's where you just have to check yourself. So anyways, we get down to the value area low. I'm wanting to get long, right? In hindsight, maybe we could have structured a better plan. Trade was managed super well, but we didn't even get to catch the short side. But we clearly understood that if the market starts to trade outside of our level of value, we could seek new prices to the downside, and that's exactly what happened. But that's the reason why we were so quick to cut that trade, because I wanted to catch the long, but at the same time didn't want to catch any of the downside. But if we zoom in here to the 15-second chart, you can kind of get a better idea with how this was going. And I think we maybe, it all happened so fast. I think this is within like 30 seconds. But long story short, was not prepared well enough for this value area low move. Didn't have a game plan structured out. But those were the trades of the day. I still think there's some pretty valuable takeaways. But other than that, we got new lows on the market, and we're going to be patient and wait for tomorrow, most likely, unless, unless the market reaches. So the only other level of value that's in the vicinity is this value area high over here at 24,951. So we'll just mark that off real quick. And you don't got to trade this, but mark it off on your charts and just see if or how price responds, and if it at least acknowledges these levels. So we're gonna mark off the value area high right here on this one. I gotta use a different tool. Let me go to the horizontal line. We're gonna plot that right there. Give me the horizontal line. There we go. Let's see if that's the correct. There we go. That one's 24,951. I'll delete that. 24,951. 24,951. I deleted 24,951. Cool. All we're gonna do for the rest of the day is just see if price can get down here, and if it responds off these levels, maybe we potentially take some longs. I'm leaning long bias just right away if we get down here, just because why? I mean, we sold off for like 3 miles all morning. So that's why I'd be leaning long bias. Don't really feel like getting short into the hole. Don't mind taking a loss if we can control the loss. But I don't mind taking the opportunity if we get it either, because we sold off so much today. It would be nice to get a little bit of like a power hour move or a little bit of a pop in the market, because we have yet to see one. But other than that, it's all that's going on over here, brother. I mean, I know crypto's been volatile, Bitcoin, but these are the trades for the day, at least.
Yeah, let's have a look at Costco for the people.
Yeah, a little bit of some Costco. A little bit of cost. What's been up with Costco? Is there any news?
I don't believe that there's any news. What was the original question here? Got to scroll up a little bit. I believe it was something to the tone of, "Are you guys bullish on Costco?" Anyone looking at Costco bullishness is the exact vernacular. Data Trader contributed, "There's a new Costco being built a few miles from me. Do I get a membership discount if I'm a shareholder?" You know what? Good question. Honestly, I bet you could make that happen. I bet if you, I don't know what your share position looks like, but if it's anything even remotely substantial, like four figures or more, I think that there is a way that you could probably get yourself a membership. I think if you emailed somebody, because Costco, that's their whole thing, right? They're giant on the consumer experience, providing value to both their consumers and obviously their shareholders as well. That seems right there. I think if you shot an email to like the Costco investment relations email and said, "Hey, can I get a membership because I'm a shareholder of X value?" They might do it. They really might do it. That's a good question.
Can you pull up that 3-second chart? Dr. Jim said you really had that time frame on lockdown, girl. Man, this man, Dr. Jim, out here throwing shots still. That's hilarious, though. Yeah, we can do the 3-second chart just because Dr. Jim requested it. There's no 3-second chart, Dr. Jim. I see a 1, 5, and 10, and 15. Come on. Have me looking, though, while we're live.
Dr. Jim does not know charts.
Dr. Jim got me.
Confirmed.
He got me. Nah, he's just, Dr. Jim just teasing.
He's right. I love Dr. Jim. I tried to do bullish trades in Bloom Energy and Nike Just Do It. Both are losing. I call Nike Just Do It. Love it, Ranch. Let's see. What was the first one? Bloom is BLE, right? BLE? Is that BE? BE.
BE, break even.
B.
Wow, that's looking like it's getting hit pretty hard. I don't know. I'm on a 30-minute chart, and I mean, just from this run up in and cool off. It's looking like a PLTR kind of,
Yeah, this is a broader sector thing. I actually see do you know how much that's down on the day? GEV is getting murdered. They are down almost 8% on the day. So I guess that they're leading the charge in this energy sector or whatever. They obviously just took a big pop the other day, so all they've really done is gap fill back to that original level. But 3 second or 3 minute?
I don't trade the smallest time frame I'll go on is a 15 second. I'm not doing it. And even that is a little, sometimes.
Errol is an algorithm. 1 second candles.
The thing is, lastly, it's not even like you're looking for some formations on a smaller time frame. All you care about is price, volume, and time. No head and shoulders, no this, no whatever. I just want to see is a high being broken, is a low being broken, and you can see that with a 1 second candle, a 5 minute candle. You could honestly use a 30-minute candle because you just need the prices. You don't necessarily need each individual candle per se.
Certainly. Data Trader mentions the Solana ETF BSOL, BSOL. That reminds me that we have got to take a look at this action that Bitcoin had today before we take off, because Bitcoin did the biggest ankle breaker move today, and I'm upset about it. Yeah, here's that Solana ETF.
That is a ankle breaker crossover if I've ever seen one.
Looks beaten down with the rest of crypto. Oh no, this is the Solana I'm talking about. Bitcoin was what did the crazy move today.
That is ankle breaker. I will say I remember my first game. I think I was a freshman. I was swinging JV actually. My first game swinging JV was like our whole city was in town on this game. It was one of those games. And I remember I got in for the first time. No, I was JV swinging varsity. First game. Get in, trash minutes, do some type of turn. Dude slides. Just ankle breaker. That's what it reminded me of.
And then pull up Bitcoin as well. Bitcoin is
BTC.
Yeah, Bitcoin is the one that's really nutty today. Look at that. Are you kidding me? What is this? When I made this initial move, I was like, yes, it's happening. I'm irresponsibly exposed to Bitcoin, and it's finally going to pay off. And then it just gave it all back, to the cent. It was hilarious how quickly that this candle went immediately back down. These are 30-minute candles, by the way, guys. This is an hour that we're talking about that we saw this price action. But yeah, literally broke, went from 86, broke 90 on one 30-minute candle, and then shot straight back down to just right back to 86. This is insane. I don't know what this move is about, but it's killing me, man.
Yeah, no, I mean, I had seen some info coming out about the quick pop. I thought it was funny because I seen a quick pop. Everyone was talking, yo, Bitcoin went to this and then dropped back down to whatever. It's like, we're just tweeting out moves in the market. We're just tweeting out moves. But they did attach some of the liquidations that occurred on that pop to the upside too. So maybe there's a little bit of involvement on that end. Breaking your ankle is not a good time. I could imagine. I mean, rolling your ankle is the worst. I can't imagine breaking your ankle. Good Lord. Can't imagine.
All right. Well, I know we're about at our time. You got any closing thoughts?
No, that'll be it on my end.
All right. Well, I guess that's all we got for today. Thanks so much, everybody, for coming to hang out with us today. Thanks for all the laughs. This was a lot of funny comments today. I found myself laughing at the comments a little more than usual. Appreciate you guys. I laugh every day, but today it was particularly funny. You guys were on your A game. We dearly appreciate you taking the time, and seriously never take it for granted. Errol and I'll be back here at same time, same place tomorrow, 12 o'clock noon Central Standard Time. Be sure to stay tuned for Futures Power Hour coming on next, and we will see you guys next time.
tastytrade's active trader interface makes futures markets your arena. Built for the bold, not the board. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today. Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in
We are back. It's Wednesday, December 17th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Thomas Westwater. Thomas, good to see you again.
Good to be here.
It's turned through the middle of the week here, which is not a pleasant one for equity markets. Blue Owl announced that they're pulling back from funding, the debt funding of some of Oracle's data centers. That seems problematic for stocks. And it is for the S&P, yes. For the NASDAQ, even more so. Those tech stocks and the AI-centric names are having a fairly rough session. Metals are a whole nother story, Thomas. We'll have to talk about that. But obviously, the seasonality here disappointing us so far. Yesterday is supposed to be the low for the rest of the year. Not yet, as it were. We do have CPI to get through tomorrow. Today was an OPEX day, so maybe the markets are finding some stability, but not looking like it from a technical perspective. So rough sailing for the equity bulls among us, Mr. Westwater. While we have someone like you here, though, who is more or less a commodity specialist in my eyes, I figure we could talk a little bit about the oil futures curve and how that looks like a contango once you get through the first few months. But really, this is pretty much flat. We're talking about 55.90 up to about 56.25 for the contract expiries going out through December 2026. Just the first thing first, when we look at an oil futures curve that is this flat, what is it telling you about the state of a market where we hear so much about oversupply and potential recession concerns?
Yeah, I mean, usually you'd want to see, if you're bullish, some type of backwardation more ingrained throughout this curve. But what it's really showing is, kind of what the forecasters are showing with how the market's going to behave next year. So surplus starting to build in Q1 next year and really accelerating in the second quarter of next year. So, I mean, this comes after OPEC has been, increasing production, things like that. You have the peace deal between Ukraine and Russia potentially, being ironed out, especially by Q2 of next year, even though it's not as visible right now. But it just doesn't look that great for oil. Some economic uncertainty too. We're getting some labor market weakness in the U.S. now, so it looks like, GDP projections, they're still not terrible, but not enough to really support a robust oil market that is going to be trading, say, at $70 or $80 a barrel. Today, we're only seeing a lift because of a news headline with Venezuela, total blockade, although it excludes one company in particular that is U.S. based. But that's about 900,000 barrels per day of oil. Significant, but not too significant. So, I don't see this really propping up the oil market in lieu of other things that are going on. The real drivers are really going to be the supply outlook and how the economy is developing. But it's I have my iron condor still on in crude oil, but it is testing the put side of that trade. And, backwardation in the current contract versus the next month's contract, it's really, we're only at about 10 cents. You go back to August, we were trading around 80 cents. Back to June, we were trading in a backwardation of around $2 per barrel. So really, when you look at the prompt spread, which is those two first contracts, it's kind of seen as a proxy for physical demand in the market because traders want to get barrels sooner rather than just a little bit later. So if there's big demand for oil, you're going to see the current contract's price rise compared to the follow-on months. So really this is, an oil market that I see certainly staying probably below $62 a barrel, the way things are looking now. And, going into next year, trading in the low 50s is probably a pretty, pretty doable price for oil.
Yeah, you mentioned the prompt spread here, the difference between the front month and the second month contract. Typically, that means that the barrels of oil are more valuable now. Inventories are being drawn down. Refiners are competing for immediate supply in the market. The physical market's a little bit tighter. Maybe that's a good thing, what we're seeing here at the front end of the curve. But again, the shape here is really, that's a y-axis trick, Thomas. We're talking about a range of 55.90 up to 56.25. So a difference of 10 cents in the prompt spread. I don't know if that's anything to write home about. A lot of people look at these futures curves, especially for oil or natural gas, given what's been going on in these markets. They see them as academic exercises, and I don't necessarily view it as that case. I think they're good, more or less diagnostic readings for the health of the energy sector. First, the shape of the curve is going to tell you where the stress is. Backwardation typically signals the tight prompt supply. Inventories being drawn down. Refiners are bidding for barrels now. Holders of physical crude are being rewarded for selling it today rather than storing it. Contango, on the other hand, points to excess supply or weak near-term output, where the market is effectively paying you to store oil. And so for a trader, that immediately frames where price is being driven, if it's being done by fundamentals in the front end or longer-term macro expectations. Second, if you're a futures trader, the curve does embed carry and roll dynamics, which directly impacts your return if you're trading this directionally. If you're going to be long the market through futures, backwardation provides positive roll yield as contracts roll down the curve. Contango does the opposite and can bleed out your position even if the price goes nowhere. So that's why traders with different directional views or even the same directional view can have very different outcomes depending upon how they execute and put on a position in the market. And then finally, the third thing that we'd want to talk about here is that the curve reveals future expectations about supply, demand, and ultimately policy. We don't say that forward curves are future predictors of where prices will be, but they embed expectations for what will happen down the line. If it's a backwardation, it might be saying that whatever issues we're having with shortages are temporary. If it's contango, it means that we're, expecting more demand in the future where there's a lot of excess supply in the short term. Maybe it has something to do with future production or OPEC. But you're going to want to keep an eye on this curve, which to say, Thomas, this curve's really flat right now. It's difficult, as it were. This is not a great market to get that roll yield in. Because if I'm buying the front month, okay, maybe all things held equal, I can make 5 or 10 cents on the roll down to the next second month contract, but that's not really all that significant right now. And volatility is going up with prices not really going anywhere, so to speak. So just at the top of the show, I figured it'd be appropriate we spend a little bit of time talking about why we look at these commodity future curves, particularly for the energy products, which, for something like gold or silver, or even like a Bitcoin future, we're not making the same type of, we're not drawing the same type of implications out what it means for the broader market or macro in general.
Yeah, and I mean, if you see oil, start sinking into the low 50s, that's certainly an indicator that there's economic concerns, right? That's already what sub 60 oil shows. If you have a blistering strong economy and you've oil price around 58, that there's something not lining up there.
Thomas, we mentioned here that stocks are being weighed down today as we turn our attention to the charts to what's becoming, just an uglier chart. As we're sitting at the session lows right now, volatility is perking up a little bit here too, with IVRs in the high teens or low 20s. You're thinking about where the NASDAQ is, but that's a 1% loss for your S&P and fresh monthly lows here. Your NASDAQ off 1.68%, now 1.7%, 24,950. Getting close to maybe a back test of a trend line of sorts. But your Russell, that is down by 0.86% here. Blue Owl Capital, it's providing private market credit for a lot of these AI companies. And it's telling us today that it's going to be pulling away from backing a $10 billion data center in Michigan. During these cycles, Thomas, you really need debt to continue to provide the financing, particularly private equity. And, to make this less theoretical for traders, perhaps there's a bunch of folks who remember the 2021, 22, 23 crypto cycle. But when venture capital funding dried up, that's when you got into your crypto winter and prices really started to come in. You don't get back to the other side of that until inflation starts barking its head and ultimately the Fed starts cutting rates, the war in Ukraine presses on. But the initial decline in private market activity and the funding availability coming from private markets, that was what signaled the period of contraction and consolidation in crypto. So there is that canary in the coal mine sense. Maybe it's the blue owl in the coal mine, Thomas, that you look at this report today and say, all right, maybe the fuel that's been pushing this market rally higher and funding this whole CAPEX build out, maybe there's not so much money in the banana stand after all. And if it's not there, then what legs do we have to stand on right now? Because we don't see cuts coming with any definitive posturing according to Fed funds futures in the wake of that non-farm payrolls report. They are not saying that the cavalry is coming over the hill.
Yeah, so Blue Owl, I believe they're still funding 2 other projects for Oracle, but this really shows that how sensitive the market is to the AI narrative, and most of this year we were very bullish on the AI narrative. It was helping, but it was a really Goldilocks scenario where, there's a lot of enthusiasm, and when enthusiasm gets that high, it only takes, in this instance proves it. One body shot could really drop it to your knees, the whole thesis. And for a market reaction like this, it just shows how sensitive this market is to headlines like this. So, it shows you that you have to be on your toes when it comes to trading equities, especially if you're trading it on the thesis that the AI narrative is going to lift equity prices across the board. RSP, the equal weighted, it hasn't, it's holding up a little better. I guess some other stocks rotation into them, but still, I mean, this Oracle Blue Owl thing, and Blue Owl did cite, I believe, politics is one of the reasons, but the bottom line is that they're not funding the project, and that's injecting some fear into the market. So we could possibly see more headlines like this in the future, and I would expect, the market reactions to probably get more severe as it shows more and more skepticism coming into, AI and data centers generating returns that will sustain already high equity prices. It's so I mean we have I believe Micron reports after the bell today. Is a good earnings report from Micron going to be enough to really reverse some of this bearish sentiment in the market? And now going into a low liquidity period, I think you have to be even more tactical in how you're positioning your portfolio to go through the next couple of weeks where the market can have lower liquidity.
Yeah, I think that's a great point. You mentioned Micron today. That is after hours. Not a small name in the space, 260 billion market cap company. But it's not a Broadcom. It's not an Oracle. It's not a Google. It feels like it's asymmetrical still, where like you get the narrative confirmation, hey, earnings are bad. Another brick in that wall of worry that's building again about AI, but right now it tends to weigh things down. Yeah, that to me is the big concern, right? You look at these news stories coming out. Great, OpenAI is talking about making an iPhone. Did you see their new image generation with Sora? I was asking it to make graphics for me. Like, here's a table. Please turn this into an image. Still not giving me full letters. Still giving me the nonsense made up gibberish symbols. Yeah. So like, yeah, they're great. They're going into iPhones now. Fantastic. What about the existing product? Is it getting any better? It's a bad day for the Mag 7 name, although you mentioned breadth here. I pointed out RSP. I looked at what was happening in QQEW. They are slightly better performers than what their market cap weighted indexes would be doing otherwise today. The breadth isn't terrible. One of the things on the platform, Thomas, that I like to use every day, we pilot on the show basically every single session, our watch list. This is probably my favorite tool here because it allows me to go back and forth from what I'm seeing in the futures market here, like we do in Futures Power Hour and Overtime, but also then take a look at things like breadth by pulling up this sector ETF watch list that I've created. And anyone can do this on the left side of the platform. You do have your watch list here. You can tinker that with that, of course, by going into your settings and making your way over and adding the symbols that you need to add. We can go into here in the bottom left-hand corner if we wanted to add another symbol to this, Thomas. Let's say we wanted to add MAG 10. When it ultimately comes out, we type it in here and click enter. All right. We track 25 sector ETFs here on Futures Power Hour. Of those 25, I'm seeing only 9 that are in the red. So 16 of the 25 are green today. It's not the greatest day overall, but you are seeing a market that isn't necessarily giving up. It's just more of that rotation away from tech. And to that point, I shared this chart in our internal research chat today, but 2025 year to date, as of the market close yesterday, tech stocks XL 22.5% return. 30.2% of that return is EPS growth. And that's because the PE multiple growth is down 5.9%. So putting all this together, it's not like you're seeing tech stay over bloated, right? Everything else is kind of absorbing, okay, tech looks a little shakier here. The AI narrow is a little shaky here. I don't want to take my chips off the table. I'm just going to put them onto a different spot on the table. And so while we're not getting that acceleration to the upside because it's very difficult to do so without the concentrated names in the Mag 7, you're still not seeing a market that's telling you that it's falling apart.
No, you're not to a great degree. And I mean, the VIX still under 18, If the VIX was spiking a lot more, I'd be definitely more concerned. At the same time, Energy XLE doing some of the heavy lifting in other places of the market. Still, I mean, this puts me in a spot where I'm pretty hesitant, but in any case, it doesn't change up my game plan too much anyways, because I was planning on lightening up my portfolio before the holidays for not only liquidity reasons, but also, I myself have other obligations besides for, being at a Christmas Eve party or something and looking at a future screen, I get,
right.
What are you doing on your phone? Looking at the futures market doesn't really, can't really.
Placing hedging trades.
Yeah. So, I'd rather drink some eggnog with some bourbon in it, and that's why I'm lightening up.
Lightening up indeed. So we have our rotation occurring here today, Thomas. The commodity ETFs are among the top movers. We're going to get over to what's happening in the energy sector with some of the headlines about Venezuela and the embargo or blockade, coupled with whatever's happening in the metals again today. But stocks right now is still our focus. Volatility moving up. Okay, and this has been something I've been hanging my hat on here, that volatility hasn't been really moving all that much. Today is a different story. The VIX is up over a full point. So then what's happening in the futures curve itself? You're seeing a little bit more response. So we go to VIX, it's up 6% and change. We don't quote the VIX in percentage terms, but for the sake of this exercise, we will. It's up over a full point, up more than 6%. VIX front month is up 20 cents, 1%. Further out in time, G26, 20-cent bump. H26, 17. This is not exactly a market that's pricing in a great more volatility as you look further out in time. So feels again like short-term kerfuffle. Short-term kerfuffle. Why? VIX one day is approaching what would be its highest close that we've seen through the month of December. Do you think that these are jitters ahead of tomorrow's CPI report? Is that really what this is all about? Like the data centers need their cheap funding, if you may allow me. The data centers need their cheap funding. Fed can't give us rate cuts to help encourage that lending activity if inflation's still pressing up and up and up.
Yeah. I think we're getting a Fed next year that is perhaps going to be a little more tolerant of slightly higher inflation. So if the number, regardless though, if the number comes in hot, I think the market will take heed and, cool some of those rate cut bets. And that of course, isn't going to be good for risk sentiment, because it'll mean the Fed has less room to maneuver, especially to the downside. So the number, I think it's something everyone should be watching. You should be watching how the market reacts to it. And I think it's the last, data point we really get for the next good bit here that could really influence the market.
After that data point, looking at even just the BLS's revised calendar here, which for the sake of rather show than tell for those that are watching, you can head over to BLS and they have at the top of their website this review schedule. So we go out into here, right? A JOLT survey comes out on the 30th of December. But once we get through this Thursday, CPI, earnings, wages, that's it. You're not really looking at anything until you get back to the Friday, January 9th non-farm payrolls release. So the December non-farm payrolls report. And that puts us into a window, Thomas, where really after tomorrow, you go 1 to effectively 3 weeks without any meaningful economic data. And sure, yes, participation in the market will be low, but it also means two things. One, the narrative that's in place today, tomorrow, after the close, Friday, as we get into the end of the week, that's the narrative that's in everyone's minds now as they're managing people's risk and they're managing their books until the final 2 weeks of the year. But it also means that because you're on this narrative trajectory, if something comes out that is even just considerable weight of evidence, like let's say this time next week, you get an announcement that someone's moving forward with $15 billion to step in Blue Owl's shoes for Oracle's data center. That could have a huge outsized impact to the upside. And then that becomes the track we stay on for the next 2 weeks, absent any other catalysts. So we're kind of crossing the final threshold here where we have a sense of what the market's thinking, behaving. The price action matters most, of course. This deleterious price action of having lost everything effectively in the S&P going back to November 25th. Not great. Certainly upsetting the apple cart for me, who's still sitting long MES and an ES call spread with a 7,000 strike looking further and further away.
Yeah, and you have to ask what could really come into this market that can revive enthusiasm and give us a big ripper higher. What is there?
100 points ago, I was feeling better, Thomas, and I said, "Oh, maybe it's just the end of OPEX. The market's getting unclenched." It did get unclenched, just not in the direction I was hoping for.
Yeah, and there is not sure if you've seen this, a headline from CNBC citing Bank of America. It says hedge fund clients were the biggest net sellers last week, based on stock and ETF flows.
I don't know what to make of that. What I do know what to make of, though, is that it's time to move on to the bond market, which bonds did turn red after the most recent 20-year auction, which was not a bad 20-year auction for my gander. Maybe you have a different interpretation, Thomas, but I do see that volatility in ZB now is at negative 3.1. I see that volatility in ZN is negative 3.2. So they both joined the negative IVR party. That's nice. 20-year bond last 6 averages, bid to cover ratio was 2.65. This one was 2.67. Indirect bidders, 63.8%. Prior 6 auctions, this one's 65.2%. It stops through by 0.1 basis points. It's good. It's a good auction. Nothing really to write home about either way. I suppose it's not as bad as it could have been, but we see where we've gone from the top of the hour. The market is unchanged, so to speak, here. It's just been a difficult day for bonds, for notes, but volatility keeps dissipating. How are you handling this market, right? I know we've talked about this a little bit on Monday. Yesterday, if folks are following the 12 days of trading, if they headed over to tastytrade.com/12 days, they would have gotten yesterday's email regarding portfolio resets around the start of a new year. This is clearly not something that is in the typical Tasty methodology of looking for high IVR and trying to fade that vol expansion. So what do you do here with the 3.2 negative IVR, Mr. Westwater? How are you approaching this going into the holiday season?
There's nothing too much that I am doing, especially with this IVR down around here. I like ZN more than I like ZB, but still, I like them a lot less than I did at the start of the month. And for the auction to do slightly better, it does make sense given that bond prices have come down. You're getting a higher yield, so that attracts a little bit more demand, considering if you considered all else equal. So yeah, ZN, I think it's holding technically, at least. ZB a little more, in my opinion, a dire situation. And yet I am holding on to my positions in both. ZN, I've had this trade on for a while now. It's at a small loss right now. I'm probably going to clip it off for the small loss and just take the L on that. My ZB position, I still have 37 days out. So, I'm willing to give this another week to see what happens and just hopefully get some upside traction or retracement to the upside here a little bit. But as for new trades, I'm not going to be putting on any in bonds for right now.
I'm still trying here. I'm trying to do this reverse iron fly. I just need this to get away from 112. It's 65 days to expiration. I'm more or less inclined, right, in keeping with the idea of yesterday's trader email, Thomas. This is not the best time of year to do something that's typical 45 and 21 out, in my view. Quite frankly, if I were laying out new capital, I don't see the end of the year as something to be too concerned about. It's just a change in the month, and we're just into the next expiration cycle. So be it. But if you're looking at a 45 DTE and we're thinking about coming back to work on January 5th, we're talking about 1, 2, plus 3, 4, 5, 6, 7, 21 days rolling off the calendar between now and then. So, at 37, we come back and all of a sudden, oh, this is a 16 DTE position. And I'm past my expiration window. I got to roll this today no matter what, because I'm staring long in the tooth. I'm on the other side of the decay curve. You don't want to set yourself up like that. So if I'm one of those people, right, Not saying that I am, and I'm going to be working next week and the week after, so it doesn't necessarily apply to me this year. But if I'm one of those people who is going to be going away and I want to just keep things on autopilot and I'll check back in, 65 gives you a little bit more time because in 21 days, we'll be at 44 DTE, Thomas. Right? At 24 DTE or 44 DTE, excuse me, that is basically like I just got into this typical tasty 45 and 21 out cycle. I can reassess today with minimal issue, so to speak. I have plenty of time left. So much duration still until we start looking over the other side of the decay curve. If I need to take this off because I don't like what happened in the 2 weeks, you know what? It's going to be a lot less painful than had I waited until 16 DTE. That's the consideration here. 65 days, 100 days, if it's ZN, if it's ZB, that's the only place I'd be looking right now. At 37 here, I'm of the mindset that I need to just roll this out. I don't want to be staring down, a 21 DTE right around the new year. So that may be done this week. That may be done next week, probably this week, just thanks to liquidity, especially for the bond options futures. But that's really the plan that I have. Frustrating, but we'll revisit a little bit more aggressively come New Year, I believe.
Yeah, that's when I'm going to be looking at the trades too. It's just like you said, you leave for 2 weeks, short holidays, the DTs, they just whittle away really quick on you.
They whittle away quickly. The bid cover ratio, for what it's worth, that was at 2.67 in the 20-year auction. That was the highest since October 2022, October 22nd. So, maybe that's a good sign. Better than last month's auction. That's all I can say. But really not doing much of anything here today. We're still staying in a downtrend. I'm getting close to turning the corner, Thomas, though. This is looking like a little bit of a falling wedge. We got a little bit of a morning star candlestick cluster here. All of a sudden, if we're poking back above 116, no reason to be bearish at the long end of the curve. Clear enough signal technically that it's worth then shifting attention back to looking long. And I know that's going to be a lot of chop and getting chopped up here, but that is the nature of a market. And maybe the lesson is that when volatility is this low in bonds and notes, we just don't bother trying to trade it. Alas, a bridge to cross at another time, because now we can cross the bridge that is, I still love crossing this bridge every portion of the show. 2 p.m. Eastern, Thomas, on Monday through Friday is quickly becoming my favorite time of the day. In my favorite part of the year around the holidays. So is this my favorite part of my life right now, talking about gold and silver on Futures Power Hour? I digress. How did that work out yesterday, Thomas? For those that watched the show, we were outlining this symmetrical triangle, this little orange box here on the screen. And the decision was made to take profit on the 55 and a half call spread here, and instead re-engage the market at a 67, 68 call spread, thinking that with the multi-time frame analysis explanation that we did on Monday, at a 4-hour chart, when you find a chart pattern, you're looking for something to play out in the next 1 to 4 days. And so a symmetrical triangle and an uptrend would call for a breakout perhaps this week. And so it'd be worthwhile to roll exposure and stay long. And sure enough, with a 4.75% gain today and a push into new all-time highs, Thomas, I think that was a pretty good decision, all things considered. Certainly absolving me for my equity market sins. At least I have that going for me. But what is there to say about silver right now, except for the fact that this thing is an animal?
Yeah, it certainly is. And I should have listened on Monday and took the long position here. It's just, we've had a few of these triangles or flag pattern breakouts, whatever you want to call them, since the start of the month. And we've had, those big 1-2 update moves. And this is pretty crazy. If a couple months ago you told me silver was going to be within touching distance of 70 by the end of the year, I don't know. I was bullish on silver, but I don't know if I'd be that optimistic. And it's turning out that this thing just is unstoppable. There's not even these big down moves. There's just some consolidation for a few days. Then you get, a nice, really big candle. And then perhaps we do the same thing over here. Maybe we go into another consolidation, another triangle flag type pattern, and wait for the next breakout. I think that's how, if there's one really bullish trade I'm going to take, maybe I'll wait for silver to consolidate for a few days and then get in on the long side, because this thing, I mean, the story, I don't think it's going to change. Lower rates, more demand for silver, even though it's probably the demand side story is probably a little optimistic relative to reality. It's just, traders are liking precious metals going into next year. Gold performing well too, but silver is really where the money is being put. And when you think about it, if you have a market that's really bullish on precious metals, you would expect more upside in silver because it's just a smaller product. It takes less money to move it. And I think that's kind of what we're seeing here.
I've seen some people ask, and this is a good question. I got it on Twitter today. As silver's rally thanks to central bank buying. Central banks don't buy silver. It's one of the interesting wrinkles. Like, they're going to buy foreign sovereign bonds. They'll buy or hold bank deposits and bills. If they're doing something like quantitative easing, they'll hold long end treasuries or the equivalent government bonds. They'll hold gold because they see it as a monetary metal with no counterparty risk. But 50% of silver demand is linked to industrial usage. So central banks, if you read the literature, they say that it's far too linked to the economic cycles in order to be considered a reliable store of value as a monetary metal with no counterparty risk. They consider there to be considerable counterparty risk. So I don't see this as like the Federal Reserve is secretly stockpiling all this silver and buying it, or like that's what the PBOC is doing, although maybe the PBOC is. Maybe one of these Asian central banks or Middle Eastern central banks is saying, you know what, screw it. Yeah, Russia maybe, like just whatever, hey, we got to make do with what we can do. Gold's too expensive for our liking, sure. Maybe it's financial institutions, maybe it's hedge funds, but central banks in general, if you look at the reserve levels that we see in the Western world, if it's the Fed or the BOC or the ECB, the Bank of England, the BOJ, you're not going to find silver is considered a reserve asset on their balance sheet. Or if you do, probably short-term temporary, not something that's considered a long-term store of value. So that's not the narrative. The narrative here in silver is not central banks buying the metal. That's more of a gold story, which gold today, likewise, deja vu coming up here, Thomas. I like these orange triangles. They're kind of pop for me on the charts. But gold triangle coming out of another triangle. You like your 8-hour time frame, so there's an 8-hour chart for you. We have our symmetrical triangle breakout, maybe an ascending triangle here into another smaller triangle. Turtles all the way down, Mr. Westwater, but that's fine by us because a symmetrical triangle or ascending triangle coming out of a breakout, bottom left to top right, would be bullish continuation. And so, dare I say that silver is provided a nice little example here for the class in real time over the past few days of why we retain that bullish directional bias when you see these kind of chart patterns. Got to stay long the metals, gold, silver, copper. No reason to get off the train thus far, as tedious and repetitive as that has been now for weeks and months.
Yeah, I'm long gold, I'm long copper. The one thing I'm missing is silver. I'll get back in.
The water is, I say the water's warm.
Very
the water's
warm.
boiling hot. The water's boiling hot right now. 67 and change seems like it's a foregone conclusion from my view. And there's no such thing as a guarantee in markets. So, that's probably loaded language. But the way that this market has behaved, it's been very systematic. It's been very technical. It's been reliable in that regard. And until that particular facet of the price action changes, where you're getting, as you mentioned, you've seen a lot of times in recent weeks, these types of setups, the wedges, the triangles, as the market pushes to the upside, until we see one of them fail us, there's really no reason to bet against them. And volatility here today, has that not been the North Star for us here on the metals market? New highs in silver, new highs in IVR this week. These two things are going hand in hand right now. You do not want to be short metals volatility while prices are breaking out, because metals volatility tends to go up, and then you get double tapped, not just by the expanding vol, but also by the directional move against you. So this is not a thing I'm trying to fade or short or get in the way of.
Yeah, don't get double tapped. I agree. It's you wait for your entries to get long. I think this is where you buy the pullbacks or the consolidation in this case, and you just wait for the breakout. And from what we're seeing, you're not waiting that long. So the nice thing about if you're trading this on the long side is you can get into a position, get one of these really nice big up moves, and get out of the position with a profit, or roll it. And that's nice because you're not waiting around for a position with capital invested in it to perform for you, which is ideal.
That can be ideal for sure. Gold still have some things going on in the short term. We're sitting at 60 TE now, 4350, 4400 call spread. I want a little bit more. I think we're about to get a little bit more. Gonna have to stick with it, Thomas. Let's go over to energy. Finding reprieve today. The war drums beat louder. Finally, I think we're getting some clarification on a timeline here for what may be occurring in the South Caribbean, which last night, President Trump announced a military blockade of Venezuelan oil. I thought this was coming a mile away. We've been talking about it here for the past few weeks, how it seemed like a war with Venezuela, tomahawks in Caracas, was a fait accompli given the shifting assets, including the Gerald Ford carrier, to the region. Not often that you move a carrier strike group to a region without some intent to use it. No different than the buildup in Diego Garcia in the Indian Ocean back in, March and April, and then heading out into June, when ultimately the U.S. struck the Ishtafan and various Iranian centrifugal nuclear sites. So we get that signal overnight. It's a 1.5% rally here, incurred 3.4% in natural gas. Likewise, the U.S. is apparently preparing more sanctions against Russia if they do not accept the latest iteration of the Trump peace deal. So, yeah, there's a little bit of upside bounce here today, Thomas. It's a super duper ugly looking market, though. Still, does the futures curve tell you anything here about this potentially being a bottom? Do you look at anything going on in terms of volatility here? It's a 27.8 IVR, finally waking up. What do you see what's going on in oil here now that geopolitics finally appears to be having an influence that can no longer be ignored?
Yeah, I mean, geopolitics can only do as much as it can do as it relates to supply and demand outside of, the initial reaction. You see these geopolitical premiums get priced into the products. They can stay for a while like they did with the Ukraine-Russia war, but they do evaporate with time, even if the situation doesn't change. And for the oil market we're moving into, higher surpluses expected in the first half of next year. It tells me that if you are taking upside shots and you get it, you take your profit and you get out of the position and you wait for the next pullback. This is something I'm trading oil via an iron condor. And a 27.7 IVR in oil, it's all right. We've traded a lot of this year in the teens for oil. I don't know. For me, I think I'm going to keep doing what I'm doing. I'm going to trade oil like it's going to be range bound. We made a move down to as low as into the 54s just yesterday. Now we get this 1.5% pop. It's on this, major geopolitical headline. Is that, I would expect more. I would expect more from this if it was, maybe even 6 months ago, a year ago. I would expect something like 2.5%, 3% move in crude oil if we were blockading an entire country, which, is moving about 1 million barrels of oil per day. That's about 1% of global supply. So it's a notable number. It's not too huge, but I don't know. I expected a little more. So I maybe see this move, providing some ammunition to keep us above 55. But for us to get back to 60, I think the economic outlook has to brighten up a little bit.
Yeah, I mean, oil below 55 is screaming recession, Thomas. We spoke a few sessions ago, yesterday mainly. Could we pull it up here right now? We'll pull it up here right now. We have the Dallas Fed's energy slideshow that they released December 10th. So not too long ago, about a week. At the very bottom, the last two slides show the break-even rates reported for the various wells, the shut-in levels, as well as the break-even for the new wells. Shut-in, if we fall below 45, you start to see some wells close down that are currently pumping. Until you get above 61 to up to 70, you're not going to see new wells open back up. You're getting into a territory, Thomas, where like oil prices are screaming that there's a huge problem. Rig counts have been falling and crude production is still persisting at all-time highs. So there is that glut concern that, has been building over the last few weeks. And you could say that's been an overhang on the market. I'm struggling with the idea of, is this what we're going to get, right? So we've done the blockade. 1 million barrels are taken off the market. We'll just call it a zero now. Fundamentally, what is different for oil if airstrikes begin? What isn't now being discounted or priced in? The whole idea was like maybe you'll get $1 or $2 move higher on these headlines. That may have happened here already. We were at 55. We were below 55 at a point yesterday. We were sitting at 54.89, currently at 55.95. There's your dollar. Maybe that's it. I don't know. I mean, I'm thinking about like if this is the buildup, Thomas, the better trade has not been to chase oil to the upside in the geopolitics. It's been to fade the geopolitical expansion. And so we're sitting, looking at the chart right now, at the daily chart here. We touched our 1 week moving average today and then immediately started selling off. And now we're back below the mid-October swing lows, the October monthly lows. This is not inspiring great confidence. Maybe we have another flush to the downside once we digest this geopolitical kerfuffle. But then at that point, I start thinking about what do selling call, put spreads 42, 44, 46. What does that look like? Because if we're not in recession, then there's no reason for oil to be this low.
Yeah, if you could sell put spreads down there, I think that's probably a good move because you're that's pretty much a bet that you're not going into a major global recession, right? Selling a put on oil 45, you're betting that the world doesn't go into a recession. That's pretty much how the bet is.
Yeah, that's the gambit, I would think. Major lows that we have from April and May here down near $55 and change in the continuous contract. If we were to go and look at this on a weekly basis, Thomas, the lowest crude close that we've had at the front month in 5 years yesterday. Where is the support coming into play is the better question. That's a great question. Where do you look from here? There's really not much. $50, 51. Some lows that you have in mid-2019, but then you get into COVID territory and the oil market's all sorts of, FUBAR since then. So, maybe 51 becomes the landing spot. And if you do see a further break from here and we get a, additional leg lower to the downside through yesterday's lows, and this is all that we get in terms of our bounce, you start to think about what is looking, let's go out to say 90 days. What would a 47, 45 short put spread look like? It's not where it would be now, but we'll say if we got down there, we'll pull it up to $3. All right, so this would be closer to the pricing we'd be looking at. 3 to 1 mid 60% probability of profit, given the distance from the strikes, assuming you get down into, 51, 52. A worthwhile gambit. That's effectively the risk to reward we'd be seeking. Have to keep it in our pocket right now. But I do think that we were anticipating this, the way that the trades were structured. We were too early. We were just buying these calls. It wasn't working. You're getting a little bit of a bounce back here today. What more will there be if, as you say, 1% of the oil supply, okay, now there's a blockade, it's zeroed out. This is what the market's telling us is the big deal. I don't know if there's a trade there, Mr. Westwater.
Yeah, I mean, it wouldn't be zero, but it would be close to it. We'd allow Chevron to keep doing their thing, but once you move to airstrikes and things like that, then the game changes because Chevron might say, hey, it's unsafe to even have our equipment operating.
Thomas, let's say people are looking at this and say, Chris, I liked the cut of your jib when you were talking about going beyond the typical 45-day window, and I like the volatility in oil, so I'm going to look at something at 62. One of the nice features on the platform here is if you go up to strategy once you're in the options chain, and you click this little drop-down menu, you have all these preset different strategies. For our case, Thomas, we talk about taking advantage of the volatility expansion and looking to maybe sell an iron condor. I like to have presets at 45 DTE, target out of the money 80, and strike with, we'll go 4 for $2 wide, as they do move in those 50-cent increments here. So looking at this, a 63, we'll call it 64, 62, in fact. Why? We haven't seen prices north of 62 since early October. I would, something's happening where this market's ripping higher to 62. There's something bigger in play. On the downside, we could do, say, 49, 47, straddling the 1 standard deviation move. 60% probability of profit, risking 3 to make 1, effectively. I kind of like that at 62 days. In fact, I like it so much that I'm going to do it myself. And consistent with that, with this rally in oil back today, this was looking real spooky yesterday, Mr. Westwater. Oil plunging, natural gas plunging, these iron condors in both products facing extinction because the downside strikes are being tested. Today's rally back in oil recenters the position a little bit better for me at 22 DTE. Maybe this is the bounce. Take this one off. Let's get rid of it. Let's move on to the next trade. Continue the sideways stuff in oil, looking to sell any rally in the futures. And then natural gas, similar type of situation here. Okay, good. We got a bounce. Is the worst over? This was terrible. This has been terrible.
Yeah, it's been bad. The weather's not helping in the slightest. And you still have the Russia-Ukraine talks going on. So, it's just not it's not looking good. I mean, yeah, you could try to call a bottom here. We are moving into the winter where the weather could quickly flip. If it does, you would catch some of that upside. Depending on how cold it flips, you could potentially, get a nice trade and get out of it in a couple days. But right now, it's a lot of bearishness is priced in. Is enough bearishness priced in? It's hard to say because, the weather models, if they continue to stay warm, then, the prices down here are probably justified. So it's, the upside rally up until a couple weeks ago, I was in it, and then it pulled back, and then I got in another put spread. That one I'm 69 days out on. So the NGH6, a short put spread at 3.4, 3.5. Obviously not working out as of right now. So what I have to hope for is the weather models do turn around. We get a bounce back to the upside, and I could get out of this position with hopefully a gain. But as of right now, it's I think the first nat gas trade in 3 or 4 that is really just underwater. As you're showing on the chart there, it just looks warm all across pretty much everywhere. 90% of the United States, warmer than average. Really, really, really warm in the south. But the Midwest, even the East Coast, seeing probable temps above normal, and that's just going to put the hurt on demand. It's going to build inventories at a time when they should be not building, and it's just it's bearish. If you want to try to trade it like the bearishness is priced in, of course, there is good volatility in the product. Do things, sell a put spread, something like that, and kind of hope that the weather cooperates with you. But right now, it's not looking good.
Yeah, I'm not in that segment of people getting warmer weather. I just actually pulled up weather.com to look at the weather for my area going through the end of the month. It's like highs of 35, 36. So I hope everyone enjoys their summer in the winter. I won't be. All right, we can move on from natural gas. 73 IVR. Thomas, I'm still sticking with my position, which is actually a little bit better improved today thanks to this a bounce we're seeing in the market. It's at 41 DTE. So again, a little bit. We just got into those strikes here. The very unwise, younger, less informed version of myself just from a month ago decided to trade natural gas again. I did put it on ice for a few weeks there over the summer, Thomas, after having several bad trades in a row. Maybe it goes back onto the shelf. Just what frustration. Dollar doldrums today. Stocks down, bonds down, dollar down, gold and silver ripping. Maybe we should have called this the revival of Sell America, Thomas. Oh, wait, the dollar is up. So I guess we can't call it that. This is one of those curious, that first part was facetious, by the way. The curious wrinkle through all this is like you do see bonds coming in, you do see stocks coming in, but then you look at the dollar and it's going up. So it's not quite that whole consistent narrative type of situation. Maybe this is a wedge that the market's deciding on, that in the short term, the Fed can't do anything on rates. And so other central banks, like you're going to cut rates. Okay, it's going to help the dollar. But that doesn't even make sense to me either, because I'm looking at the yen here and it's off by 0.62%. Tomorrow we have an ECB, a Bank of England, and then at night we're going to have a Bank of Japan rate decision. The BOE is going to cut, the ECB is going to stay on hold, the BOJ is going to hike. And yet the currency that's seeing a potential hike coming is the one that's performing the worst. Square these circles for me, Thomas. What's going on with the dollar on this Wednesday as we make our way through the middle of the week? It feels different than it has in recent sessions.
Yeah, it feels different. Like you said, a lot of central bank decisions coming up, and then we got the inflation report coming up for the U.S. It's not like earlier in the year where it was sell dollar because there was all these trade fears and things like that. I really have a hard time making out the currency market right now. That's why I haven't been trading it too much. You could put the dollar at some support here going back into August, September levels, but really it's the direction isn't based too much on anything I'm clearly making out in the market. And like you said, the BOJ, they're about to hike rates. That's after decades of, they already hiked once or twice, but this is after decades of an ultra loose monetary policy stance. And yet it is, it hasn't performed well at all. You're not even getting the safe haven bids like you really are when equities sell off, move into the yen for some safety, things like that. It's just, it's a currency world that isn't, making too much sense with the way things have worked for years and years. I don't know, Chris. I can't really give you a great explanation on my read here.
So last week ahead of the Fed, the plan was do things to bring down beta-weighted deltas if possible. And I was leaning long deltas in the dollar. And when the initial decision came out and I said, oh, cow, they're not giving us a firm indication of a cut coming in the first quarter, and we get faster growth, and we're going to get a better labor market situation, and we're not saying inflation is going to run away. Talk about Goldilocks. The dollar's probably going to love this. I wish I didn't take those positions off. You mentioned that the FX market's not responding these days to various catalysts that it had done so in the same manner that it had done so in previous years. That's probably underscoring the fact that we're in a different type of economic financial market regime right now. But that makes it all the more confounding because I'm very much with you right there. So I haven't put on a trade in FX since the positions were taken off last Monday, Tuesday. The market has not evolved as I thought it would following the Fed. I'm a little, I don't want to say confused, but I will say I'm a little perplexed why volatility is getting sucked out once more in the yen when it's arguably the most instrumental one of the major currencies versus the US dollar right now, considering it's a funding currency, teetering on the edge of a potential intervention level. And if the BOJ or whoever were to step in and cause an unwind of the carry trade, remember August 2024, Thomas? Wasn't the unwind of the yen carry trade a big problem? I don't know. We've run way past the time. I didn't even see that happening on the clock. I just saw Brian say it here on the show. Here's the calendar for tomorrow. We have a whole host of things coming out, mainly, of course, the central bank rate decisions, but we'll have more time to talk about that later. Last call today, overtime, in about an hour's time. But until then, you have more Tasty Live coming at you because Dr. Jim Schultz, is he here? I don't know, but you know what? We have more Tasty Live coming up next. Stick around.
Welcome back to Taste of Crypto Show. I'm Dan Cecilia. Today I'm joined by Mark Wendland. Mark is CEO of Theammune, a digital asset treasury company focused on the acquisition of Can Coin and support of the Can network. Hey, Mark, welcome to the show.
Thanks, Dan. Pleasure to be here.
Yeah, so really interesting topic. Obviously, DATs have been in the news around a number of different protocols, but I really want to start at the beginning. So early on in your career, you were working in traditional finance on the institutional side at some of the biggest trading firms. How'd you find yourself in crypto?
Yeah, so just going through my career, I started kind of in operations, treasury function, which is what ultimately led me to the Theammune position. But looking at from a repo operations, kind of the financial plumbing, the non-sexy part of finance is where I began my career. I was at Citadel for a number of years, and it was an amazing platform to really learn and kind of grow off of. Very innovative, was one of the first firms to do a lot of different things. And then found my way to DRW, which obviously is Cumberland, one of the largest market makers in crypto as well. And that was kind of where I first got my feet wet with crypto. And similar to Citadel, DRW, very innovative, thinking kind of the breadth of what they do from, crypto trading to real estate to market making to prop trading, risk taking, et cetera. It's just an amazing place to work at as well. And so I was fortunate enough to be interfaced with crypto through Cumberland, but really led me to this venture, Theammune, because what the Canton network is really focused on is kind of rewiring our traditional markets on top of digital rails. And so I think that's like first and foremost paramount to think about what that actually means. You hear about lots of buzzwords about 24/7 trading, mobilizing collateral, all of those things that, in crypto happen for years, but take for granted in TradFi about, T+3 goes to T+2 settlement that takes multiple years for, to actually do that. Whereas in crypto, instantaneous settlement is something that's just been from its infancy. And so Canton specifically is a public blockchain that is focused on kind of rewiring those traditional financial markets. So it's really at the epicenter of, DeFi, TradFi intersection. And that, evolution is changing every day. And so that, convergence is happening real time. And the one word you're going to hear me probably say a lot, what really differentiates Canton versus other public blockchains is configurable privacy. So if you think about kind of something in our traditional markets that's paramount, and not only just as an institutional player, but if you think about individuals, I don't want my bank account information necessarily publicly available to everyone to see when I, wire money or pay a bill or anything like that. And so that's really important and frankly a prerequisite for moving traditional markets over to blockchain rails. And so that's, I think, the first part that I would say is really separates Canton from many of the other L1s, the fact that it has this configurable privacy. So that is, you think about equity trades or fixed income trades, there's transactional reporting that has to hit the tape, and all of that is fine. But there's elements of the individual that it's not necessarily tied to, myself or the institution that represents. And I think that's really a game changer. And there's definitely other public blockchains out there, and definitely different use cases for each of them. So it's not like Canton's the only public blockchain, but it's the only one today that has that configurable privacy element.
Right. So, I looking into Canton, it's obviously focused on institutions. There's a lot there, as you mentioned, that is very, there's a lot of friction. There's a lot of manual processes. The legacy system is old, and, Canton is kind of helping to bring the efficiencies of crypto, of the on-chain world, of blockchain to institutions that move trillions of dollars in traditional assets every day. So I want to dig into Theammune and kind of your vision for that, and how is it going to contribute to the Canton network? How will it help grow the Canton network?
Yeah, so Theammune, as you mentioned, is the first publicly traded company to leverage Canton Coin and specifically support the Canton network to advance that institutional adoption and digitization of financial markets. That's a mouthful. And so I think it's really important to understand that our mandate is first, like many other DATs, about coin appreciation, trying to promote that capital markets flywheel. That's a feature of it, but that's not the only. So we have a diversified revenue stream associated with that. There's other DATs that also have staking or other means to generate additional yield or revenue, cash flow to shareholders. Like that's our mandate, is to add value to shareholders and give them cash flow. And through Canton, we have other means of doing that. So one of them is becoming a super validator, which you earn rewards by doing that. And think of a super validator as kind of the ability to kind of say that these transactions are legit. This is what's happened on blockchain. And that ties into the governance structure of Canton as well, which I think is unique and important to really attract who it's after, which are regulated institutional investors, et cetera, around that. You need to have that independent kind of governance structure. So there's a foundation that has, I think, 16 board members and very reputable firms from Euroclear to there's many other large institutions that are on there from crypto and also from the DeFi, TradFi space. So I think that's very important, but it's earning rewards through that super validator. It's ability to partner with different institutions to build on top of it. It's being on shows like this about getting the narrative out there. I think that's probably one of the biggest challenges is Canton's not well known yet to, the mainstream media, so to speak. And that's somewhat intentional of the strategy of how it came about. Like this just didn't come overnight. This is frankly years of making. The digital assets started over 8 years ago, worked on Canton, and so learned from a lot of mistakes that others have made. And it was a very deliberate approach about rolling it out slowly to make sure that we had the institutional adoption that you mentioned that we have today. So, there's over $9 trillion worth of transactions that are going to on top of the network today. That's majority of that is real world assets that are going through. A large component of that is repo activity. But Theammune has a remit and an ability to do other things. It could be invest in apps, build apps. It could be investing in startups. It could be buying a firm that wants to build on top of Canton. But it all comes back to promoting the ecosystem, promoting Canton, generating additional yield and cash flow for our investors through diversified ways. In addition to the every feature that every DAT has, which is the capital markets flywheel.
Yeah, I think that's a great point. And I think, if you look at the launch of a lot of layer ones in the past, or if you look at layer twos, whatever, any of these protocols, they always have launch partners, right? And, a lot of times, depending on how well it's designed, you get sort of mercenary developers, right? And you could point to, layer ones like, ETH, whatever, Solana, and they set up grants or they set up these incentives, and it's really retail focused, right? It's not, to your point, it's not institutional focused. So you kind of get these short-term hype cycles or apps that are more focused on speculation as opposed to a real-world use case. And I think it's interesting that your approach and Theammune's approach is we're going to be an ecosystem partner, but not to incentivize, I guess what you would say, like bad behavior or short-term behavior. We're going to take and we're going to spread the mission out to the broader market, the traditional market, but we're also going to help people build useful apps, bring stuff on chain, whether that's an institution or a new developer, and really be a sort of a steward for the network. So I think there's a lot there from a value side. I think, it's interesting that you're participating in governance, right? So I've actually done a few interviews in the past with some of these other DATs, Forward Technologies, which focus on Solana. I did an Athena one, and when you really dig into it as an investor, right, where tastytrade's a retail investment firm, you really want to see that the company's contributing to the network, right? Plugged into the network and generating value for not only the network, but also passing it on to investors. So it sounds like Theammune is aligned in that way. So that's great to hear from an investor standpoint. I do want to deep dive on Canton specifically. You mentioned privacy, and I think one of the things that's really interesting and one of the things I want to touch on is institutions versus retail, right? Crypto in the past has been retail driven, right? You always see these headlines, maybe Fidelity tokenizes a money market or JP Morgan tokenizes something, right? And you might agree, like retail drives a lot of activity. And that's why you do get these speculative bubbles, unsustainable sort of hype cycles. And quite frankly, we haven't had a lot of adoption from institutions. And it sounds like, and it seems like the trend is institutions are now coming online. So let's do a deep dive on that focus on privacy. What does that solve for institutions looking to move on chain?
So again, it's like a prerequisite. So if you think about some of the institutions that are involved, and again, this is all publicly available information. You can look at who was involved in the digital asset raise. You can look at who is participating in the pipe, who's doing transactions on top of it. But you have large banks, you have BNP, you have HSBC, you have SocGen, you have Goldman, TTCC, some NASDAQ. You have a wide range from utility like CSD of DTCC versus investment banks to large global banks from the traditional side. And then on the crypto side, you have Circle, you have Copper, you have Cumberland, Fireblocks, you have large, reputable institutions on that. And I think from a privacy element, it's frankly required for many of their markets. There's customer privacy, things like that are embedded in these regulated institutions that they need to be able to do it, to build on top of Canton and to get their approval. And there's some of these institutions to tie it to, like Theammune specifically. There's some of these institutions that can't hold cryptocurrencies still yet today. Now, hopefully someday that will change, but their way to access an investment and exposure into Canton is through Theammune. So it's important to recognize that. And so that's where we saw some of that adoption there. I think, you highlight the retail versus institutional aspect of it. And, not all crypto are this way, but some of them have been more like momentum type driven trades, so to speak. And, that's not what this is. This is a marathon more than a sprint, so to speak. And I think that's really important, especially in the stage of where we're at. To use a baseball analogy, we're, really in the first inning. We have so much more to go. The public chain just went online 2 years ago. The Canton coin started trading within the last year and a half. Traded OTC. Theammune was just launched last month. It was listed on some exchanges last month. So it's just the very early stages. And for years, TradFi was talking about, are we going to convert to blockchain? Is it going to happen? And now the narrative isn't like, is it going to happen? It's just when. And so you're already seeing that across. And so like, that's why I think it's really an exciting entry point, because you're at the very early stages. And you have a couple different options to do it. You can buy Canton Coin directly. You can buy the publicly traded stock. It's a way to get exposure to it. And again, I think it's going to change the face of finance with the digital rails element. And it's not a question of like if it's going to happen anymore. That was just something that was going on. It is happening. And you see that by the trades that are going through today.
Gotcha. Yeah, I think it's an interesting point. On, I guess, on the private placement and sort of the proof that institutions see value in the network. You mentioned that there's a lot of activity going on the repo side. What other apps or what other products do you think could contribute to the growth of Canton?
Yeah, I'll come back to that one second, but I just want to explain, it's important to understand like the repo, what it is, and like, repo markets, like near and dear to my heart because I was a repo trader for many years. Yeah. And so it's a massive market. So the US Treasury market, our debt in the US, unfortunately, is very large. So we have a lot of treasuries to finance that. It's a $30 trillion market. And, the element of what's going through what first was adopted was more of an intraday repo. So that's an example of a utility and a function that didn't exist before. So in traditional markets, that intraday repo wasn't available because it didn't have that autonomous settlement aspect of it. So you had overnight repos was the next best thing. And so this is an example where blockchain technology can unlock economic value in addition to improving what you already have today. So you can improve the economic value by making the financing cost lower, by having that autonomous settlement, but it also allows you to do things that you otherwise wouldn't have done before. So that's obviously a large amount of the volume, like dollar-wise, because of the market is so large. There was an announcement a couple weeks that SocGen issued a U.S. bond on top of Canton. There's, I think mortgage applications. And so it's not just about financial transactions that have to go on top of it, but you can use blockchain to improve everyday workflows that used to take, 30, 60 days associated with it can now be done in a matter of minutes.
Do you see other products like derivatives, and I guess to bring it back to like tastytrade, we're an options trading firm, right? We've really pioneered the front end for options for retail traders. Obviously, that's a huge market for the institution side to market make on it. Is there any new products you see kind of coming on Can? Is derivatives a thing? Obviously in crypto, perpetual future is the name of the game, right? That's the biggest leverage product, derivative product that's traded. Is that something the network would support, or is it really more on the fixed income?
No, I think it's asset class agnostic. So it's really meant to be about all different things. I mean, there was actually an article over the weekend, which is a known problem. You mentioned the options market, about the concentration risk associated with the kind of big three that dominate the clearing of that. And so that just, when I was reading the article, just made me think of, again, that narrative has been the concentration associated with those three large players has been for 15 years. And if you can unlock, economic value associated, you can actually get more intermediaries to potentially enter the market. And that's where I think the power of, blockchain technology can really improve that, because that's going to improve your capital efficiency that's required to support those businesses. Going back to the intraday repo aspect, there's a large bank that does it for themselves. And they told me they save tens of millions of dollars in funding charges that they otherwise would do, because before that, their answer was, I have to overfund every affiliate regulated entity across every jurisdiction that I do because I'm a large global bank. And now if you can do an intraday repo for 10 minutes from one entity to another, you reduce that friction, that funding cost. And that just is for one institution, it's tens of millions of dollars. You just amplify that across all products. So it's not just fixed income, it's not repo. If you truly believe that tokenization of all assets is going to happen, I'm a firm believer of that. And that's why I view Canton is very poised to get a large amount of market share. I'm sure there's going to be others that will try to do it. And we welcome competition associated with that. It's good to have, other networks out there as well. It's just harder to do it when the public chain is already in existence and you already have so many different apps, so many different processes, so many different players involved that causes them to go back and do work associated with it. That was more the deliberate approach of Canton, is learning from other mistakes that people made, get it to a point where you can introduce it as a public chain with that configurable privacy element that we view as a prerequisite, and then get mass adoption across.
Yeah, I want to touch on that privacy, the configurable privacy part, because I think it's an interesting value prop. But can you kind of explain, like on Vive, how that works for a participant in the network? I know, we talked about before, it's a non-starter for a financial institution to have their public, have all their transactions out there, right? That's not how things work, So that privacy element of Canton is the value prop, right? So how does that work? Like
it's not the only one. It's one of them, and I think it's the key differentiating factor. But think of it as like, if you do a trade, there are certain characteristics. There's 10, 15, depending on the product that you're trading, different fields that are unique characteristics of that trade. The beauty of Canton is each one of them is configurable to customize which one the user, the one who's putting the transaction onto the app, wants to make private, and who is private. So you think about it, it's flexible to say, okay, the SEC, you're a regulator of this market, therefore you have full transparency into this. But you and I can only see that a transaction took place, a buy of 100 shares at this price. And so the beauty of it is it's flexible to based on the use case, and the ultimate author or the person that's putting the transaction on can determine what that privacy element is. But to touch on some of the other points as well, in crypto, there's obviously a tokenomics, or we call it Cantonomics policy around how Canton coin is in circulation. And I think that's also a unique feature, because most of the coins and tokens out there just have this inflation element to it. You just keep issuing more and more. And so I think it's important to understand. So Canton has a tokenomics committee that kind of determines the rules of the road around how those are done. And so there's an equilibrium between burning and minting. So as a person putting a transaction on the network, you have to burn a token. And then as a result of a transaction going on the network, you earn a token. And so there's a rewards pool. It's not necessarily one-to-one, but it's controlled by this governance body, which controls, if you will, the supply demand imbalance, so that it's not just strictly inflationary around that. And again, that's another example of where I think it's really carefully thought on how to deploy this to then get mass adoption.
Yeah, no, I think that's a great point. I think the tokenomics of any network is something that all investors, need to pay attention to. And for Canton specifically, it sounds like the more network activity, the more reduction in supply essentially kind of boost it. It manages the supply demand based on how network activity is that correct?
Correct. There's a supply demand balance between the burning and minting of coins, so that it's not strictly just inflationary. And it's not for one, but it's set, and it's transparent out there. There's a white paper that kind of explains the math behind it. But yeah.
Would Theammune as like a super validator, is that part of the governance processes?
Yeah, so in order to become a super validator, which we're in process of doing, you basically have an application that you present to the foundation, and it's not just an application and here's a check to become a super validator. You actually have to prove, if you will, your worth to the network. So you have to come up with innovative ideas to improve the network. And so I think like Theammune, similar to, you have digital asset, you have the foundation. Theammune is kind of more of an independent body interested in the success of the network versus strictly our own apps and our own aspect. So a lot of the things that we're proposing to do are about adding value to the network. So giving more transparency to the transactions that go on the network, protocols, security type of things that will just encourage more activity on top of the network. And so that's part of the super validator process that we're working through now, which again is up to the foundation to ultimately approve. But it's not something that's just monetary. It's not something about that. You actually have to add value to the network, which again I think gives it more credibility associated with it.
Gotcha. And if you can share, I don't know if you can, but is there anything Theammune is proposing to do that, to increase value?
Yes, I can't comment on it yet because we're still going through that application process. But yes, hopefully we'll be able to talk about it soon.
Okay. Yeah. No worries. I definitely, once it becomes public, I'm interested because, I think being one of the first DATs on this network and sort of being that steward for the development, it's a lot of people don't know about this. So I think it's an interesting period for the network. So we got a couple minutes left. I want to just kind of get into maybe competitive landscape, market position. So, most retail traders, they're familiar with MicroStrategy, IBIT, the ETFs, BitMiner, right? Tom Lee kind of ETH pioneered that. I want to know how Theammune really sets itself apart from the other retail accessible vehicles.
Yeah, so I think first and foremost, it's about the model associated with it. So it's the diversified revenue streams that are different. I think there's others that have that as well. Don't get me wrong. It's not that Theammune is the only one that has a diversified revenue stream. I think some of the other like Bitcoin ones, which obviously is the largest liquid token, but it has a harder time of getting that diversified yield enhancement. It's more about the capital markets flywheel. But I think for Theammune, it's about the different, we can become a super validator. We can potentially buy apps. We can build apps. We can invest in different firms that are building on top of the ecosystem. We can use, myself and my background, and my president, Mark Toomey, comes from both TradFi and from crypto from Galaxy. Our network and our partnerships to encourage more adoption on top of Canton. And so I think that kind of strategy and that model is different than others. I think also you have to go back to ultimately the product that you're selling, which is Canton. And I think obviously, as we've talked about here, I think it is unique and special and definitely poised to be very influential in the future of kind of the digital rails of our financial markets today.
Yeah, for sure. I mean, I think, being close to the retail trader here at Tasty, obviously MicroStrategy was a huge narrative, right? We dug into that on the network and in some of our research deeply, and it came back to that like MNAV number, right? But to your point, Bitcoin is not a productive asset. Bitcoin is a store of value. There is no staking yield. There's really no apps on the Bitcoin network. It does something really well. Saylor pioneered that sort of vehicle. And, there's some value there, but again, there's not a lot of revenue diversification, so it's tied to price. IBIT and, the ETH ETFs, pretty successful, retail accessible, institutionally accessible, traditional markets accessible, but again, same type of thing. It's just sort of Bitcoin, it's non-productive. So I think it's nice to see this type of vehicle and this type of strategy come to the market because it's revenue generating. It has business fundamentals and it's a bet, right? It's sort of an outlook on the future of this network growing, but certainly an interesting story for a trader, I think. Yeah. So we got like a minute left. I always ask my guests this, Mark, and I'm interested to hear your prediction. What's your bold prediction for the next 10 years in crypto?
So Don Wilson, who I've worked with for a number of years, has made some pretty bold predictions. So I probably shouldn't necessarily steal some of his, but he's made predictions of different assets going to be all tokenized in the next 5 years. But I think, what we're going to see is in the next, I don't know if it's in the next 10 years. I think it's in the next really 2 years. You're going to see a large component of whether it's the fixed income markets, whether it's the equity markets, really move into a tokenized framework and trade, much more on that framework. Whether that's, 50%, 60%, but it's not going to be, pardon the pun, a token amount of transaction. It's going to be an accelerant because it's going to be adopted by either the exchanges, the clearinghouses that are doing it. And I think we have a friendly administration to really pass the rules and the framework around that. That's going to speed the rails around. So I think in the next, call it 2 to 5 years, you're going to see a mass adoption of more of, U.S. markets, equities, fixed income trade on top of blockchain technology.
Yeah, I think that's a interesting point because that's been the holy grail. I've been in the space since 2017 on my own. And like every cycle or every year you hear the institutions are coming. And, I think like stuff with Canton, networks like Canton, that seems to be true. That seems to be kind of where it's going. And I do think this cycle with the regulatory approvals and clarity and quite frankly, friendly, adoption from some of the governmental bodies and institutions, that seems to be the case. So I'm excited for it. I think it makes it easier to operate in the space. Sometimes it's not as fun, right? Like, you know what I mean? Like, I think it's some of it's not as fun to say like, oh, the NASDAQ's coming online, but I certainly think it makes it easier for adoption. And I think it needs to happen. So hope that prediction comes true for sure sooner rather than later. And, just to end off today, Mark, where can our audience find you and follow along after today's show?
So I'm on LinkedIn. I have Telegram. I have X account as well. I can send back with that information.
Awesome. Yeah, I'd love to get it out to our audience. That's all we have today. Thanks for joining us, Mark. Really appreciate it, and good luck with everything.
Thank you. Thanks for having me.
The market has sold off over 1,000 points in the last week, but it's hard to ignore the fact that we've already hit 37 new all-time highs this year alone. Will we make it back to those highs? Honestly, I have no clue. But if you're someone looking to take advantage of these dips, there are a few key things you need to understand before jumping in. That's why I sat down with an ex-prop trader to break down how to set up trades during market pullbacks, how to recognize when momentum is actually shifting, and what signals to watch for before stepping in. After that, you'll hear from a macroeconomist who explains why paying attention to the US dollar matters and why we should even care what the dollar is doing when gauging overall market sentiment. When markets sell off, everyone's talking about buying the dip. But the reality is, timing, structure, and risk management matter a lot more than people think. So I sat down with Jamal, a former prop trader and current options expert, to get his take on how professionals approach short-term pullbacks, especially when using options. Before we go deeper, I want to touch on something every trader thinks about when the market pulls back. How do you mentally position yourself to trade this right? Because let's be honest, buying the dip sounds easy, but once you factor in timing, strike selection, and decaying premium, you realize there's some extra thought that needs to be put into it. For example, if you think something like QQQ or the NASDAQ is going to rebound in 7 to 14 days, do you buy calls or sell puts? They both let you get long, and that's where the confusion comes in. Which one makes more sense in this kind of pullback? And then there's the timing problem. When traders see a dip, they either jump in too early or too late. Is the real mistake entry timing, strike selection, or how they manage the position once that premium starts bleeding? What about traders with smaller accounts? Say you've only got $1,000. How do you position for a dip without over-leveraging or blowing through your buying power? And even if you do catch the move right, do you go in the money, at the money, out of the money? What makes sense when you expect a short-term bounce? These are real problems traders face every single week. And here's what Jamal had to say. If you believe an indice or an ETF like QQQ will rebound within the next 7 to 14 days, do you prefer to buy calls or sell puts?
Something like QQQ, more than likely, I'm looking at selling put spreads because it's an index/indice, and I usually think that those might have a bounce on the order of 2 to 3%, which is sizable, but it's not the kind of bounce where I would want to buy calls expecting a massive move to the upside.
In your experience, what's the biggest mistakes that you see traders make when they're trading short-term dips, especially using options? Is it timing the entry? Is it something like selecting the strikes? Or could it be managing the position as your option premium is running out?
All three are pretty tough. If I had to choose the biggest one, I would say the timing of the entry. I think early traders want to just be all in. You want to push all your chips in immediately on what you feel is going to happen. I've certainly been victim to that at times in my trading career. And I think being able to time it slower, being able to scale into a position, which I think requires patience. It's hard for newer traders to do, but scaling into a position, a couple of units, maybe one or two. Say you want to do 5 overall, do 1 first and see how it reacts. Do 2. Things might fall further, and then you don't have the ability to scale in if you went all in the beginning. So give yourself some time, I think. And I think that's the biggest takeaway in a lot of situations, giving yourself time and scaling in slowly and being small.
If you only had like $1,000 trading account, how would you buy the dip?
I think you got to think in terms of, again, back to size and timing. I think you got to think in terms of sizing. $1,000, that means if I do a $100 position, that's 10% of my portfolio. And what can I do with that? What kind of names am I trading with that? You're automatically taking a lot of names off the board just from that size alone, unfortunately, but it's true. I mean, it's hard to trade a name that's $500 or $600 or $700 with that type of sizing. So I think you got to give yourself further time. One thing, you got to go multi months out and try to find something, finding a stock size that actually works for you and therefore option sizes that work for you. And think about it in terms of percentages. How much am I going to use in my portfolio in this trade? Is it going to be 1%? Is it going to be 10%? If I'm going in with $500 in one trade, I mean, that's half my portfolio, and you're going to live and die on that position. So you have to think of things in terms of percentages.
I wanted to zoom out and look at the bigger picture, because knowing how to set up a trade is one thing, but understanding the sentiment driving the market behind the move is just as important. That's why I brought Ilya Spivak, a macroeconomist who can break this down into plain language. We talked about the US dollar because it's one of the best gauges of risk sentiment across global markets, yet most traders overlook it. I wanted to understand why the dollar matters so much when it comes to reading the market's mood. So I asked Ilya a few key questions. Can you see hints in the dollar that tell you when the market might get jumpy soon?
Absolutely. So the dollar is one of these more interesting instruments. It waxes and wanes in its relationship relative to the market's risk sentiment. And so it's not so much that the dollar is one thing or another, but it is that you can look at the dollar and see how it's behaving, especially relative to other currencies and relative to other assets, and get a sense for what risk sentiment in the market is. And that, of course, gives you insights on other things happening as well. So there's a great insight from economist Stephen Jen, who sort of popularized this, is the idea of the dollar smile, which suggests that the dollar outperforms when the economy in the U.S. is doing really well against the other major economies or really poorly, and that it's down when performance is kind of middling. Now, that's not so important as far as economic growth per se, but it does tell you that it can play these dual roles. So if you're looking at the dollar and you're seeing, oh, stocks are declining at a time when the dollar is rising, that's usually a sense that there's some sort of significant risk aversion going on because capital is coming out of assets and going into cash. And make no mistake, the dollar is a safe haven asset in any kind of significant market sell-off. So you get a situation where you see the dollar rise, especially if it's rising against higher yielding and more cyclical currencies like the Australian dollar and the Canadian dollar, and maybe it's a little bit weaker against the yen and the Swiss franc and defensive currencies like that. You definitely can get some insights and say, okay, well, this is the kind of configuration that would be consistent with higher risk assets like stocks or Bitcoin having downside momentum and being under pressure and maybe continuing to go that way.
If the dollar starts getting stronger, but the VIX isn't moving, is that weird? What does that mean?
It's not weird. It's not weird because the dollar can have these different relationships. So let's consider, for example, the situation in 2022. You have a situation where the Fed is raising rates, stock markets are falling all year, but of course, at the same time, you have the dollar rising because these rises in interest rates make the dollar more attractive because it yields more to its holders than other currencies. And so when interest rates rise, the dollar gets attractive. Now, is that enough to extrapolate that the dollar goes down when stocks go up and the dollar goes up when stocks go down? No, of course not. Because you could just as well have an environment where they go down together. For example, take a look at the Liberation Day situation, late March, early April of this year, where the market became generally concerned with U.S.-based assets, and you had stocks, the dollar, and treasury bonds going down at the same time. You could have a situation where stocks and the dollar go up at the same time. If there's a significantly strong economic expansion, good for earnings, probably encouraging the Fed to raise rates because they're concerned about what the economic boom would do for inflation. So you can have stocks and the dollar go up at the same time. So if you don't have a clear relationship between the dollar and the VIX that's consistent, those cross-market relationships that we were just talking about, they become most interesting because you have to look at what kind of dollar you have. So if the dollar is going up and the VIX isn't, is the dollar going up at the same time that stocks are weakening? Is Bitcoin weakening? What's the dollar strengthening most against? Is it the Aussie or the yen? And if it's the Aussie, well, then you have to start thinking, well, maybe the VIX is going to pop. Maybe it's a risk-off kind of a vibe. If it's the yen, maybe not. So it depends, and context really matters.
Whenever we're viewing the dollar relative to another asset, is that where we gain our context with where we could just be looking at the dollar itself? You know, is there not much context to derive out of that? Do we need to look at it a little bit more, you know, relative to other assets?
Well, anytime you think about quote unquote the dollar, it's really important to sort of define what you're saying, because currencies don't exist in a vacuum. The only way that you can really say what is the dollar, is it the dollar's exchange rate against this currency? Is it against that currency? Is it against a basket of currencies? And so when you look at, for example, something like the dollar index, DXY, what is that? Well, it's a dated basket made out of currencies made to give you an average view of the dollar, but it was made before there was a euro. And so now most of that basket is just euro. So what is DXY? It's just the euro US dollar exchange rate upside down. So it matters what you're talking about. I think the most insight you can get is in looking at, let's say, how the dollar is performing against currencies that are more linked to economic growth relative to those that are more defensive. So saying, okay, how is the dollar performing relative to, let's say, on one side, Australian dollar, Canadian dollar, and on the other side, euro, yen, pound. And that gives you a sense of what kind of a dollar is this? Is this a risk-off dollar? Is it a risk-on dollar? Is the dollar rising at the same time that bonds are falling and so yields are rising? So is it rising for reasons where people want to hold dollars because interest rates are going up and that's a return on holding dollars? Or is it rising very potently, let's say in 2008? Stocks absolutely crater. Interest rates go to zero and the dollar soars. Why is it soaring? Because interest rates are going to zero? That seems counterintuitive if that's what you're focused on, but it's not going up for those reasons. It's going up because it is the most liquid currency in all existence, as far as we know. And so when people divest from things and money goes to cash, where does it go? Which cash, right? If I'm cashing out of my stocks, bonds, commodities, whatever, what's my cash of choice? Obviously, it's the most liquid one because I want to be
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with Active Trader Mode. Smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Hello everybody, Tim Knight here, and it's another good day. I've got a lot of red on the screen, and the green is from a place where I'd like it to be, which is precious metals. If you read me on Slope, you've probably seen my bemoaning. Look, I was crazy about silver in the autumn of 2024. That's more than doubled in price. I was crazy about palladium starting this year in January. That's up about 60 to 70%. Great charts, great ideas, great recommendations. I hesitate to use that word because, I have long believed that what I'm doing is not like, you should buy this, you should short this, etc. They're just ideas for you to examine and consider for yourself, because I don't want any blame for anybody losing money, and I don't want any credit for anybody making money either. But I do the best I can. And so the precious metals obsession has worked out. I think it's going to continue to work out. I think there are ultimately much higher prices ahead. And let me move the microphone up a little bit more. It's another good day. And I've got 32 short positions, and of those 32 are profitable. Some very profitable. And I'm hoping it's just the start of something bigger. And maybe I'll let you down, right? Get a chance to work here. And back. Okay, so let's jump into the wonderful world of charting. And we begin, as I always do, with the spider. We got a nice big red day on our hands, and it was, not exactly expected. There's no particular news or anything like that to drive it down. Here's your Santa Claus rally. Down she goes, and that's wonderful. 0.84% negative, 4 red bars in a row. Yay. I don't know. The small caps, IWM, are also down about 0.75%. Oh, look, a moving trend line. Let's fix it again. So there's the broken trend line there. And importantly, we have a failed bullish breakout on our hands. That's important because, psychologically, if the bulls are slapping each other on the back and cheering when there's a breakout, what's equally disappointing is when it slips under the same important price level. So the celebration was here in this breakout to lifetime highs. It continued, it opened strong, and then down, 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 down she goes. So we're trading now on this where we were trading back in the middle of October. So that's cool. And the cubes are particularly weak. The NASDAQ itself is down 413 points right now. We had a bit of a fight back yesterday, that lonely green bar there, but we've got the biggest red bar we've seen since November 20, I think. Bearish engulfing pattern. And, if you follow me regularly, you and I were watching as we got closer and closer to this gap. So it's like green, 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 everything's great, everything's wonderful, PEs of 1,000 don't matter. And then we got up to the gap, and then down we go. So we're getting some selling that we haven't seen in a while. And this is in the context of course, everyone's expectation that Santa owes them a rally, which he doesn't. And in particular, semiconductors, SMH, are down really hard. The AI bubble is slowly leaking, almost imperceptibly, no matter what sector you're talking about. And semiconductors, of course, an important leader here. As I mentioned yesterday, I shorted NVIDIA, which is also doing well. It's one of those 32 shorts I mentioned. And this afternoon, Micron, symbol MU, reports, and hopefully that will throw some gasoline on this fire. But tech stocks in general just kind of withering away. I'd bemoaned yesterday missing China. On Monday, I guess it was, I was talking about what a good-looking chart FXI was to short. I neglected to do it. This morning, it was strong, and so I decided, okay, I've got a second chance here. So I shorted FXI, and so far so good on that. I shorted it near the open today. We've got a nice red bar here, and so you don't get second chances very often, but this one came along, and it's just as good a pattern as I was talking about yesterday. So no longer regretting missing that. It's going really well, because amongst those 32 shorts, there's a smattering of ETFs, FXI among them. As far as individual shorts, I'm not going to go through all 32, obviously. There's a few I just wanted to highlight, and let's thumb through them a little bit. One is AMD, Advanced Micro Devices. This has been a big beneficiary of the AI mania. And you can see here it had this uninterrupted romp for months and months, up and up and up and up we go. And we seem to have peaked on that round about here, very late in October. And it's not a beautiful distribution top, it's okay, but the clear break was here. This is when we sort of blasted below that distribution, fell, retraced, started to climb, and pooped out right along here. So it exhausted itself on the 2nd of December and had been sort of curled lower like so. So we're trading now at the lowest levels we've seen in months. And I have no particular strong bias about Micron. I am short it, but I'll simply say it would be awfully nice if it joined, if it helped push things lower. AristaNet, ANET, down almost 3%. Let's just rough out a little bit of a top here, like so. And more like that. Doink. And so we've been turning away from this as well. And the kinds of PEs we're seeing are, of course, astronomically high. Even Google, which is very conservative blue chip, it's got a PE of 30. And this is not a spunky little startup. I mean, it's a multi-trillion-dollar company. And so, people are paying as if it's got years of triple-digit growth ahead. It's just crazy. So PEs are very, very high still. I don't know what AristaNet is, and I don't base my trades on fundamentals, but it's just kind of interesting to see what's under the hood. New trade for me today, General Motors, GM, lifetime high yesterday. What is that coming from? You can see this one has also had this exceptional run and sort of spiked higher yesterday. So I showed this one early today as well. Another semiconductor here, ON. I think I mentioned this one in passing yesterday. This one's down 2.3%. So it's just a nice kind of hodgepodge of semiconductor stocks that I've shorted. Another, I don't know exactly what their business is. It's definitely AI related and definitely hyperscaling related, but Blue Owl Capital, OWL. This one's reversed 2.12%. This one peaked early this year, actually, and it's not a especially clean pattern, but it's got a lot of overhead supply, and just very crudely, just something like that. This is just like slapdash charting here, but you get the general idea of what this is all about. So yeah, that's OWL. And one that's doing really well, and this is the weird one that I had avoided so long because the quote data was bad, but it's Glad I didn't let that stop me. Vistra, VST, down 7.36% today. Very big bearish engulfing pattern on this one. A cleaner pattern on this, as you can see. And we're starting to challenge some of the lows we've seen. We're back at the levels we saw back in May on this one. The dogs are beginning to orbit. Okay, this could get ugly. Another one, ARM Holdings, ARM. Short this one, we're down about 6% on this. This isn't a particularly old stock. It hasn't been around terribly, terribly long, but you can see a series of reversal tops on this. There's one here, and there's one roughly here. Yuck. Okay, and then most recently, we've got one here, which is, yes, another head and shoulders top on this one. So you can kind of see that it's got this tendency to find strength and push higher and then roll over. We seem to be rolling over right now. So that's ARM. I'll pick up the pace here. We don't have much time left. Hims and Hers, HIMS, mentioned this a bunch. Very pretty top on this one. We're down again on this, about 4.5%. Oklo, this is my biggest percentage gainer. Down almost 10% today alone on this. There's a not too terrible reversal top on that. Anywhere you look, the nuclear micro bubble that we had has been unraveling. I think SMR is another one. NU, I think, is another one. There's just a tiny handful of these public nuclear focused companies. And SOFI, S-O-F-I, is that how you'd like to say it? This is down almost 5%. Nice bearish engulfing pattern on this. And importantly, starting to look kind of like it's going to be completing this top here. It's not there yet, but if it does, it's going to be a pretty big deal, I think. So it's been working its way lower. It would take, I think, a break of this low set on November 21 to finish the work. But we're getting there step by step. Okay, let's look at Precious for a second. On the one hand, my calls on Precious have been fantastic. On the other, my trading has been horrible. Not a great combination for me, but not bad for you if you don't have the weak hands that I do in this stuff. Gold GLD is up again, almost 1%. It's getting close to a lifetime high. It's not there yet, but it could well get there. There's the peak. This is looking pretty good. It wouldn't take too much to push it over the finish line, and that would just, I think, accelerate things from here, hard as that is to believe. Silver is just a phenomenon. Silver is an incredible creature. I remember first falling in love with this years ago when it was $7. It's approaching 10 times that at this point, but we don't need sound effects, please. That's more of a Kramer thing. Okay, so you can see silver has just been amazing. This is SLV just exploding higher after a very nice base formation. And heavy psi, palladium, just doing fantastic. Multi-year high here, pushing up on PALL, the key ETF to trade this. I don't know where it's going to stop. I just kind of I'm sort of looking at the train going off in the distance with some of you aboard it. It's been just an amazing setup. You can see here this just sensational cup with handle pattern here that completed. And I think, palladium could easily double in the next year or so. So yeah, palladium is doing super de-duper. Not so much in Bitcoin land. There was a lot of excitement briefly in the Twitterverse when Bitcoin was raging higher this morning, got above 90,000, and that lasted about a millisecond, and everyone was slapping each other in the back saying, "We're so back," and then it fell. Yeah, I think we're heading to the mid to low 70s on this one. Of course, no one's talking about the year-end predictions they had made. I think Tom Lee said $250,000, but he sort of changed his tune on that. Anyway, Bitcoin not doing well, nor is Strategy, MSTR, which is really one of the few stocks you can point to as having a terrible 2025, down about 50%, I think, and from its peak, I don't know, 60, 70%. So MSTR, dreadful stuff. I'm still a big fan of interest-sensitive ETFs on the short side. LQD, the corporate bond ETF. I think it's an interesting short so long as it does not push past the price gap that I just drew there. And TLT, same idea. Let's just slap a price gap on that too. Right along bang there, not too far away, but I'd like to see it reverse away from that price gap. And so far, my idea that rising interest rates would be depressing home builders, I mentioned this a few days ago, that's working well. XHB, the ETF, down over 1% today, and a nice progression of descents like so. Anyway, wow, we got to the bottom of the hour without running over any time here. Micron, that's up next. Be just a few dozens of minutes away. We'll get the news on that. We'll see how that goes and if it helps anymore. So that's it for me today. I'll see you here on Thursday, and thanks for coming by. See ya.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
tastytrade's active trader interface makes futures markets your arena. Built for the bold, not the board. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Oh, Mr. Vecchio, we are back, my friend, and a little bit of a sell-off, a weird market, I would say. We've got E-mini S&P 500 futures here down 70. We're near the lower end of where we've been trading, about 1%. The NASDAQ
really getting hit today. Down about 430. We're below that 25,000 mark on the NASDAQ, about 1.75% to the downside. Some big moves in some of the mega cap stocks. NVIDIA is down near 170. Microsoft has been an absolute dog. It's up $1, but near the lower end of where it's been trading. Just a lot of big moves in the semiconductor space in general. Got Micron earnings after the close today. So those kind of taking down the NASDAQ here. Dow down 200. It's actually the strongest of the group here. Has remained stable with a bunch of the financial names kind of staying strong here. You've got JP Morgan near the highs. Goldman Sachs has been hovering around 900-ish. Those have kind of been buoying the Dow a bit. The Russell down 26 here, about 1%. The Russell and the E-minis both down about 1%. The NASDAQ, the weakest of the group. Oil catching a little bit of a bid. Maybe we're getting a Venezuelan war talk here with Trump's address tonight. 56.37. It got as low as 55.08. So we've had quite the pullback in oil. Volatility futures have not really responded at all to the move today. They've remained at 1870. We did have expiration today. Got option expiration end of the week. Maybe that's kind of suppressing a little bit of the vol that we're suppressing it down as opposed to seeing a little bit of a spike in vol that we would expect with what has been a pretty weak market. Bonds have remained unchanged pretty much all day here at 115 and change. Gold and silver, the story of the session, story of the week, the month. I guess starting to be the story of the year. Gold up $40 here. We're just a skosh off all-time highs. Silver got to 67 and change. It has been just straight parabolic to the upside. And I shouldn't even mention cryptocurrencies because nobody seems to care. Bitcoin down 1,600. It's dead, dusted, as the kids would say. It's all about the shiny rocks again.
Shiny rocks. Silver's up over 30% the past month, Nick. That's wild. That usually doesn't happen.
Does that scream like scary to you? That seems like, get to the bunker type moves.
I feel like we haven't seen that kind of move in silver unless something really, really odd is going on in the world, in the market. Thinking about what happened in 2020, for example, you get that big burst higher over the summer months where it climbs from like 17 up to 27 or so. That was about it. So like COVID and then global financial crisis aftermath. Maybe that's a warning sign that something is brewing beneath the surface, Nick. Maybe all these AI data centers that Blue Owl Capital no longer wants to help finance. Maybe that's the canary in the coal mine telling us that we have some concerns ahead.
I know. Part of me looks at this market and I'm like, oh, that is, that space, the semiconductors, the chips, the big name tech stocks into this move we've had. It seems like this is a buyable dip. You've got no vol, you got Santa Claus coming up. This train is still moving. It's not like this is all done with. It seems like, if anything, I'm looking at the NASDAQ, which I actually have been scalping to the long side. I have a little runner into the end of the day today. We'll see what happens. It seems like that's kind of a place where, okay, we've taken enough of a haircut. You've gotten a little bit of fear pumped into the market. Do you feel that same way, or do you still think it's like kind of a small cap E-mini Dow type market? Like, is the AI tech trade done with? We put the kibosh on it.
Maybe for this year. I mean, I'm just trying to think what can change the narrative now, because this is the last full week of trading and we're going to have Micron earnings, Nick, but I don't think anyone's hanging their hat on Micron for being the catalyst that changes everyone's perspective. So what can change that narrative between now and the end of the year? There's no earnings release. There's no big corporate event coming up. It seems like the news flow is directional one way, right? The market doesn't care that OpenAI is announcing partnerships with Disney for character licensing. It cares more that you're seeing private capital pull out of potential funding for these deals. Now, the deal is still moving forward. I mean, I think it's worth pointing out the spin that Oracle's spokesperson put on this They said with respect to the Michigan project, quote, our development partner Related Digital selected the best equity partner from a competitive group of options, which in this instance was not Blue Owl. Final negotiations for the equity deal are moving forward on schedule and according to plan. Okay.
That sounds like a GFY, like who cares about Blue Owl? We had others.
Yeah, right. Like we were speed dating here, that we weren't marrying them.
Yeah, we got this. I mean,
directionally, right? It's people care about that right now, and moving on to, okay, if these companies can no longer fund these projects out of pocket and are going into debt markets, maybe there's a little bit more of an issue there. The market punished Broadcom not too long ago for showing us that the inventory backlog wasn't as big as people wanted.
It's still getting punished, Chris. I mean, the stock is down at 327. We're, a couple points off of the lows of the session here, but we've had a very swift fall from 410 to, 327-ish. I actually mentioned this with my dad the other day when we sold some puts here, but this looks a lot like what happened to NVIDIA when NVIDIA has sold off a little bit below that 180 handle, but it had that move up to 210-ish and then goes back down to 180-ish and kind of chopped in this range. Is that kind of, that's kind of how I'm looking at the tech names right now, is like, okay, they got a little frothy. We are taking some of the chips off the table here, and they're kind of getting to where they were interesting, when they were interesting prior to the blast off the highs. When NVIDIA was 180, everybody was like, oh yeah, this is a big old bubble. And then it blasts off to 210, 215, and everybody's screaming that it's a big bubble and you get this downside move. Now we're back to kind of that decision area. They're starting to look interesting to me. For Oracle, for example, it's now 42% off of the recent high close. Yeah, I mean, we're back to where it was before this whole, kind of circular funding extravaganza started.
Well, that's worse than the drawdown we had from the post-COVID highs. It's worse than the drawdown that we had during COVID.
Mm-hmm.
You're starting. That's we're getting into the place. I shared the chart a little while ago in the chat, Nick. Is this worse than what happened in since the dot-com bubble? Since the this is worse since the global financial crisis.
I don't think so.
That's a difficult story. Yeah, right. That's a difficult story to convince yourself of, unless there's something really that we as equity market bulls have been underappreciating here. And if it's a bubble, one of the charts that we shared earlier was what's happening right now in terms of where stocks are getting their growth from. So the tech sector, for example, coming into today's session was up 22.5% year to date. Breaking that down, though, EPS growth was 30.2%, and the PE multiple growth was minus 5.9%. Technology had seen this year so far the largest valuation contraction among any of the sectors, which seems so difficult to believe given how the Nasdaq's behaved and all these tech stocks have behaved. But, that's ultimately where we are. People are selling down tech and they're buying other stuff with it. The money's not leaving the market. The breadth today isn't terrible. If you look around and say, I have the watch list that I love on the platform, Nick. 12 days of trading. Hey, you know what? Let's go to that real quick. That's a good transition.
We can
go there right now. Go to tastytrade.com/12 days of trading from December 8th up until December 23rd, including today. There are emails going out, trader-friendly topics to help you prepare for next year. Today's topic, Nick, we kind of alluded to it, but it's what we like to use on the platform and how the platform features make us more efficient traders.
Awesome.
I keep a watch list together that we show in Futures Power Hour and Overtime of 25 sector ETFs. Last time I checked, 16 of the 25 were still green. So this is a tech story right now. It's AI related. Not everything is terrible in the market. You just have to be very, very selective. And going into the end of the year, trickier.
I hear you. I mean, you did chat me, December 17th, usually the low of the last part of the year. We're right there. I mean, this is kind of a spot. You hear the jingle bells come in. You got low float, holiday trading. Volatility kind of is telling you that this is at least a a digestible downside move. It's not like anybody's freaking out here with the VIX at 1750.
And you look at the VIX futures curve, right? Well, I mean, what do you make of the VIX futures curve and how the volatility is reading after, as we're making our way through OPEX now?
Well, I mean, you're still in a 1 to 2 point contango across the curve. So from volatility, 1867, you look, going further out into the middle of next year, you got 1991, in the mid 20s here out to 21. So like I said, it's not nobody, you can't even look at the vol curve and be like, oh yeah, we're flat vol. Maybe there's, some binary event or something, on the horizon that could spook us. You still got a 10, 15, 20% contango here in volatility futures. So I think it goes and kind of gives me that, it makes me talk my book a little bit more of maybe this is a buyable dip despite the carnage.
Nick, you mentioned before that that crypto's a little bit dead right now. It's one of the things that continues to struggle. And unlike whatever equity market bounces we've had over the past week or two, crypto really hasn't gotten off the ground.
No.
Bitcoin's in the midst of a pretty decent sized drawdown from its highs. I clock a 31% drawdown right now. For Ethereum, it's in the neighborhood of 41.5% here. I've been looking at various crypto people on Twitter, on X, seeing what they're saying about this. They're talking about all the various fundamentals of the market in terms of capital and business formation and participation, on-chain analysis, this, that, the other thing. And you can't really point to anything except for the fact that there is this kind of mythology in the crypto world that things move in 4-year cycles. And we're in the midst of one of the downswings.
Okay.
Do you believe in that kind of stuff when you're looking at crypto? Do you look at those longer term cyclical charts, the rainbow chart that's so famous out there?
Yeah, I've seen the rainbow chart. I don't play into that. I mean, I think it's a more volatile look at what equity markets and more traditionally like safe markets are doing. I mean, there's when you're having $20 or $30 swings in trillion-dollar companies like Broadcom or NVIDIA, you can't expect Bitcoin to be flying to the upside. Like, it's going to mirror the market and probably on the downside, a multiple of that move. And I think Bitcoin's move right now was early for what we're experiencing right now. We've had, Bitcoin has been at 80 or 90,000 for 3-4 weeks now. I think it just kind of front ran this move a little bit, this kind of liquidity crunch, this kind of, air coming out of the bubble, so to speak. I think it was just kind of a front running of that move.
There is this concept when we talk about the 4-year cycle, there's the notion, Nick, is that after a halving event, right, every 4 years, the supply yielded from your mining operation is cut in half. There's a 12 to 18 month window in which after the halving, Bitcoin crypto tends to run. And then once you get into that 12 to 18 month range, things slow down and eventually peak out. And then you have a period of pullback. The last halving was April 2024.
Yeah.
Bitcoin peaked in October of this year, which October 25 minus April 24, that's 18 months on the nose. So, I mean, I'm not going to dismiss it because certainly there's evidence for why people think this is a thing. We haven't had that many halving events in our back pocket to say, yeah, this is something that occurs definitely. But the pattern's there. And so I can't help but think about that right now because crypto's just been such a dog. It just has not been able to sustain any sort of bounce. And even today, Bitcoin was at 90,317 in the spot. It's back to 86,134.
It's a tough trade. I'm with you there. One of the other things I wanted to tee up for you was the wartime trade. Your call spreads in oil, your LMT. What are you? Because the last time we had a show together, I did a call diagonal spread in the LMT, made a couple bucks there. LMT was actually one of the biggest movers to the downside today. It's now unchanged. Oil is basically at the high of the session. It's surging into the close. You're at basically the highs of the session, a couple ticks off the highs. There's speculation that that's going to be one of the talking points of today's address to the nation. You think that's bullish or bearish for equities, bullish or bearish for oil, or do you have something specific? Do you think that's not on the agenda? What are your thoughts here?
I saw a commentator on Fox News in recent days say that invading Venezuela would be bearish oil long term because we'd be able to liberate 300 billion barrels from the reserves underground.
Yep.
Which liberate is a interesting word.
It's a very socially correct way,
to describe invading a foreign country.
Yes.
Right. But last night, I mean, Trump in his remarks about a blockade, which when the Pentagon was reached today, how's this blockade going to work out? They said, talk to the White House. So foreign policy by tweet doesn't seem to be, or by Truth Social post doesn't seem to be something that's actually really going on. That's neither here nor there, I suppose. But what really matters is that he called it our oil, that Venezuela has stolen our oil. And they need to give it back.
Ooh.
So what will tonight be about? Here's my issue, Nick. We were talking about the signs that Trump may do something with respect to Venezuela have been, the writing has been on the wall for several weeks. Yeah. And when these out of the money call spread ideas were beginning to be instituted, it's like, let's look at oil a week out, something $2 or $3 higher from here, go $1 or $2 wide on a call spread. And I've been paying a tuition to the market on this. And with this announcement of a potential blockade last night, the sanctioned oil tankers blockade, oil got a $2 bounce.
Yeah.
So what will materially now be the difference with actual military action on the ground with respect to Venezuela? If a blockade's in place and we're effectively zeroing out or getting close to zeroing out Venezuela's oil that's making its way into the global market, which accounts for about 1% of supply daily globally. Is that already priced in? Like, is the bounce already priced in? Like, were we right on this idea of oil's going to rip when we get the right headline in Venezuela, but like the wrong timing? And that happens.
Yeah.
I'm wondering, like, what does the world look like if Maduro leaves and Venezuela opens up their oil to global markets? That's more supply glut. So I think the bigger play here is kind of like letting this wash out. If oil bounces another $1 or $2 because of tomahawks and Caracas.
Yeah.
As we saw with Israel, Iran, we fade the move, we fade the volatility expansion. And then, we talk about picking up the pieces if oil falls below 50.
And this 55 level has kind of been the low for the last, year or so. So I've started to get some long delta, but I hear you there. What do you think it would mean for markets if that is the agenda tonight? Or do you think it's something completely different? I mean, I've seen that this is speculated to be part of it. I've seen that we've also got kind of like this being like a fluff piece sort of thing, like, amazing economy, best, everything, inflation. I killed inflation. I did all this. You think we have a market moving event tonight is my big question for you.
I think he's probably going to discuss the refer a friend trading bonus that we have here.
Oh, that's good. That's good. Trump's a big fan of this. Yes, for sure.
Many people are saying, Nick, that when a referred customer opens a new account and funds it with a $2,000 initial deposit using a friend's referral code, both the referrer and the referral will receive a $100 bonus. They call this Benjamin still, not Trump yet. So if you got a Benjamin, go to tastytrade.com/referral for more information.
Thank you for your attention to this matter.
What will he say tonight? I'm on Polymarket right now, Nick. 90% Venezuela, 92% inflation, 92% border, 88% Biden or Obama. That seems like a definite thing. Only 70% MAGA?
Okay. But those are words. Those are words.
Yeah, I mean, listen, the focus of tonight's speech, I'm not considering a big event risk, right? It's supposed to be about the economic achievements that have happened so far in Trump 1.0. That's my understanding. So I don't know where Venezuela comes in. Maybe he throws in like oil prices are low, and when we invade Venezuela and get back our oil that they stole from us, gas prices will be even lower. But I just don't see how the two things square for a speech that's supposed to be focused on economics.
Okay. All right. I kind of am with you. I think that just if there was fear, volatility would be bid, and it just is not. It feels like this is going to be another one of those event volatility, nothing happens. It's a big old, nothing event. And, we're right back to 68.50 tomorrow. And we basically just erase, the move today. That's like what it feels like with the way vol is acting.
I know it's not one of our market, and I'm with you there. I know it's not one of our markets for polymarket, right? But Golden Age is only trading at 62 cents. And 2 days ago, Trump gave a speech talking about the economy in the Christmas holiday setting context where he referred to the economy as being in a golden age. That may be the value play tonight.
Okay.
Neither here nor there, though. Yeah. Well, hey, listen, if he talks about Venezuela or war or ending an 8th war, if he starts the war and then ends it, does he get to take credit for ending a 9th war? Some things to consider. But gold, silver, Nick, I mean, come on. Silver's looked beautiful all week long, and today it just levels up here. I hope you're out.
Oh, yeah, I got out. It was very painful. I am now back in. I'm long gold, short silver. I'm addicted. I cannot. It's on my screen all day long. I cannot stop. I scalped some at like 67.05 today. A couple ticks off the high. It was perfect. But yeah, no, I can't stop. Can't stop, won't stop.
Can't stop, won't stop.
I never said I was a smart guy, okay? I mean, I have my vices. This is it.
Where does silver go to? Where does silver go to that makes you say it's not worth doing this anymore?
I mean, I just look at the gold silver ratio, man. It's just something's lying to me. The move in silver is too much, or gold has some catching up to do. That's what it says. And we talked about, equities here and Bitcoin. Bitcoin was up 3,000, 4,000 at one point today. And I asked my dad, I was like, who's lying? It's either equities or Bitcoin. It's the same thing with the silver and gold move. I feel like one of them is lying.
I think gold's lying. It needs to catch up to silver, which
there
also I have some gold calls that are sitting 6 DTE that are just right at the money that I just want a little bit more out of.
You greedy SOBU.
That's really what I'm doing here. But a lot of people are trading today as we're watching stocks fall into the close here. Nick, volumes all week long, quite frankly, in the stock market have been really, really strong. They're really high, right? Over here in SPOOs, 1.73 million today. And SPX, Frank did not send that over to me yet. So 1.5, 1.7 SPOOs. SPX options are trending to hit 5 million. Today on Liz and Jenny show, we heard the CBOE guy say that SIBO guys say that more than 50% of all SPX options are now traded by retail customers. Those retail do an average of 5 lots, and it adds up to 2 million daily. Wow. Okay. Almost 3 million Tesla on 88 million shares, 2.5 now, about 2.6 million NVIDIAs. 7,000 silver options doesn't sound like much, but it's way over their average. 20,000 gold is also more than the average with calls over puts 2 to 1. 6.6 million Qs traded. Yeah, this whole week, big volumes, last trading week of the year.
As we go into the close here, you've got E-minis down 77. We've sold off about another 10 or 15 handles into the close here. You got the NASDAQ down 473. This is the low of the session, down a little under 2%. You got the Dow down 257, the Russell down 29. Oil continuing to bid higher into the close here, up almost $1.50, about 2 2/3%. Volatility futures getting a little bit of a bid, but still low at 1885 right now. You've got bond futures basically unchanged at 115 and change. Gold and silver both staying here. You got gold up $41 and change, about 1%. Silver just under 67, up about 4.25%, and Bitcoin hasn't moved at all as we've been talking. You think Micron matters at all after the close today?
No, I really don't. I'm looking at tomorrow's CPI report is probably the most important thing, Nick. If you want to throw like VIX 1D up on the screen.
Yeah.
This is going to be the highest VIX 1D close all month. CPI's tomorrow. We have the Trump speech tonight. Maybe this is why we're all antsy. Forget the fact that we have this OpenAI, Oracle, Blue Owl situation going on. That seems like it's a convenient excuse for a market that was looking for a reason to take things down a notch today.
Yes.
That just provided the permission structure for it to do so. If we get through Trump's speech tonight and you get through CPI tomorrow, what's the worst situation that we could be in? The labor market softening and inflation's running too hot, puts the Fed in a corner. Maybe an on the nose, if not slightly, cooler CPI gets everyone to relax. We pull forward those rate cut odds. Hey, you know what? We don't need private capital. We don't need to worry about private capital funding AI. They're all going to want to fund it once rates are lower in a few months. We can get some narrative juice here for the final few weeks. And you mentioned when's Santa coming? I'd remind people, Santa Claus rally is the final 5 trading days of the year plus the first 2 of the new one. Since 1950, the market's averaged a 1.3% gain during that window. It didn't work last year. Maybe it works this year.
All right, we're due. I like it. E-mini's down 77 here. NASDAQ down about 485 as we go into the close here. Definitely a weak close. That's our bell, Mr. Vecchio. Thanks for joining me. I'm excited to text during the event tonight. I will keep you posted on anything I make trade-wise here. But we're going to take a quick little 90-second break, come back. Mr. Vecchio and Ilya will be back on for overtime here. So we're going to take a quick little 90-second break. We'll see you tomorrow morning, and we'll see what happens then. We'll see you then. Peace.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
tastytrade has crypto, and you can trade with 0 commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Nikki Batt, University of Kansas. Number 20, because that's how many underlyings are in my portfolio.
Rick Welch, Illinois Institute of Technology. Number 23, because I'm trading 23 hours a day.
Dr. Data, Louisiana State University. Number, square root of 1/365, because that's the square root of time for one day, which is multiplied times the stock price, multiplied times the implied volatility, which gets you the projected stock price for one day.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays to see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch tastytrade.
Stocks fall. That's it. It's Wednesday, December 17th, 2025. This is Overtime. I'm your host, Chris Vecchio, New York. Ilya Spivak He's in San Francisco. We're here together to take you through the rest of this half an hour as we wind down the trading day. A trading day defined by bad news for Oracle, that one of the private equity capital providers, Blue Owl Capital, trading under the symbol OWL, publicly traded company, they would not be moving forward with helping finance the Michigan project for reasons related to local politics and concerns that construction would be delayed. So they say. Of course, Oracle's telling us that that's not the story. What's really happening is that one of their other partners moved forward and made the best pitch to be the equity partner on the project. So everything's moving forward as planned. Doesn't matter for the market. Oracle takes a 5% haircut today, and it's another knock for that NVIDIA, Oracle, Microsoft, Meta flywheel, where NVIDIA is off another 3.8%, leading the semis, broadly speaking, down 3.7% in today's session. The bond market couldn't find any relief throughout all of it. Slightly weaker at the long end of the curve, despite what was a promising 20-year auction. Best indirect bidders in several months. Bid to cover ratio better than expected. Stops through by 0.1 basis points. The real action, of course, is coming in gold and silver, Ilya.
Yes.
That triangle from 24 hours ago decided to resolve itself.
Yes, it did.
Gold has not yet decided to make its break, but maybe that's around the corner heading into the end of this week, because that would just be lovely.
I mean, that's the one I'm sitting and I'm looking at silver and going, this isn't the kind of trade that goes into my strategy. I am probably more risk averse than to have chased the rally at this point. And of course, you and I rode most of it from back in, weeks ago now. But as I look at it continue to make highs, it's almost a 5% day today. I look at it and go, man, sometimes you just got to set your rule book aside and learn to love the bomb.
Sometimes you got to race, Chip, which is what oil's doing now, up nearly 3% as we go into the close and potentially get ready for a speech tonight from President Trump indicating that we are going to war with Venezuela. He did say yesterday on Truth Social that we were installing a military blockade, preventing any sanctioned oil tankers from coming or going, which Venezuela responded to today by saying that they're going to have their Navy transport and escort those vessels through the South Caribbean. So oil prices up 2.9%. Likewise, natural gas up 5.2%. We see in Russia that an ultimatum is being presented to Russia. They're going to get more sanctions unless they agree to the current iteration of the Ukraine peace deal, which, of course, Russia has given no such indication that they will do.
Seems like the White House has changed the place where it wants to tighten the screws. They tried to tighten them in Kiev. Kiev very quickly got religion on how to talk to the White House after that one disastrous visit by President Zelensky to the White House. They seem to very quickly have listened. It seemed like every major European leader immediately grabbed Zelensky and was like, hey, listen, this is not how this works. And Ukraine has been very good at managing their conversation with the White House. They've been very good at saying yes, but. And it seems like the onus has really turned to Russia now. And of course, they're less good at saying yes, but.
There are some people saying, and it's an interesting perspective, that because Venezuela owes China so much money, roughly speaking, $13 billion out of their entire $113 billion debt load, that China does not have any interest in seeing the U.S. invade Venezuela. And the U.S. wants a quick end to the Russia-Ukraine war to give President Trump a win and also to end all the suffering. And of course, China is helping prop up Russia. So this is, we talk about China being the big geopolitical foe in Trump's eyes, a competitive state. The sanctions are against them, the fentanyl, the this, the that, the other thing. Maybe this is a chip. Maybe this is a ploy to get some leverage elsewhere around the world. We'll back off of Venezuela. You get Russia to agree to a ceasefire. Fewer words, everyone's happy. Your debt keeps getting serviced because we allow Venezuela to keep pumping the oil and sending it out at the meager 1 million barrels per day. Okay, that's the story I can buy here.
Yeah,
but the market's
and not outside the realm of the what is now hat tip to the Economist. They're the first ones that I've seen use this, but the new Don Rowe doctrine, like Monroe, but under the current administration.
it finally feels like today is the day that oil is waking up about the geopolitical risk and whatever's happening. We do see this near 3% gain today. IVR is up into the high 29 area now. Prices haven't crossed any sort of technical Rubicon yet, Ilya, but
yeah.
Is this going to shape up? And I can't help but question, okay, if we're doing a military blockade and that's what the reaction is here today, was this the $1 or $2 bounce that we've been looking for around one of these headlines? Because effectively, if there's a blockade now versus missiles flying next week or in a month, the oil is still taken out of the supply.
Yeah. Yeah. I mean, it seems like there is at least enough here, but I think clearly we see some level of geopolitical premium coming into this, but is it more than the catalyst for a single day's correction? I mean, take a look at where we're landing here. The lines you have on the chart are very instrumental here. We're coming in to test the underside of a range that we've recently broken. And if ever there was an auspicious spot to fade something, this is one of them near term. Obviously, I think we need to see confirmation that you are actually stalling there. Give me a shooting star, a doji, something. Some kind of exhaustion type of price action. But we're not exactly out of the bearish woods here by any stretch. If this was the kind of thing that we saw, for example, with the escalation between Israel and Iran, it'd be a very different oil rally. And maybe it will still be. But for now, this looks like the market is going, okay, there's a little bit more annoyance here. And we had a big reference point of former support a few months back, right where we've bounced. So, okay, fine. Let's not get overly bared up right here. But would anybody really blink global supply demand wise if Venezuela came offline? It really wouldn't matter in the great sort of scheme of things. I think there's much more here, to your point, that speaks to geopolitical reorientation than the supply demand equation for oil. If the Russia-Ukraine war and the Israel-Iran warette, as it were, a mini war, if that couldn't be a lasting thing, this is less significant from a kind of how much supply this embodies type of perspective.
When we had this Israel-Iran situation pop off, I would say 61, 62 is probably the line in the sand, considering we bumped up into 61, 62 a few times in the CLG6 contract back in April. And then once you cross 62, okay, we go up into the actual bombing strikes, and then Iran sending out those videos of missiles hitting the Statue of Liberty, declaring that they had responded.
We win.
Being a New Yorker, I feel like that would have been in the news locally if the Statue of Liberty blew up. So when that didn't happen,
somebody might have said something.
They're declaring victory. Well, someone said something. It wasn't the Ayatollah, because he has yet to respond to any of my messages, which is really
rude. Just rude.
That was a move, 62 up to a high of 70, $8 percentage terms, 13%. And then immediately given back in a few sessions. So like if something does occur here, are we talking about, we do 13% off the lows today? We're talking in the neighborhood of what, $61, 62? That's why I think it doesn't, like, it's the appeal's not really there to really try to chase the upside.
This is the place to deploy capital.
Well, what I'm using this opportunity for is to roll the iron condor position that I had, the short iron condor position from the 52, 54, 65, 67 down to 47, 49, 62, 64. The rationale there being that volatility is a little bit better. looking for 62, 64 effectively means we're going to have to get through some of the highs that we saw back in September, which if we go on approach to that, probably going to have some time to get out. I doubt we're going to get there in one fell swoop. I don't think it's going to occur around these headlines, but if it were, the volatility expansion in oil, like taking and dusting off that old Radigan playbook, Ilya, you just got to give yourself a little bit of duration here because the geopolitical flare-ups have not led to sustained rallies in this market, and you can't let yourself get fooled by that price action. You just got to make sure you have the time on your side.
Yeah. Yeah. I mean, at this point, the path of least resistance clearly still seems lower. You are running into an important barrier of support. You should expect a degree of friction there. I mean, this is where technical analysis becomes the greatest of all things, because it doesn't need to be empirically correct. Enough people just need to see that there was a low here back in April and go, well, it couldn't go below that before. Let's see if it does again. And if it does get through it, that's probably meaningful because it couldn't do it before. And if it bounces here, well, that's probably meaningful because it's bounced here before. And then they trade on that basis. And the response at the low becomes self-fulfilling. You don't have to believe absolutely anything about technical analysis to appreciate how that kind of thing, just at a very basic psychological level, is going to work. And that's exactly the kind of technical analysis I love. The sort of obvious, everybody can see the same spot, everybody's reacting to the same thing. So when you get the reaction and the resolution, you can take it at face value. So looking at this, yeah, okay, we stalled at this very obvious, glaring spot. Why wouldn't we? Of course we would. Now we're testing the underside of what is another glaring spot. Okay, let's see if we get through. If we do, I would argue you can take it at face value and don't have to second guess it with high-minded thinking about geopolitics. If we don't, you don't have to question it with high-minded thinking of geopolitics. You can just roll with what the price action says here.
Does this put at risk our best laid plans for gold and silver in the short term? I'm thinking about what happened in June, where when we had the action between Israel, the U.S., and Iran, gold initially rallied, but then it did spend the next few weeks. Notice here in the lower panel, Ilya, IVR falling off. So the geopolitics, that deflation of geopolitical pressure may have been an albatross around gold's neck during the summer, right? If you think that, okay, gold is a hedge against geopolitical fervor, and so demand's going to go up and volatility will go up when you're in a geopolitical situation, the other side of that is it should all dissipate. And if it's dissipating, then gold loses some appeal. It took a day or two after that conflict being resolved for the market to really commit to, okay, we can let go of our, we can stop clutching our pearls. We can let go of our hedges.
That's right.
But I got to say, as much as I am constructive on gold and silver, I would think that if we do get any sort of conflict that does arise, hopefully not, but if it does arise, then gold and silver rally initially. Certainly the setup in gold is there. Triangle coming out of a triangle, coming out of a triangle. Wouldn't hold on for too long.
No.
Like if you get your gains, if you hit your profit goal, take some profit. And then look for the opportunity on a pullback again. Like if gold goes up to 4,500 and then in a few weeks we're back at 43 because we're on the other side of a Venezuela issue, wouldn't shock me. And I'd be happy to get long again back at 43.
Yeah, I mean, I think if a Venezuela issue is somehow diffused here and you go away from maybe there's a land invasion to, okay, we're back to a frozen status quo. We got the opposition leader out of the country, so she's safe. And if we can get things to kind of quiet down and we can stop shooting at boats because we can get a headline that lets us look good as we stop doing that, especially now that all these questions about the legality of the shooting at the boats is front and center, maybe we can just put this thing on ice, then you probably get a downswing in gold, just reflexively. I wouldn't look at that as anything that merits a chase, and more like something that is an opportunity to buy more gold. Because the narrative in gold has nothing to do with these things.
No.
The narrative in gold is about deglobalization and the need for a third nonpartisan monetary conduit that isn't the dollar in the event that China, for example, decides to say, or Washington decides to say, there is a rupture in the payment system. If you want to do business with Beijing, you can't use dollars. And if that's a thing that happens, third countries need a vehicle to do business with both the US and China, because the alternative is not a tenable thing. If you're virtually any country, name one. Let's say not North Korea. And you wish to do business with the US and China, and the superpowers are fighting, and there is a risk that that one of them might take their tools and leave the sandbox and go, you know what? I'm not playing anymore. Goodbye. You need a third way. So gold is basically an alternative payments outlet here. And that seems to be the speculative narrative. It's been ignoring the dollar for the most part. It's been ignoring yields for the most part all year. Jitters here and there because, of course, it's not immune to those forces, but that's not really the dominant narrative.
Silver, we got the question today on Futures Power Hour. Is silver going up because central banks are buying? Central banks don't consider silver a monetary reserve. They see it as an industrial metal because of its linkages to the broader business cycle. I suppose a charitable interpretation of silver's price action, of copper's price action on a day like today, is people are just too worried about the state of the global economy, Ilya. Silver's up, copper's up, oil's up. Don't be concerned. Look at the sector performance. Our watch list here, which, hey, 12 days of trading. I'm going to say it again. Last time I say it today, I promise. But today's lesson, today's email for 12 days of trading, one of our email series going out with tastytrade.com/12 days. It's about how you can use things on the platform to become a more efficient trader. And what we like about the platform, the two things that are my favorite, easily when I'm placing the trade, the automated strategies, so I can set the width of my strikes and it can find me. I don't have to worry about manually doing it. So Iron Condor, clicking 4 different things. No, I'll click one thing. But also then the watch list here to look at the different sector ETFs, Ilya, that we like to track. I'm counting of the 25, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So 14 green, 11 red. You know, if I wanted to tell a story that today wasn't a bad day for broader markets, I could point to some of the metals and I could point to the breadth and say, okay, it could have been worse. But sure, my question for you, though, especially on a day like today, because it's an idea that you've kicked out. We've talked about it privately. We've talked about it here on air. Yes. Gold and silver have been trading more like risk assets.
Yes, but okay, uncorrelated to the broader risk environment, in the sense that we now don't have just one speculative narrative, but maybe several.
Okay, so I was going to ask, do you think today's price action in equities in crypto, which was, again, not great, does that challenge your view or inform your view that silver and gold are still risk assets?
No, I don't think so, because I think where we're going here, and I think, again, you've seen, for example, the dollar and stocks have had a very clear relationship this year and are very clearly responding to Fed policy expectations. We can see that with the naked eye. I talk about it on Macro Money almost every day now for a year, showing charts of the 2-year
forward view of Fed policy expectations and its lockstep relationship with both stocks and the dollar at key inflection points. So I think there you very clearly have one speculative narrative. Gold seems to be a very different speculative narrative, a separate speculative narrative. And that's actually much more normal for the way that markets have historically worked. Only really since, let's call it, the 08 financial crisis, and really cemented during COVID, but really the 08 financial crisis, have we had this binary world where assets fall into either a risk-on box or a risk-off box. And when the switch moves from risk-on to risk-off, one set of assets goes this way, the other set of assets goes another way. That's not what's normal historically. And since we're going back to a more historically normal set of circumstances, where there is less globalization, less interdependence, more conflict, less confidence in supranational institutions, in international institutions and norms.
Oh, so back
and
to
in
normal.
fact, the architect of those norms is the one that's breaking them, the United States.
Yeah.
We're in an environment where you're going back to essentially the bad old times, where you could have multiple speculative narratives, and they don't necessarily have to be linked or correlated. From a trading perspective, it's actually kind of a good thing, because you can have an uncorrelated portfolio, more so. And so I don't think this matters at all. I think that the relationship between stocks and gold really only asserts itself when there is some sort of shock that speaks to both, like a crazy Fed thing or a war or something like this. But I think the sort of longer term speculative narratives in these things are at this point disconnected and parallel in the sense that they're occurring at the same time, but they're not necessarily echoing each other.
Someone asked me recently when would I make the judgment that gold and silver are overvalued? Could I make the case that if we were to measure them in the S&P 500 terms or the NASDAQ terms, they're still very undervalued? In fact, the gold to S&P 500 ratio, so if we were to take a look at GC1 divided by ES1, that hit 1.7 back in October of 2011. Ilya, do you know what that ratio is today? 0.6.
Ooh, okay.
The gold to S&P 500 ratio is not even at the highest level that we've seen this year.
Yeah.
So it just, in gold terms, the S&P 500 is expensive, but in silver terms, right? Same kind of story here. It's now 0.01. The high is about 0.038 back in 2011.
I think what, if I can read into what you're saying here, I don't think what you're saying is there has to be a reversion to a mean here necessarily, because these relationships necessarily wax and wane. I think what you're saying is that we've been at much more skewed levels before, and it would not be crazy to go to those levels again because we've seen them, and so it's not as though it would be unheard of.
Exactly, right. That's not to say gold and silver are definitely going to keep rallying. I hope so, given the position I currently have on, and I assume you too. But if we're talking about
I'm long,
right? Like,
certainly hope so.
Relative to the size of just the valuations right now, gold could and silver could continue to gain ground, relatively speaking, versus their equity market counterparts versus so many other things. I think about this in oil too, because today was a really interesting day, Ilya. It now, I believe, it's crossing 100. We're getting close. We're getting close to a point where you could buy 100 barrels of oil with gold. And I think the GLD USO ratio is right there. The point is, though, that some of these commodities are at extremes. Oil is really weak, 5-year closing low yesterday. Silver, obviously, a new all-time high today, but compared to what stocks have done over the past decade, I don't know. Silver's up a whopping 30% over the past month. I don't even know how to wrap my head around that, even as someone who's been long. It's
and again, I mean, these are
outrageous.
very different kind of assets than stocks are. I mean, for one thing, they don't pay any yield at all. And so the higher that interest rates go, ultimately, the less attractive these things will be, unless there is a non-economic reason for them to go higher, like the need for a second way or a third way to do payments between, let's say, increasingly siloed, not fully siloed, because I don't think the US and China want to go fully siloed. We've seen that, I think, fairly clearly at this point. But to the extent that we're going to keep getting flare-ups in this US-China competition, and there's going to be instances where, like we saw in October, there's a kerfuffle. And for a while, things look uncertain. Businesses, central bank reserve managers, they don't like that kind of a thing. And so they're investing in a outlet that is a third payments method, essentially, to move between these things if they come to some sort of rupture, not structurally, but even temporarily, even like we saw in October.
China
Everybody
does
yells.
not want to see what happened to Russia. Russia had all of its funding froze. It's a debate that's going on in the EU right now about whether or not they should use the funds to help Ukraine. And, you know, just China want that to happen with respect to potential Taiwan or anything else it's doing in the region? No, it doesn't.
No,
But you know what, Ilya?
you can't. Yeah.
You know what's I'm going to say now, because it's 4:30 Eastern, overtime's out of time.
Yes.
So we'll be back tomorrow, same time, same place, every Monday through Thursday, right after last call, 4 Eastern, 3 Central. So for Ilya Spivak in San Francisco, I'm still Chris Vecchio in New York for the time being, I think. We'll be back tomorrow. Stick around, though. Tasty Live programming continues next. Ilya's still here. He's here with Macro Money. See you there.
See you there, everybody.
Global markets never sleep. Explore them with Forex on tastytrade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on tastytrade.
tastytrade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
So I see you're taking an interest in open interest. Open interest, open trades. It's right there. Imagine all the trades are in XYZ at the same strike and expiration. Day one, Brittany buys 4 options to open a trade. Dean also opens, but he only buys 2 options. And then, closing bell. Day 2, open interest is 6 because of yesterday's trades. Now, Jessica gets in on XYZ, and she buys 2 options. Day 3, since no one has closed any trades yet, open interest is at 8. Watch this. Brittany closes her trades, Dean closes his, and Jessica keeps her eyes open. On day 4, open interest is now down to 2. That's because Brittany and Dean closed their positions and there are only 2 still left open. That's how open interest is different from volume, and both of them are parts of liquidity, which is something we look for before we enter into any trade. Pretty simple.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with Active Trader Mode. Smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
We take a day to think about U.S. jobs data, and we resolve on stock markets to go lower. Was the data bad? Was it good? Did it change anything? And are we really going to get anything different when we get the next batch of U.S. CPI data, another backfill from the government shutdown rupture in data flow over the next 24 hours? Not to mention all kinds of other event risk on the calendar outside of the U.S. I'm going to go through it all here. This is Macro Money. I'm Ilya Spivak, head of global macro at tastylive. We'll start, of course, with a look at what's going on here with the price action and how the markets responded. We'll take a look at how the digestion took hold after those U.S. jobs numbers and why they did or didn't do what we've now seen. And then, of course, take a look at what comes next, because the next big batch, as we say, of the backfill in data is immediately in front of us. So let's take a look first at the performance picture here. We've got a situation that doesn't look altogether encouraging. Stocks, of course, down here as we see basically a revival of what we saw on Friday. Now, we'll recall what happened last week was a kind of tale of two narratives, or at least a chapter one and a chapter two in a narrative. The first half of last week was spent speculating on what the Fed would do at the last meeting of the year. Then there was the reaction to that Fed meeting on the day of, which was kind of a non-reaction in the sense that markets seesawed quite a bit, but ultimately didn't find conviction. Then spent nearly 2 days, or 41 hours to be precise, almost 2 days, thinking about what it all means. And on Friday, finally resolving that what it means is some sort of risk-off conclusion, that the markets ultimately don't like what's going on, and we get a sell-off. Now, what we end up with today seems to be a sort of a truncated version of the same continuum. So we get the jobs data updated for October and November, partially for October, because, of course, we don't get the unemployment rate because of a lapse in data collection during the government shutdown. But we do get the payrolls data for October. We get the payrolls data for November. We get an unemployment rate that goes up slightly. And we're left to think about what this means for the Fed outlook. And this time, we figure it out within basically less than 24 hours. Because as the markets ultimately digest, today we get the resolution. And clearly, that resolution is, once again, in a risk-off direction. Significant losses for both the S&P and the NASDAQ. Rates ultimately don't go anywhere, which seems to be emblematic of exactly why you get this reaction. After the U.S. jobs data, we ultimately don't get a revision of Fed policy expectations that the markets would want to have seen. Gold edges up a little bit higher. The dollar edges up a little bit higher, but ultimately nothing really runs away. The yen is maybe the most significant mover of the bunch, but that seems to be happening largely in its own range and ahead of a contentious Bank of Japan policy announcement later in the week, which we'll talk about on tomorrow's show. Bitcoin giving us the more familiar relationship it has occupied with overall risk sentiment. And so it is down when stocks are down, albeit not so much as normally might have been expected, because typically Bitcoin exaggerates stock market moves by more than we see today. But nevertheless, the relationship is there. The 2.6% jump in crude oil seems to do more with the situation in Venezuela and the possibility that perhaps there's going to be some sort of U.S. military action there. There's a big speech due in the coming hours from U.S. President Donald Trump, where maybe that's the announcement that's coming. Certainly the markets are speculating accordingly. And so that seems to be, again, disconnected from larger narratives and also doesn't really break meaningful ground from just a test of a major multi-month low for crude oil over the past 24 hours and a kind of stalling there. So what was it in this jobs data that got the markets so dispirited? Well, here was the updated set of figures. We can see we get a rise in the unemployment rate up to 4.6%. We also get a situation right here. These were the numbers that ultimately we had to catch up on. 64K was the increase in jobs in November. 105K was the loss of jobs in October. Now, what does all this boil down into? Well, if we take a look at ultimately how this lands, September's result was revised down to 108,000 from 119. August's result was downgraded from a 4K loss to a 26K loss. If we take all of that together, then what we end up with is an interesting sort of thing. So Fed Chair Powell told us that payrolls numbers are overstating reality by about 60K a month on average. And that it's been running at about 40K headline, which means a loss of about 20K once you make that 60K adjustment. The 4 months that we see here, August, September, October, November, where we've gotten these revised numbers now as of yesterday, the downward revisions in August and September, and then the numbers we see here for October and November, they amount to a monthly average of 10.3 thousand jobs gained. If you adjust that with the Powell rubric of minus 60K, then you end up with about 50K in job losses a month over these 4 months. Okay. That's ostensibly a little bit worse than a 20K average job loss, which is what Powell was talking about. And of course, the rise in the unemployment rate to 4.6%, that's notable in and of itself. That's the highest in 4 years. So on the face of it, this kind of weakness endorses what the Fed's been talking about, which is that they need to be doing things in the realm of rate cuts because the labor market has started to come somewhat unglued, or at least has weakened meaningfully enough that the balance of risks, jobs versus inflation, is now demanding action on jobs and less sort of singular focus on inflation. Okay, that much is here. But does the pacing, does the fact that these are worse than expected numbers, does that change anything about near-term policy expectations? In other words, is it enough that over the 4 months that we get data on here, we end up with a 50K average job loss using the Powell converter here versus a 20K one? Well, look at policy expectations here, and what you see is that the expectations for a cut in January haven't really budged. This is yesterday. This is today. They're up a bit from a week ago, so perhaps there is that. But we're still well over 70% on the expectation that January will see no policy move. And never mind that we'll see it or we won't in that specific month. The important thing is the actual calculus wasn't altered. It's not as though the markets got any more or less certain about what's going to happen on the basis of this data. Moreover, if we look at where we are on expectations for both next year and the year after, they're exactly unchanged from yesterday. We're still looking at 58 basis points next year. That's still a clash with the Fed's expectation that we're only going to get one 25 basis point rate cut next year. None of that has changed as a consequence of these numbers. And perhaps the reason for that is when we look at the average since the beginning of the year, now with these numbers for NFP, the average is a 55K rise. Not for the past 4 months, where it's about a 10K rise, and then adjusted with the Powell rubric, a 50K loss, but rather a 55K rise and then adjusted with the Powell rubric, a fall of only 5K if you include January through July in your calculus. And of course, the Fed must do that because they're looking at a running tally for the year and they're seeing sort of where things are likely to trend, not just at the most immediate 4 months, but in general. And there you get an average, again, after the Powell adjustment, of a 5K job loss per month on average so far this year. Okay, so that's better than the 20K job loss average that Powell was talking about. So do we really have clarity here? And does the Fed really have a window where it can unambiguously say, okay, we need to do more? Not really. And so this doesn't appear to beckon much more action. Now, because the question here seems to be that the markets want action, and that's how we resolved post-Fed on Friday last week. We resolved the same way when people digest these numbers and go, well, these numbers, okay. And so you get the risk-off response that we see here. The next part of this story is the catch-up of inflation data. This is going to be the CPI reports for November because October is basically canceled. There wasn't the data collection at the BLS during the government shutdown to collect October's data, so we're just not going to get it. Instead, we're going to skip straight ahead to November, where the expectation will be that, as with September, we are going to get a 3% year-on-year inflation rate, flat on both core, which excludes food and energy, and headline, which doesn't exclude them. We can see here that, as ever, the main story is services inflation, and this was Powell's central argument, that services inflation is in fact easing, that the main reason inflation is as high as it is goods inflation because of the tariffs, and once those rebase, because the assumption at the Fed is that they are going to be a one-time level adjustment in price levels. If that's the case, you should see them rebase out of year-on-year calculations sometime in the first quarter and through April. which tellingly is how long the Fed's short-term financing facility that they've just announced is expected to run, if you hear Powell tell it. And after that, you should see a clearer picture of what actual underlying inflation as based on services looks like and where you are at that point. And Powell suggests you're very close to target at that point. You're in the low 2s. So with that in mind, what is this data going to do? Well, looking at the Cleveland Fed's running tally of CPI expectations, this is their nowcast, we can see that they're expecting relatively steady going here for both core and headline. So up here is the situation for headline. Down here is core. And we can see here they're looking for basically steady inflation that doesn't really go much of anywhere on both fronts. That seems to generally line up with what we've been seeing in the numbers from ISM. This is their price components from the latest PMI surveys from the Institute for Supply Management. We can see on both service sector and manufacturing prices, we've seen a little bit of a pullback here. That would seem to suggest that we indeed have some sort of a moderating influence on inflation underway. And so if Powell's argument and the Fed's argument holds, and the main issue is the tariffs, and the tariffs have kind of started to peter out in terms of their uplift on the numbers, and over the coming months, they're going to base out of the calculation, then you really haven't changed anything. You once again are back to status quo. Because if these numbers ultimately register in line with expectations or something in the vicinity, the main arguments that the Fed has laid out already remain, and not much else. Meanwhile, again, the markets want more easing. They want 58 basis points in rate cuts next year. The Fed has only put 25 basis points on the board. And so what does it resolve to get a CPI number that's in line with expectations? Not a whole lot. What happens if you don't resolve the disparity? What we saw on Friday and what we see today. That is to say, disappointed selling because the markets want the disparity resolved. We did get a sense from S&P Global data earlier this week that perhaps we're in a situation where at least input inflation is starting to tick up a bit. This is from the S&P Global PMI numbers. And of course, as ever, as with the ISM, as with the S&P Global numbers, there's a center line of 50 here, and that's neutral. Above it is growth. Below it is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. So what this seems to tell us here, note, this is services input prices and services output prices. We get a little bit of an inflationary uplift here for the service sector. Meanwhile, manufacturing continues to look relatively stagnant. That's not surprising. That's the picture from overall PMIs as well, and seems to be a reflection of demand. But to the extent that this is edging higher, maybe there is a story for a slightly higher CPI going forward. But again, if the Fed's perspective is that what you're going to see is a kind of softening in CPI structurally, because inflation is going to come down as tariffs are rebased out of it, well, then there's not much here to look at, even if it foreshadows CPI data that's a little bit higher. Now, if it is a little bit higher, that probably limits the Fed's scope to move. Markets probably wouldn't like it. If it isn't a little bit higher and is broadly in line with expectations, you get something like we saw today, because the markets do want the Fed to get spurred into more dovish positioning than is currently there. If the CPI numbers are somewhat lower than expected, that maybe gives you a little bit more there, but as we just saw with the jobs data, that's perhaps not enough. If it's a weaker number at the margin, and if it's a big miss, well, then you start to get worried about recession, which is another interesting tidbit that we saw in the price action in the response to the jobs data yesterday. And again, got this sense in the immediate response before we sort of landed on overall risk aversion, as we saw it today, that the Russell underperformed and the NASDAQ outperformed, even though everything was a bit weaker in yesterday's session, in the immediate aftermath of the data. And that seemed to give you the sense that, oh, we get slightly worse than expected data, and it's the Russell that takes a hit and the NASDAQ that holds up better, because that tends to be the sort of recessionary configuration between those two. NASDAQ is more resilient because those tech companies are less cyclically sensitive. Russell is less resilient because those small cap companies are more cyclically sensitive. And so there's maybe some shifting around in that sense. If you get a recession risk because of a dramatically odd CPI result. But that's the kind of out there thing that seems unlikely inherently. Possible, of course, but unlikely. We also have policy announcements from the ECB and the Bank of England over the next 24 hours. Probably no major changes there. We can see that the ECB is expected to do absolutely nothing next year. We have a very flat-ish looking policy curve at this point, which has shifted from a much more dovish setting to now a much flatter one. There's almost no change here at all to speak of. We go from maybe something along the lines of 1.93 to something along the lines of 1.96. So we don't even have a single rate hike here, and certainly no cuts. And if we look at the way that the Eurozone economy seems to be performing, again, on the basis of the latest PMI data, it doesn't look like there's really anything to do here to change the baseline. We can see that we somewhat cooled on the latest PMI numbers here, but we're still kind of within the range of outcomes of this improved story since a low in the middle of last year, or going into the fourth quarter of last year. Through the second half is where this latest downdraft in European growth seemed to kind of peter out. And then as we go into this year, the Eurozone has been cautiously rebounding. That rebound has stalled a little here now that we've gotten back to early 2024 types of growth. Soggy, but better than contraction territory, which is where we sat all through here. But nothing really changing about the baseline here to suggest that the ECB is going to do anything but continue to sit on its hands. The Bank of England is expected to issue a rate cut. We can see that implied in the curve right here. But as you look at all of this, again, from about a month ago, the curve is about the same as it has been now. The cut is thoroughly baked into the cake at this point. And when you look at what is going on with the UK growth story, it's, again, somewhat range-bound. And there's nothing terribly controversial here. These PMI numbers this week saw a little bit of a rebound for December after this weakness in November, but not as though we're surging anywhere. We're kind of in the range of what has been relatively normal for UK growth so far this year. So probably no impetus for a change of course at this point. We did get a little bit more on the story from UK inflation data earlier this week. But again, there's really not much that ultimately came out of it. The inflation rate came down slightly from 3.5 to 3.2%. The expectation was that it would be 3.4. So perhaps you support the case for a rate cut there, but you're still well above the BOE target. So you probably don't go anywhere very fast. And in that, you probably don't have that much of a catalyst. Perhaps the euro and the pound get a little bit of a lift because no change here would be a welcome kind of comparative position for those currencies against the dollar, where obviously the markets are pining for more rate cuts, even though they perhaps are getting resistance at the Fed and bemoaning that kind of resistance when the data doesn't suggest that there's something to fix there, like today or Friday. Positioning wise, I'm still long gold. At this point, I'm on both sides of the dollar, so I'm still long the pound and the euro into these policy announcements, but I'm now short a bit of Aussie as a risk-off perspective. Still have the risk-off exposure I've had with put verticals in Bitcoin. This is leftover from a position I'd been nursing for months. This is the last part of it that I've kept on. Still working a little bit. And the risk-off exposure I have via NASDAQ and the S&P, that continues to be there with plenty of duration left. And the baseline is that as the data continues to disappoint hopes for Fed rate cuts, that risk-off view will continue to develop. And that is Macro Money for today. As ever, we are here right after Overtime, a show that I co-host with Chris Vecchio, looking at the Wall Street close and where things might go therefrom. I'm also writing for the News and Insights portion of tastylive.com. I'm commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money is back tomorrow. Happy trading.